financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Different people believe in different things. In cricket, some hail the king.
Good morning and welcome. This is NDTV Profit. My name is Mihika Barve and you're watching All You Need to Know. Over the next half an hour or so, we'll get you everything you need to know to start the day on the right note. Indian markets witness fresh wave of selling in mid-session. Nifty dives below 22,000. India's inclusion in JP Morgan's bond index is on track. The firm says most of the clients are ready to trade. US stock markets post 7 days of straight gains as optimism returns. Other income propels SBI net's profit. The bank leader expects a credit growth of 15 to 16% in FY25. Investors pour money into mutual funds. SIPs rise to over 20,000 crores and small cap funds bounce back. Air India Express crisis ends. Unions agree to call off strike. Management to revoke suspension of employees. Now, there's quite a bit of attention went to the sell-off that we witnessed in equity markets in India yesterday. It was the sharpest decline for the benchmark indices since January, and the Nifty 50 broke and closed below the 22,000 mark. And the selling was across the board, with broader markets indices losing even more ground. But the global picture seems benign. Overnight, equity markets in the US did end higher, with the Dow gaining over 0.8% and the S&P 500 as well as the Nasdaq gaining 0.5 and 0.3% respectively. In the Asia Pacific region, the three early risers were positive last I checked. Now the focus seems to be about the possibility of rate cuts by the Fed this year. Even oil prices are lower than they have been in recent weeks, with Brent hovering around the $84 per barrel mark. Now we have Agam standing by to break down the FNOQs for today. Agam, what is the futures and options data saying about the markets today?
Right, Mika, wasn't a very good day of trade yesterday, and we lost out on a lot of crucial levels. As far as the Nifty is concerned, broke below the mark of 22,000 and sustained below that, which means that a lot of bears become active and a lot of bulls were forced out of their positions. And it was very evident in the kind of traction that we saw, because we actually have now started seeing fresh shorts, even as the open interest rose by as much as 14%. And with the kind of move that we saw, it doesn't look like the weakness is done with just yet. That's not to forget, we could see about a short covering, but at the moment, the sentiment certainly has seemed to have soured substantially. Now, let's move on and talk about the Bank Nifty as well. The Bank Nifty is also seeing another 9% added in open interest towards shorts, even as the underlying comes off by around 1%. Now, in terms of the options market, on expected lines, perhaps, we start to see a significant amount of call writing. Well, as you can see, it's very evident in the call bars, the green bars out here, which signify the calls. And in fact, a significant amount written around the 22,000 call itself. So it's going to be a hard one to take out at the moment. And even if we do see about a short covering, it's going to be important for the Nifty to sustain above 22,000. That's where perhaps you can expect some neutrality coming in. Well, based on that, we continue to see a lot more open interest shifting from 22,500 to now 22,300. So the whole range has shifted downwards. And remember, 22,000 was the lower end of the range that now becomes a midpoint of sorts, and with 21,500 as a little bit of a support in the near term. Of course, we move on and talk about stocks, and a lot of red in the markets yesterday. Muthoot Finance, Asian Paints, of course, reacting to earnings. Shorts in Voltas and Berger Paints as well. Among stocks which are seeing unwinding, again, a lot of long unwinding for Piramal Enterprises, UBL, Naveen Fluorine, as well as Deepak Nitride. So a lot of weakness coming in. The question really is that do we see a bout of short covering, and will that be sold into? These are the many questions that we don't have answers for yet.
Thank you for those cues, Agam. But stay with us. There's also an update coming in from JP Morgan. This is in regard to India's inclusion in the emerging market debt index from June. What's happening in that space?
Right, so we have an update, and this is a Bloomberg story where we understand that India's inclusion in the emerging market debt index is very much on track. From what we understand is that, of course, the announcement was made last September 2023, but for now, JP Morgan is suggesting that they have largely positive feedback, that a lot of participants are ready to trade Indian bonds, and they've estimated that we're likely to see about $20 to $25 billion worth of inflows in India's bond markets on account of that. Of course, the inclusion will happen in June of 2024, which is less than a month away. And that also means, we will see a substantial pickup. Do remember that Indian bonds have already been an outperformer with respect to many of their Asian peers. And of course, in the financial year gone by, we saw inflows worth nearly $14.6 billion, notwithstanding the $1.5 billion worth outflows in this financial year. But, because that's such a short period, I reckon that would not be a large consideration there. Overall, positive traction as far as the bond markets are concerned. And it does seem like India looks ready as we move into that big event in June.
Thank you so much, Agam, for those details. We now shift focus to India's largest lender. Now, the State Bank of India posted a strong March quarter earnings yesterday, beating the street expectations. And now let's bring in our colleague Mimamsa to give us more perspective and what the brokerages are saying about the bank. Mimamsa?
Yeah, so SBI reported a 24% rise in its net profit in Q4 on account of rise in other income and lower provisioning during the quarter. The bottom line figure exceeded analyst estimates primarily because Q4 wage revision impact was significantly lower at rupees 670 crore than what analysts were expecting earlier at 5,400 crore rupees. The net interest margin improved by 8 basis points sequentially to 3.30% in Q4 because the 8% increase in yield on advances outpaced the rise in cost of deposits. On YOY basis, the NIM declined by 30 basis points, which led to a muted NII growth of 3% during the quarter. If we talk about loan growth, SBI reported a 16% rise in advances during the quarter, and deposits grew by 11%, which was lower than the system deposit growth of 13%. Now, this led to domestic loan deposit ratio of 68%, which is the lowest in the industry. Now, according to analysts, higher trading income during the quarter, which I mentioned that the bottom line grew because of rise in other income. Analysts expect higher trading income during the quarter led to a 24% year-on-year rise in overall net operating income, and that trend is expected to continue. Now, this along with low credit cost owing to low slippages and provision reversal offset the margin pressures this year. Analysts expect credit cost of 60 basis points over FY25 and FY26 if slippages remain around 1% and incremental provisions are low. Return on assets for FY24 stood to more than 1% during the year, and most analysts expect that trend to continue as well. On RBI's draft norms on provisioning requirements for project finance, which has been the conversation this entire week with almost all the banks, the bank expects, SBI expects limited impact, and a higher standard provisioning buffers compared to its peers should help amidst any contingencies going forward. SBI's total exposure to project finance stands at around 1.25 lakh crore rupees, and management highlighted in its media briefing call that it will consider repricing these loans. And another interesting point that the SBI has said that they're open to raising equity capital, and analysts expect that happening sometime in the second half of this financial year, which is October to March.
Thank you so much, Mamansa, for those details. We now shift focus to a Nifty 50 company that did post its results yesterday, and that was Bharat Petroleum. Now, net profit was up 24% to the tune of 4,200 crores. However, it did miss estimates. In terms of revenue, it was marginally up 1.6%. On the EBITDA and margin front, it was a beat, though EBITDA was up 48% and margins stood at 7.9 versus 5.39%. The OMC also approved a bonus issue. This is the first one since July 2017, and this is in the ratio of 1:1, and a record date for the same is June 22nd. Now, when you talk about the gross refining margins, FY24 average refining margins did stand lower at 14.14 per barrel versus 20.24 per barrel a year ago. However, it is key to note that crude prices did see a 10% uptick in FY24. When you come to the operational highlights, Q4 refinery throughput, was up 5.1% sequentially. Market sales were up 2% on a quarter-on-quarter basis, and the export sales, however, saw a decline of 18% sequentially. But the magnitude of export sales to their total mix is lower. While the earnings were not received well by the market, I think it's key to point out that when you look at the annual performance, EBITDA is up 4 times, net profit is up 23 times, and in terms of their market sales, that has seen a substantial uptick as well. But now let's shift focus to earnings that are coming in today, and we have Cipla, which tops the list, the pharma giant. And to tell us more, we have Varsha joining us. Varsha.
Well, thanks, Mihika, for that. So, yes, Cipla is expected to report its Q4 FY24 results today, wherein revenue is expected to rise 8.6% year-on-year, supported by acquisition. However, India's sales is expected to decline quarter-on-quarter on seasonal weakness. Now, sales growth in South Africa is expected at 3% year-on-year, which should be aided by the extent of acquisition of Actor Pharma. And US sales is expected to be flat quarter-on-quarter, led by Revlimid, but rise year-on-year led by Revlimid and the other products. Now, Cipla should benefit from easing of price erosion in US market. Now, EBITDA margin is expected to improve at 22%, mainly due to easing of pricing pressure and lower cost. Management had guided almost 23 to 24% of EBITDA margin. Quarter-on-quarter EBITDA margin is expected to decline on account of seasonal weakness, lower Revlimid sales and higher marketing expense. Also, net profit is expected to grow 66% year-on-year, driven by higher other income, absence of one-time expense and lower depreciation. Also, key things that we should watch out for Cipla is site compliance and timeline of new launches, and also update on status of Goa facility. So let's see how results will be for Cipla today.
Thank you so much, Aisha, for those details. We now shift focus to the auto space. Now, 2 auto majors, Tata Motors and Aisha, are set to report their Q4 numbers today, and we have Puneet joining us with a preview. Puneet?
Yeah, thanks for that. So both are expected to report strong numbers, starting with Tata Motors, expected to report a revenue growth of roughly 15% compared to the previous year, coming in at roughly 1,20,000 odd crores. EBITDA is expected to rise to roughly 17,400 crores, while the total margin is expected to have a strong show, coming in at roughly 14.4%, which is up 220 basis points compared to the previous year. PAT is expected to rise a whopping 25%, coming in at roughly 6,900 crores. For Aisha Motors also is expected to be a good quarter, with revenue rising roughly 13%, coming in at roughly 4,226 crores, while expected EBITDA is coming in at roughly 1,139 crores, with overall margins coming in at 26.9%, which is a 200 basis point rise from the previous level. On a PAT basis, the company is expected to report 1,068 crores of profitability, which is an 18% rise from the previous level. All these numbers are as per Bloomberg estimates. If you look at what the brokerages are saying specific to the companies, for Aisha Motors, Axis Securities sees that the revenues will rise due to a 4% year-on-year increase in volumes, while they have said that due to increase in average selling prices, realizations will also be good, as the company has taken price hikes in this particular quarter. EBITDA, although was hurt a little bit by the sale of Hunter, they have said that it will be supported with a higher mix of exports, as well as the higher advertisements that the company has done will be partly offset by the said exports. And finally, for Tata Motors, the JLR sales have been strong, coming at roughly 110,000 for the quarter, while Nomura has seen that PV is the passenger vehicle segment is going to support the growth with a rise of roughly 23%, while commercial vehicles revenue is expected to rise by 5.6%. Back to you.
Thank you so much, Paneet, for those updates. And with that, viewers, it's time for a quick break, but do stay back. We have lots more lined up on the other side.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back to NDTV Profit. You're watching All You Need to Know. We now shift focus to some of the key stocks that you need to watch out today on the back of earnings. Rucha joins us with more details on Mahanagar Gas, Relaxo Footwear and more. Rucha?
Thanks, Mihika. Good morning. I'll start with Intellect Design Arena. The company reported its numbers yesterday while revenue and net profit was below estimates. I'll go on with the numbers. Revenue was down around 1.5%, while margin was down 67 basis points at 22.4%, and net profit was down around 6% to bag 86 crore of profits. Moving on to Mahanagar Gas, the numbers disappointed the street. Revenue was down 2.5%. Margins were at 16% around versus 15.5% in the previous quarter, while the profit was also down by 3%. Key to note here is that the sales volume increased, however, the numbers disappointed the street. Moving on to Relaxo Footwear, revenue was below expectations, while margins and profits were above the street estimates. Moving on to numbers, revenues was down around again 2.5%, while margins were at 16% around, while net profit was up than the street estimates. Talking about the Intellect Design Arena, the miss was attributed to the weakness in cloud and SaaS revenues due to the termination of JEM business.
Thank you so much, Rucha, for those details. We also have some more stocks that you should keep an eye on trade today on the back of other news flow. Kanaka joins us with those details.
Right. So the first stock on my list, Mihika, is Brigade Enterprises, where the company has signed an agreement for a prime land parcel to develop a residential project in Old Madras Road in Bangalore. Now, the gross development value of this project is rupees 660 crore, and the total development potential of the residential project will be around 0.7 million square feet, where the company already has a healthy pipeline of new launches of around 12.6 million square feet, which is spread across Bangalore, Chennai and Hyderabad. Now, this is in line with Brigade's commitment to deliver high quality and sustainable spaces in Bangalore. Second stock on my list is Adani Enterprises, where its Mauritius-based arm, that is Adani Global, has acquired 49% stake in UAE-based Sirius Digitech. Now, Sirius Digitech was incorporated in January in Abu Dhabi, and it is yet to commence its business operations. The cost of acquisition here is US $24,500 in cash, and the aim here is to capitalize on global digital transformation expertise of Sirius combined with Adani's strategic insights to focus on the leading $175 billion opportunity in digitalization of the Indian economy. Third stock on my list is Paytm, where Paytm has refuted media reports on its lending partners invoking loan guarantees, which was due to repayment defaults. Now, Paytm has clarified that its role is just to act as distributor of loans and not to guarantee for any first loss defaults. It has also mentioned that they'll keep working with different banks and NBFCs for lending. Fourth stock on my list is Shyam Metallics, which recorded a stainless steel sales, which was up 33.7% year-on-year in April, and it comprises 1.8% of its revenue. Its realizations were also up by almost 54%. Its aluminum foil sales were up 22% year-on-year, with a decrease in realization by almost 12%, where aluminum foil comprises 5% of its revenue. Additionally, pellet sales were down 62% year-on-year, and realizations too have decreased by 6%, and pellet sales comprise almost 8 to 9% of its revenue. Final stock on my list is Tata Steel, where the company has increased stake in ARM, which is Indian Steel and Wire, to almost 98.6%. This is from 96.5% as of September 2023, and the aggregate transaction amount is of rupees 80 crore. And these funds shall be utilized by Indian Steel and Wire for meeting the expenditure requirement towards its Combi Mill project in Jamshedpur. Back to you.
Thank you so much, Kanika, for those details. We now shift focus to the life insurance industry. Now, new business premium has surged 61% in April. Now, let's bring in Harsh with more perspective on this.
Well, thanks for that. Good morning. We're looking at largely very solid trends industry-wide. I'll talk of individual players in just a bit. Group business has really picked up in a strong fashion in terms of growth, extremely strong, and particularly coming from LIC. LIC's individual business, a tad weaker. The group business, extremely strong, especially the non-single group business has grown extremely well. And that's probably where all of the growth has come in. 3x in terms of premiums versus last year. Also need to note that March of 23, which is the base month for last year on a month-on-month basis. April 23 was the base month, but March 23 growth was extremely strong, and therefore April trends were slightly on the weaker side as well. But nonetheless, very, very strong numbers. Let's pull up first off something like an LIC grew 113% in terms of its premium growth on a year-on-year basis. As I did mention, group non-single is where they've grown at. Where Max Life, SBI Life and Bajaj Alliance are concerned, they grew between the 25 to 28% kind of band on a year-on-year basis. HDFC Life, extremely soft. But on the individual side of things, HDFC Life was extremely strong. It grew at nearly 30% on the individual side of things. But on the group side of things, it seems they've ceded some amount of business, because 12% degrowth versus a year ago. They have spoken about pricing trends being unfavorable and pricing competition being high, and therefore them avoiding that piece of the business, possibly justifying why April is a weak month. But nonetheless, overall, very, very strong trends coming through.
Thank you so much, Harsh, for giving us those details. Now, viewers, before we call it a wrap on this edition of All You Need to Know, former RBI Governor D. Subbarao stressed the need to educate people about freebies while speaking to NDTV's Gauri Dwivedi. Do listen in.
Take the example that you mentioned yourself of RAVDs, of freebies, the handouts. In the selection season, we're seeing that all parties, the BJP, the Congress, both national parties are into that game. All regional parties are into that game, and nobody is asking where is the money for this coming from. And I believe there is a strong case for restraint, because these transfer payments, the freebies as they called in popular jargon, or RAVDs as the Prime Minister called them, are being financed by borrowing. And we know, even at a household level, or for a corporate, or even at the national level for a country, a loan has to repay itself by generating a future income stream. But if you just borrow and give it away to people as a transfer payment, you're not generating a revenue for that loan to be repaid. So all these loans will eventually catch up with you, and that has a cost, not just a fiscal cost, but even a public welfare cost.
This is the reason why I said that, do politicians, are they detached from delivery as against the kind of commitments they make? I mean, and we've already seen that, while right now, of course, is poll season, we've already seen the case of Karnataka, that the kind of subsidies and the kind of promises that were made, and when some of them had to be delivered, it had a terrible impact as far as the state's finances are concerned. The Deputy Chief Minister was on record saying, I don't have money for some of the demands that have been made.
That is true. That is true. But the question is, ultimately in a democracy, it's the people. So why are people not asking, where is the money for this going to come from? Why are politicians able to guarantee all this and get away with it? So ultimately, the people are the best defense against fiscally unsustainable decisions. So people are not asking because of many reasons. First of all, they don't understand the implications of this freebies. Like, if you borrow money and spend it on giving away, there is an opportunity cost. That money could be spent on education, on health, or on rural infrastructure. That cost is not being realized. So I believe there's a strong case for educating people, disseminating all this in a language and at a level they can understand the opportunity cost of this freebies, so that there is some consensus or at least more awareness on this.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future,
as we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Hello and welcome to India Market Open. It's finally an end to a very painful week. 5 straight days of sell-off. We'll tell you what spooked the markets, what you should be doing, should be getting ready for a bounce back later today. But it's been tough. It's been tough if you're a bull on the street. You are extremely nervous this morning.
You know, today, by the way, is Akshaya Tritiya, as when you buy gold and hope for prosperity. So let's hope for a tinge of that today in the markets as well. I'm celebrating it, going all bright, but
I'm not.
but yeah, so hopefully that mood will change.
Yeah, hopefully it does, and maybe that brings about. Actually, that's the chatter on the street as well, and we'll kind of establish that. But just thought at the start, I mean, we were just having this editorial discussion outside viewers about what we should do about this whole sell-off that's happened. So in some sense, what all of us are gathering from our own sources, pulling all of that together, what has spooked our markets in the last few days? Now, there is a chatter, and fairly informed chatter, of a large US-based fund selling its India positions. That's essentially the big one. It's a large position apparently. Informed voices do suggest that the specific fund selling is almost over to the tune of 70 to 80%. There could be some more pending, maybe in the first 1.5, 2 hours of the session today. But post that kind of selling, which has been incessant over yesterday and day before yesterday, because the numbers have been close to 6,000 crores on each of those days, 7,000 crores a piece. So that kind of selling is almost coming to an end. And you know, maybe the lower voter turnout is adding to the anxiety. But from what I hear from dealing rooms, that is not the reason why that may have spooked, because the orders that they've gotten for some of the selling is largely on the back of the positions that this fund had, which it is out in the market. Everybody knows what those positions are. Long only funds are willing to buy those positions at lower levels. So that kind of buying has also happened, which is why probably you see 6,500 crores of selling from FIs, but an almost equal kind of buying that has happened on the DI front as well. So some of those positions are getting bought too, as we all spoke outside. But the larger point being that there is a lot of other elements that people throw in the mix that this could also possibly be the reason. But very informed voices say, tell us, all of us together, that this is probably the nature why the market got spooked.
We should actually pull up those DIFI figures since we're talking about this. And since the 1st of May, over 10,000 crore rupees of FII outflows have taken place. DIIs have bought about 16,000 crores in that time. This is just figures from yesterday. And, you know, as Neeraj was saying, it's a bit of a counterbalance, but of course, nearly 7,000 crores from FIIs.
The last time this happened was on the 12th of April. So it's the biggest selling we've seen in nearly a month.
Yeah, so maybe it is this one fund. I think voter turnout is part of it, but just to add, the 4th phase is on Monday. It's also a crucial one, Andhra, Telangana, the big pockets over there. And that voter turnout will also be seen very closely to see if there's a consistent trend. 3 phases, low voter turnout. Does that continue? Remember, it's just very hot season. These states get very hot, 40, 42, 43 degrees. So you're really asking a lot from voters to, you know, risk heat strokes to go and vote and exercise their right.
And weekend voting. I know a lot of people who are not going to be here in Mumbai and going on a holiday.
That's the 5th phase on the 20th. Yeah. Guys, don't do that. Our appeal to all of our viewers, don't do that. Stay back. There's a special session on Saturday also. So the NSE
well, in
is
some sense, if that helps.
Also, just very quickly, when we compare those numbers to FI selling that took place yesterday, the last time this happened was on the 12th of April, which is when you had India renegotiating or working out the Mauritian tax treaty. So I don't know, while this is a case in point where it's a specific hedge fund, I think Cameron did quote that there could be some selling coming from Luxembourg too. We'll understand a little bit more on that. But talking about FIs, their net short positions are up 50% alone yesterday. So there is enormous amount of nervousness on the street, even outside a single hedge fund dumping India at this stage.
Okay, so FIIs are nervous, DIs are continuing to buy. The whole election question on it, till it's not done and dusted, will continue to be a talking point. But just before we get to that conversation, we're talking to Cameron Brandt today in just a few minutes from now. Let me take you through very quickly what the top global headlines were. And this is the consistent sort of pattern that we've been seeing. Domestic cues negative, global cues positive, specifically US cues. So 7th straight day of wins on Wall Street. Dow again over 300 points up. And what has been the trigger this time is the jobless data that has come in much better than what was expected. So jobless claims rose to 22,000, by 22,000 in the first week of May, is at the highest level since August. Why is the street celebrating higher jobless claims? Because that means the economy is not revving at that rate, gives the Fed enough reason to cut. So that hope of 2 rate cuts before the end of this calendar year are back on the table. That could change now from week to week. So that was key. Bonds have also been fairly soft because of all of these factors. The 10-year at 4.59. The Bank of England didn't do anything with rates, but their statements did indicate that they're ready to start cutting rates going ahead. So all of these factors have been positive. Crude prices also have been slightly inching up because positive Chinese trade data. No end to the Middle East crisis. Let's pull up Asia very quickly to see how Asia is faring. And Japanese household spending is what has at least bolstered the Nikkei. So you're seeing that about 1% up. A mixed cues on Asia overall. Implied open at our end, at least looking to a bit of a positive start. So let's hope at least for the first few minutes of a positive trade.
Yeah. Well, the implied Nifty this morning is looking okay, but it's looked okay last few days and things have just suddenly changed from the word get-go when the markets open up for trade. We have with us Cameron Brand, Director of Research of EPFR, joining in. Cameron, good morning and good evening, rather. You've tracked this data for decades together. You've been through multiple election setups in India. You know what this data looks like at the back of your hand. And hence, we want to understand from you over the last couple of weeks, or maybe after seeing a phenomenal 6 to 8 months in terms of flows for India, do you now feel like flows that are coming into India dedicated funds are slowing down or have slowed down?
The short answer is no. I have been expecting them to get a bit slower, and there was definitely a dip in the February March time period, but they've picked right back up again. I think we're looking at over 600 million into dedicated India funds this week, which is certainly well above the historic average and more in keeping with what we were seeing coming into this year.
So it's a fair assumption for me to make that the last 2 weeks have been phenomenal in terms of inflows into India?
Certainly, what I'm talking about is flows into dedicated India funds, which is sort of blunt proxy for investor sentiment towards India. It's certainly been running at stronger levels than I saw in the 2019 and 2014 elections. But in both of those cases, it was generally positive, just not to the degree I've been seeing over the past, over the past year.
Cameron, and this is ETFs or non-ETFs, because I do know outside India, it is the active fund managers that draw some more attention than passive funds. Where is the trend right now? Is it ETF, non-ETF? Because those are also a lot more expensive.
Yeah, it's a mixture of both. ETFs are certainly expanding their footprint in terms of India flows, much as they're doing in nearly every asset class. And we're seeing active managers, certainly the diversified funds, being a bit more cautious towards India than the allocations that the passive funds are buying to. But it's a hot market on both sides of the active-passive divide at the moment. The one headwind from a fund perspective is that diversified global emerging markets and Asia regional funds have seen pretty relentless outflows, and every time that happens, they have to sell whatever weight they have towards India, which has been rising, to meet those redemptions.
Okay. Cameron, hi, Tamanna here. So just to put into perspective, because we're sitting here wondering why we're seeing these kind of FII outflows. And one of the theories is perhaps investors, global investors, are waiting for the election results, which will come in on June 4th in India, to revisit their India allocations. From what you're saying, it seems as if the outflows from India are incidental to other global allocations and not necessarily an India story. Is that the right way to look at it?
It is. When investors look purely at the India story, sentiment is still very strong. But a lot of the flows, certainly from a fund perspective, are tied to sort of relative allocations of diversified funds. And those are both choppier in terms of the flows, and sentiment towards India on the part of the managers isn't as bullish as we're seeing with individual investors.
Is this also in some part, how would you relate this to China now improving? The latest Chinese data, Chinese trade data points one more indicator to a resurgent China. Do you see that impacting India flows in the medium to long term?
No, certainly not right now. The narrative for China, having been relentlessly positive for so long, has flipped, and by that I mean that investors are now treating good news out of China with a great deal of skepticism. So we've actually seen pretty heavy outflows from dedicated China funds this week. I think there's quite a bit of pent-up demand to sell. So when there's an improvement in China, we've tended to see people cashing out. I think in the long run, obviously, the India-China comparison is important, but I think in some ways India is going to get a pass for the remainder of the year, because the focus here is going to be very much on the presidential election and how whoever wins it in November approaches the US-Chinese relationship.
Cameron, let's talk about the debt markets, because while equity markets, like you indicated, have been very hot for FIs, India's inclusion in the JPM index has drawn considerable amount of funds in the last few months into Indian paper. Indian debt versus Indian equity, where do you see the momentum continuing over the next couple of months?
I think it will be more evident on the equity side, and that's largely just because there's a longer track record. People are more used to buying into Indian equity markets, know where to find the information that is useful to making those decisions. So I think there'll be something of a learning curve for Indian fixed income markets and the funds that provide access to those. So I'm not expecting a real takeoff, and certainly haven't seen it in a fund flow perspective. But I do think that India's story is long-term enough that we'll start to see a steady increase in both flows to dedicated funds and allocations in the diversified funds.
Okay, Cameron, we'll leave it at that. Thank you so much for taking the time out and being with us and giving us your thoughts. Really appreciate your time this morning. That's Cameron Brandt, and we'll continue. Great having you. Thank you. And we'll, of course, continue this conversation on the bond piece with another guest at about 8:20, because that's the other big thing. But let's focus for the next 7-8 minutes on stocks and the trade setup. Very quickly, the trade setup. I mean, there's a large two-day FI selling, which, well, as per market chatter, as we said, could be nearing a close. The markets are not in the extreme fear zone as well, but dealing rooms are talking of a bottom soon. So let's wait and watch if we form that bottom today. Maybe those references to Akshaya Tritiya, who knows? Divine intervention could help as well. A lot of stocks have fallen in this period from May 2. If you just look at the markets, they've come off, but just look at the kind of falls that have come into some of these high beta names on the back of news or otherwise. Sonata, Manappuram, JSW, Sterlite Tech. The falls have been egregious from a 5-day perspective, and you never know if a bottom is formed. Some names could actually see a bit of a comeback as well. And just purely from a sector perspective, before we get to stocks, I mean, auto stocks, bullish trends yesterday in a falling market, ahead of key results today because there is Tata Motors, there is Eicher and a few others coming out numbers post-market hours today. So watch out for autos. HSBC continues to like the two-wheeler space. They say that the 10-year CAGR still less than 2% and therefore merit to be invested in two-wheeler names as well. Let's wait and watch.
We did see TVS and Hero have a pretty good run in yesterday's day of trade. I'm going to add another quick one to that list is Jupiter Wagon. Made a record high on a day like yesterday. High beta name, but good numbers. The stock actually did a pretty good somersault in trade, but finally went home with a gain of 3% off the day's high point, but relative outperform in terms of what we saw. Also, a quick check on the other reactions that we are expecting in today's day of trade. You've had BPCL. It's been a little difficult for these OMCs in the last couple of months, to say the least, with very, in fact, they've been dealing with higher crude prices. Keeping that as the backdrop, operationally, the numbers haven't looked too bad, even though GRMs have seen a decline, which was largely on expected lines. Remember, 15th of March also saw a price cut, so limited impact on earnings, but nevertheless, that was visible too. In terms of what we had, revenues came in about 1.5% higher. EBITDA came in about 47% higher, so it's a big jump coming in on operational performance for BPCL. Net profit was also up 24%. What was not up was GRMs, and that was very obviously under pressure. The BPCL has also done a bonus this year in the ratio 1:1. The record date for that was it's been set for 22nd of June. The stock was beaten out of color in yesterday's trade, was down 5%. You also had higher crude prices. That was the overwhelming sentiment for these OMCs. But apart from that, keeping that in mind, they've operationally actually not done too badly in context of everything that's going on for the sector. Well, apart from that, Abbott India, their revenues were up 7%, so a good number in terms of what the top line looked like. EBITDA also came in 18% higher, 330 crores. Margins have seen an improvement, and I think that's what the markets would like to see. The stock, like we can see, was lower, but most counters, remember, were lower in yesterday's day of trade. Net profit was up 25% to come in at 287 crores. They've also recommended a final dividend. So Abbott is one you want to watch out for. Good earnings, good margins, top line as well, doing a beat in terms of what the expectation was. Mahanagar Gas, not such a good set of numbers. Revenues were up, but they've taken a hit on margins. Their profits were also down, and EBITDA was down. So while on the top line, the number looks pretty decent and healthy, it's everything else below that that is a little disappointing. You will see the stock come under some pressure. Remember, we've not had too many brokerage reports commenting on this just yet, but it's only a matter of a few minutes or in the next couple of hours where this will start flowing in, and you will see what they made of this earnings and the reaction of that on the stock. The count, of course, was low by 3.5%. Some more selling cannot be ruled out.
Just wanted to, of course, there are several stocks to talk about, but just wanted to put the focus on Tata Motors for a second, because numbers are expected today. I think of the entire deluge and bloodbath yesterday, auto stocks were relatively unscathed. Even Tata Motors was up about 2%. Apart from the numbers coming in, this news report this morning that they're going to spin off their vehicle financing unit and merge it with Tata Capital might see some buoyancy there. So look out for a Tata Motors. Look out for a Zomato, just simply because, we've been talking about Akshay Tritiya, etc. A Blinkit, an Instamart, a Zepto are all delivering even gold coins within 10 minutes today. So the kind of spends that you might see coming there will go up because you're just making it more convenient. I would watch out for that. Relaxo Footwear is the one in terms of numbers that I would highlight. Poor numbers overall. Revenues were down at 2.3% at 747 crores. Net profits are down at 3% as well, so the top and bottom line not looking great. Margins okay, slight uptick to 16.1% versus 15.4%. This is all year on year. And EBITDA up marginally at 2.1%. So you're going to see a spot of weakness there. A couple of other news related ones, but I'll circle back to them.
Okay, just very quickly, the top three on my radar, Intellect Design Arena, also because lower than Bloomberg estimates, and Avendus Spark has given a sell call as well. Revenues were down 3.27% at 614, but below estimates of 631. EBIT margin, though largely in line or maybe marginally higher, but the PAT number much lower than the Bloomberg estimate number of 90.77 crores. The number was 73 and therefore very likely that Intellect Design, also because brokerages have not sounded too constructive, might show a bit of a negative reaction today. VST Tillers most certainly should show a negative reaction today. Revenues were down 15%, margins down 234 basis points. On that base, that's a large number, and PAT down 13% at 34 crores, so that one could be weak today. And Shyam Metallics could be an interesting one because stainless steel sales and aluminum foil sales for April are up very, very strongly for Shyam. What is down is pellet sales, but that's just about 9% of revenue. So pellet sales are down 62%, but that's just 9% of revenue. And therefore, Shyam could, it's sucked a little bit in recent times, could actually see a bit of a positive move today on the back of the April data. So watch out for this one.
Just a couple of more stocks to watch out for. Brigade, I would say they've signed an agreement for a prime land parcel for a residential project in Bengaluru. I mean, these news pieces just keep coming. I don't know how much of Bangalore is left to develop, but there you have. Lots apparently. Lots apparently. Development, now they'll go into redevelopment perhaps, like Bombay is the redevelopment story. 660 crores is the estimated gross development value. 197, which has refuted reports. Again, there were news reports of lending partners invoking loan guarantees. That stock was up 5% yesterday, even on a report that perhaps they're going into ride hailing. I don't know, they've not said anything specific on that, but you have to fix one business before you try and get into another very crowded space. So they've said that we act as a distributor of loans and we don't provide a first loss default guarantee. Essentially, if you were taking a loan through their portal, did they have to be the guarantor if whoever was the borrower didn't pay is the question. But that stock was up 5% after several days of drubbing, one to watch. And just one more perhaps is a Vijay Diagnostics. There's a Nuvama note out which has set a target price of 910 rupees, which is about 25% upside. They're impressed with their Q4 numbers, robust volume growth, impressive EBITDA margins, and expansion will pay off. They're poised to gain in Pune and Kolkata. So where it's quite dismal otherwise, already an 8% run up, but perhaps more steam left.
Yeah. There's one quick one I want to mention, only because it was such a popular one that we had, and that's Gopal Snacks. They reported numbers which were not very impressive actually, so this may see some pressure. Again, the last time they did the reporting, the stock had lower circuit of 5%, cannot be ruled out this morning in trade. They've seen profits decline about 4% to 26 crores, while revenues have seen an increase, but in terms of margins and profitability, there's been a sheer decline in terms of earnings. So this was, this had a little bit of a retail touch where a lot of the common man was very excited about Gopal Snacks, but yeah, numbers not reflecting in that.
And Asian Paints is the other one, wherein the numbers, post numbers, the stock was down 4% yesterday. Now, post that, most brokerages are not too convinced even now. So Jefferies, for example, has a conviction underperform on Asian Paints with a target price of 2,200 versus 2,500 earlier. They say Q4 is an all-round miss as revenues declined for the first time in recent past. The volume grew in double digits, which is a positive, but the margin decline as the advertising and promotional spends and staff costs ramp up to defend mindshare and improve service levels. So that's a concern there, and they say the concern is also on the rise in competition, which creates uncertainty. So do watch out for Asian Paints. If they maybe, just maybe, there is more downside. Morgan Stanley too has an underperform rating on this one. And some other brokerage calls include M&M Financial, which has been cut to a sell at Goldman. The price target is 233. Sula Vineyards, which has been cut to reduce at CLSA, price target 515. And Intellect Design, as I said, cut to a sell at Avendus Spark, price target of 830. So watch out for each of these. Okay, let's speak about this reiteration, so to say, about the JP Morgan bond index and what it could mean, because debt markets too, as Samina has been saying consistently, have had a bit of inflows in fits and starts, if you will, or a bit of an ebbing and flowing. Ajay Manglunia, who is Managing Director and Head of Investment Grade Group at JM Financial, joins us right now with his perspective on how should one read into this reiteration about the JP Morgan bond index inclusion being on track and what it could mean for debt flows, amongst other things. Ajay, great having you. Good morning. Thanks so much for joining. And I hope I got your second name pronunciation correctly, Ajay. But I did. Okay, thank you. So, Ajay, how do you read into what's happening in the debt markets currently on the flows side and the fact that there's just so much of to and fro when it comes to this JP Morgan bond index inclusion as well? The timing, that is.
Yeah, I mean, the fact is that the market was awaiting since a very long time for such inclusions. And you might have seen that since last 4-5 years, the India debt market was pretty ignored by foreign investors. Maybe for a couple of reasons, they might be looking at some control on the fiscal and some bit of stability on the government side. And when all of those things are there in place, JP Morgan was quick to kind of get this opportunity and kind of include it. Earlier, they were struggling about getting some tax concessions and all of those things, which government was very reluctant, and they made it very clear that we are not here to invite foreign capital in the debt on tax incentives. And without tax incentives, I think foreign investors are looking at that this is a wonderful opportunity. So there may not be too much of a spread as of now, but in the real term, with a 4% kind of inflation anchoring aspiration, and which is coming true, 7.5% kind of yields are definitely for the macros like India and all of those are attractive. So I think JP Morgan, who has about $200+ billion worth of investments in this particular indices, who are the investors taking this indices, the weightage is about 10%. So we can estimate about, say, $20 to $25 billion worth of inflows likely to be there in India. And this will not only help kind of anchoring the yields and getting them, pushing them down, in nutshell, making government of India to borrow cheaper in the coming time. This is just an initiation for one indices tracking entity to include. I think there are others, including Bloomberg and others evaluating. If all of those happens, definitely the yields in the coming years, we can see a lot of improvement.
Ajay, good point. Over the medium to long term, this is definitely India positive, even for the private credit market, which has seen a pretty sharp uptick. So good for India Inc. as well. But let's talk the next couple of months. I know that a lot of people were sitting on duration funds, hoping that a rate cut would come away. Now, with the derailed rate cut in the US, there is no way India can go out and cut rates before the US does so. While these flows are significant and they've moved the yield curve to some extent, do you think that over the next couple of months, do you think post June 28th or to the run up to June 28th, flows will increase and that will impact yields in the near term? I ask you this because the last 1 month has actually seen outflows out of the Indian bond markets.
So, Samira, if we see carefully after the news of global bond indices inclusion, in the FAR bonds where foreign investors can assess and freely buy these papers, we have seen an inflow of $8 billion. There's been a little bit of outflow with kind of yields moving up in the US market. But if you look at Indian market, the yields have not moved. Rather, they've been kind of after moving in directionally with the US market have tapered down back. So I would say 710, 720 is kind of a range since a long time. And I don't see yields moving drastically beyond 720, 725 levels. So they are more or less likely to get anchored here. Apart from the rate cut, the larger story is basically in the coming times, if the inflows and the demand for Indian papers are likely to be significant. We have anyway decoupled in terms of yield trajectory from US or the western part of the world. And you might have seen with even 70, 80 basis points yield movements in western part of the world, Indian market has not been moving in the same proportionate, but directionally, yes, it's 1-2 basis points or maximum a couple of points, then that's it. The major point which we need to see that private credit will also get influenced, because the thing is that when the global investors are taking the yields in the sovereign down, the spreads on the private credit and corporate bond will become attractive. And the next attention, once the global investors looking at GSEC, the next attention they can probably put it on the credit-worthy a couple of infra and sovereign and AAA and quasi-sovereign papers. So we see this flow not getting restricted only for the sovereign for the time being, but this will trickle down to as low as AA rated credits, and we have seen that for 2017-18.
Right. So Ajay, just in terms of advice, if you had invested in debt mutual funds, you know, maybe mid last year, early last year, end of last year as well, I wouldn't rule that out. You would be expecting that you'd make an M2M gain. Of course, one way is to hold it for 3 years for tax purposes, which is to maturity. Alternatively, a lot of traders and investors got in hoping that the M2M would yield enough for them to justify solid returns. I mean, there was also talk about double-digit returns on those debt funds.
I'll explain you.
At this stage, so no, I understand, but at this stage, what should those investors do? Should they exit these positions? Because this is not going to happen in the next 1 year from the look of it. And second, for a fresh investor looking to enter the debt mutual fund space in order to create and gain that alpha from the debt funds, is that recommended? Are you telling your clients to go out and, you know, invest into debt funds at this stage, keeping everything else in mind?
So debt funds obviously can't give the equity-like returns for sure, but they give a lot of stability. Equity markets may be a little more volatile, but in the debt side, the markets are a little less volatile, so we can't compare both. But my sense is that if somebody invests today and he takes the duration, and that depends on the respective fund manager. So investors would kind of have some patience and put in money in the funds which have a larger duration. So rate cut might not be a only requirement for markets to move in terms of yields down and have a double-digit returns. What I say that if somebody is getting a 7.5% kind of a carry on its investment, and the yields move down over the next 2 years, I'm not talking about a year, but if yields move down by say a couple of basis points, maybe even 50 basis points from here, in the duration fund, you can easily make 3-4% extra capital gain, and that will translate to double-digit kind of a return. So expectations of having a double-digit kind of return over a slightly medium to longer tenor, longer period, is absolutely possible, and that's visible.
Okay, so that's great to hear that view still remains. A 50 bips rate cut or movement on the yield curve could generate 3 to 4% alpha on your paper. So if you're at 7.5, you add another 4% to that, you're almost close to 11%, which justifies investing into debt markets. But remember, debt usually is an instrument which is a safe instrument, and that's the stability part of the portfolio. It's equity that's supposed to do the sprinting for you in that sense. But thank you, Ajay. It's always good to get perspective on how the dynamics between equity and debt work out and impact an investor's portfolio. Worth noting is that our inclusion will also lower the private credit costs. So you've also seen a big jump, over 50% in FY23 itself, where private credit was being raised by Indian corporates. So if cost of funding does come down, it is going to have a positive impact on the earnings of India Inc., which would then, of course, also impact the stock market performance. So lots of interconnected pieces there. We'll take a break. We'll come back. Whether or not the selling is going to abate is what we'd like to find out and understand from the F&O picture. So stay tuned for more on the other side.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively. meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a
Welcome back. This is India Market Open. Well, we are in a treacherous territory. We are looking at India Volatility Index spike even as benchmark indices are now starting to look substantially weak. Let's take a look at how things are panning out as far as, futures and options are concerned. At the moment, when it comes to the benchmark, the Nifty has lost out on the psychological 22,000 mark. We are looking at a whopping 14% increase in the Nifty futures open interest towards what it does look like fresh shorts into the system at the moment. And the Bank Nifty, once again, losing out on 48,000. In fact, it closed below 47,500, declining by around 1%, adding 9% in the futures open interest towards fresh shorts there as well. What about the options market? Perhaps on expected lines, a lot of the activity was concentrated on selling calls yesterday. As you can see on the green bars, there was largely and essentially a call writing and not as much comparative put writing coming through. When that comes up with the overall open interest distribution picture, from a few days ago of 23,000 call as the one with the maximum open interest, it has come off gradually to 22,800, 22,500, and now we have max OI in 22,500, but a considerable amount and nearly equal amount of writing around the 22,300 mark, which also means that there could be a substantial amount of resistance around there. 22,000, I reckon, will be a little bit of a pivot now at the moment. And of course, on the lower end, all the put writing activity now starts to shift towards 21,500. So the whole range has shifted downwards over the course of the last 3 days. Well, let's talk about stocks then. And once again, a lot of them essentially reacting to earnings. Muthoot Finance down along with Asian Paints, looking at shorts. Of course, Voltas and Berger Paints, not very different. In terms of stocks which saw unwinding, again, a lot of long unwinding coming through. So Piramal Enterprises, UBL, Naveen Fluorine, along with Deepak Nitrite, all of them in focus on account of the same. But let's get in an expert opinion and see how things are at the moment, what their view is of the markets and what they're doing. We have Aditya Arora of Analytic Research who's joining us on the show. Aditya, morning. Thank you so much for joining in. Your view on the Nifty and the Bank Nifty, what are you doing with these indices?
Very good morning, Agam, and warm wishes of Akshay Tritiya to everyone. Hope Mahalakshmi blesses with a good upside in the market. So the other side of the story is that markets have sold off significantly in last many days, but the other side of the story is that markets are also oversold. So and the global context is good. Global markets are doing well. So I think markets don't look so bad. One shouldn't short the market at these levels, but look for buying opportunity at current levels. or little bit downside, keeping one standard deviation as some margin of safety. So currently Nifty is trading at 21,957 and in futures about 22,050. So one should keep margin of about 200 points and accumulate the index. And I think market could swing on the upside with target of about 300 to 500 points would be the target. So this isn't a breakout trade, but mean reversion trade. So possibly it couldn't it may not be a V-shaped recovery, but it could be a U-shaped recovery with little bit of consolidation and then upside. So my bias is neutral to bullish on the market. I would look to accumulate markets on the dips. So I would be a buyer.
Accumulate when it comes to the key benchmarks at the moment. Aditya does feel that at least the key benchmarks are oversold and there could potentially be some amount of mean reversion in the near term. But Aditya, let's talk about stocks then, and I believe you have two metal counters on the radar today.
Correct. I think one thing really stands out is commodity trade. Whatsoever happens in the market, the international commodity market is really buzzing. Yesterday, copper was up about 1%, silver was plus 3%, gold was plus 1%. So I think metal trade really looks good, and as a high sensitive sector, it swings on both the sides with high beta moves. So right now we have reached the lower band of the range. So at this point, I think it's a buy. So I have a strategy in Hindalco. So Hindalco's 620 call could be bought. Current market price is 21.95. 660 call could be sold. Current market price is 7.95. Maximum loss is 19,600. Maximum profit is 36,400. And second one is Jindal Steel. 930 call could be bought at 34. 970 call could be sold at 18.55. Maximum loss potential is 9656. Maximum profit potential is 15,344. One disclaimer: I've recommended metal stocks to my clients, so one must do a cross check and do their own analysis before entering a trade. And lastly, I'm very bullish on the metal sector. I think this space can really outperform the market. If you're looking to be bull at this point, then one must keep metal stocks on radar.
Right, so two very simple, straightforward, debit spreads when it comes to these two metal counters. Aditya, thank you for joining us and taking us through your views on the markets and also helping us with a couple of trading ideas. We'll continue to keep a track on that one, certainly when it comes to the metal space. With that, it's over to you, Neeraj.
Thanks a lot for that, Agam. So that's the election trade plus some option strategies for you to ponder over. The other strategy to ponder over is what to do with the PSU banks, because while the SBI numbers had a bit of a one-off and that may have disappointed some quarters of the street a little bit, it's important to get a perspective from somebody who tracks the space very closely. Shantanu Chakrabarti, India analyst, BFSI at BNP Paribas, joins in. SBI and maybe to an extent PNB is just the peg, but let's just try and figure out what he thinks about what's happening in that space. Shantanu, great having you. Thanks for taking the time out. This is Neeraj here, good morning, and I'll start off with the most obvious question, which is what did you make of SBI numbers? I don't know if you have coverage on PNB, but those numbers also came out yesterday. So PSU banks at large, are they holding out well, or is there an issue out there?
Thanks for having me, Neeraj. Yes, the SBI numbers had a one-off. And both at the other income level as well as a slightly lower number on operating costs, which has flattered the overall numbers a little bit. But forget all that. Just keep in mind that even at NII level, there was a small beat. So one very interesting thing which has come through for quite a few PSU banks and for a few large private banks as well this quarter is that, Neeraj, the cost of funds seem to have kind of either peaked or peaking in a quarter for a lot of banks. So which means that, say, for example, we saw in the case of Axis, we also saw in the case of SBI that there was sequentially a small but an increase in margins, which has been one of the key worries going forward since the credit cycle and everything else seems to be in control for now. So overall, I would still say these are strong numbers for SBI. The headlines which came out during the day might have flattered those numbers a little bit more than what they were once you went into the internals. But nevertheless, the internals remain quite impressive. And it's not as if stock has still run away to some absurd valuations. So we see no worries out there. SBI overall, in our picks, remains the fourth placed after HDFC, ICICI, and Axis. And overall, for the PSU space, all I'll say, Neeraj, is that yes, you're right. We don't have coverage on PNB. But one thing that investors would do well to keep in mind is to look at the relative valuations within the space. It would have to be a very, courageous person who would argue that there's another PSU bank out there with a stronger business model than SBI. And yet, when I look at valuations, SBI on my own numbers, and let's say what the consensus numbers are for the rest of the PSU banks, the valuation differences have really come close together. This is especially true once you build in the subsidiary valuation of SBI. So, there's a clear message in those relative valuation numbers for investors at large.
The question therefore would be that, okay, some people are arguing that some of the PSU banks, and we know PSU banks have done very well since the COVID lows, right? The question is, aside of the top tier private banks, if people are invested in the second tier private banks, are some PSU banks or maybe just SBI a better bet for people who don't have PSU banking exposure? Should they move out of the second tier private banks and log into a PSU bank like SBI and others, or only SBI, or no, not really, not do that trade?
Right. So, I mean, one of our concerns with the overall mid-sized private bank, most small finance bank cases, and the only exception we have really had to this has been AU Bank, it has been one of slight concerns on the business model. So one thing that seems to be playing out very clearly is that the business models of a lot of small banks like CUBK, which we cover, seems to be under pressure on both the asset side and the liability side. The cases where the liability was the primary moat, it seems to be shallowing out over time. And the asset differentiation of the banks, for example, CUBK itself, doesn't seem to be as strong as that of an NDFC, that it could defend itself through a lower cost player's attack. So you see, a lot of migration of customers from these, mid-sized kind of banks towards the larger private banks, and in some cases even to larger PSUs. So, I mean, the business model in itself, the profit model, is between a rock and a hard place, in my opinion. So, while large private banks are our primary play, and that's where we think the compounding story is the strongest, and it comes to you today at a valuation which is below median, with fundamentals which are probably the best in 2 decades. There's also, for an investor who's looking for a little bit more beta, they could look at either, the PSU names, including SBI, which is a fourth in our pecking order, so fairly high. And, the compounding stories could be added either through larger private banks or through, say, some insurance names. For example, we really like SBI Life. We think that barbell approach is a little better than trying to find beta in some of the mid-cap banking names.
Shantanu, we take your point where you said you would rather play the sector through private sector banks. A few months ago, you were very clear that your pick or your preferred bet here was ICICI Bank over HDFC Bank. Of course, post what you've seen on the earnings as well, the reaction on ICICI Bank has been much better again. If I had to ask you right now, and I feel like now could be a good time to accumulate those banks, post the earnings, a little bit of selling that's happened as well, would ICICI Bank still be your top pick, or have you changed your bias?
Right. So, Samina, just to clarify something out there, it's not that we had ICICI Bank as the top pick. I wish I had, because, in hindsight, it would appear smarter sitting in front of you today. But HDFC Bank was our top pick. What we had said about ICICI, which was our second pick, is that the compounding that you have available on ICICI is in some sense the most drama-free as far as the Indian banking sector is concerned. It has taken that old positioning that HDFC used to have, a very predictable and quite rewarding compounding. right? So, that's how we see ICICI positioned. And on ICICI, one thing we have to make very clear. ICICI has the second lowest cost of funds within the industry, surpassed only by Kotak. And once you load operating costs onto the cost of funds, you basically realize that ICICI is working with the cheapest raw material in the sector. So, the luxury of working with cheapest raw material in large size banking, when you have distribution scale, means that you don't have to find ways to make money. Competitors have to find ways to catch up with you. And that luxury of having to do less is invaluable in a business where you actually put out money and tend to make money off the last few EMIs. The strength of this, maintaining this hygiene over a longer period of time, it cannot be overstated. So from that point of view, I think ICICI is very well positioned. Why do we have HDFC still ahead of ICICI? Simple reason that once we acknowledge that HDFC is now a higher cost of fund bank, we also must acknowledge that it is now a lower cost to asset bank than it used to be. ROEs have near bottomed out, and we see a clear path to 17% ROE, which was their ROE previous to their merger. So if the valuations get to anywhere near where they were, we have a large outsized re-rating opportunity also waiting out there. The re-rating opportunity in something like ICICI cannot be as dramatic by definition, since given the predictable earnings that they have been delivering and the crowd favorite they're extending to become. But the path on that HDFC return has proved to be a little more rocky, right? There are surprises along the way. People are tracking what's happening to liabilities on almost a monthly basis, and there will be ups and downs, surely, on both positive and negative surprises. We just think that the cumulative re-rating opportunity is larger, and we are happy to, grin and bear the pain along the way.
Shantanu, I'm going to do a Hail Mary here and see if you actually track the space. And I want to talk about non-banking, right? And I want to talk about everything that's capital market. And it seems like all the valuation, the alpha play really is coming from the private banking, wealth creation segment that every bank and non-banking player is now going after. Have you been tracking that closely? The likes of an IFL, 360, Nuvama, Edelweiss, Anand Rathi. Is this a space you track? Are you constructive if you track them? What is your reading of the situation?
Right. So, without getting into stock-specific details, I am yet to come across a lot of people in India who are negative on the prospects of the Indian capital markets over the longer term. So that they are riding a structural tailwind, all companies within the sector, is very clear. So, there are two aspects to this. Therefore, on all capital market derived plays, you have to figure out what are the valuations they're trading on, and given what their profit model is related to the capital markets, are there any risks to it from either a regulatory or a competition perspective? For example, we have seen large swings for AMCs in terms of how much money they can make on their AUM, on their equity AUM, purely based on how the distribution architecture has changed, given regulatory interventions over time. So those things also have to be factored in. And, there should be a certain margin of safety in valuations in factoring in how those numbers work. The more derivative businesses like wealth, etc., I think it would pay for investors to pay a little more attention to how much of the money made is actually from capital markets, and are there other elements within those respective businesses which are also significant sources of profits. And if there are so, then those businesses need their individual separate risk assessment and valuation.
Shantanu, hi, Tamanna here. So,
hi, Tamanna.
I'm just wondering how big a risk is regulatory action right now in the space? Because that seems to be, giving sleepless nights to everyone who's a banker, an NBFC head, and anyone who tracks the space as well. What do you make of this, and does this make you a little jittery? How do you then classify which companies or which banks are relatively safer?
Right. So, RBI has very clearly laid down the law. It's made it very clear that as far as regulations on customer onboarding, basic KYC, AML risks, etc., are concerned, there are zero holy cows, irrespective of how prominent the institution may be and how celebrated it may be within the broader financial ecosystem. There is, of course, any large intervention from the regulator always carries within it some risk of disruption. But long term, I don't see this as a negative. I think India has gone through an absolute transformation, especially accelerated at the point of COVID, in terms of digital onboarding. If regulatory intent forces people to catch up in terms of due diligence, and onboarding P&Qs for new business going forward, then it makes the entire digital architecture build up over the next decade or more, that much more robust. So yes, the news flow does not help, especially if you're owner of the stock. But I think long term, it's going to be, a positive for the sector. Also, we have to differentiate between the natures of news flow which have come in. The unfortunate reality is, in some sense, if you are a player who has interconnections within the system in terms of reciprocal liabilities, etc., with the rest of the banking system, I think that acts as a natural hedge against against regulatory intervention to the point of destabilization. So you'll see that those with larger balance sheets have got penalized, but their penalties mostly relate to their respective P&Ls. While we have had other cases where the impact went beyond the P&L and challenged the balance sheet and business model, which is a very different kettle of fish.
So if I were to, ask you about some of the recent players which have been hauled up one way or the other, whether it's an HDFC, a Kotak Mahindra Bank, Bank of Baroda has just, seen a reversal of its restrictions, or a 197, an ILFS. Which ones do you think will bounce back and which ones will have a bit of trouble?
Right. So, HDFC, for example, we saw, the embargo go away. Yeah. We just saw Bajaj Finance, the embargo on the 2 products being re-signed. Even when this Kotak implication came through, we pretty much downgraded it overnight. It's not that we had a neutral. Before that, we had our concerns about low compounding and still, lingering high valuations. So we were neutral, especially given the upsides I had for some of the larger private banks. I downgraded on purely on the concern of rising risk premiums in the minds of investors, not because there was a large compounding impact. So one thing we have to keep in mind is that while digital onboarding forms a fairly large proportion of the new customers that you bring onto the fold, given the demographics, the age demographics of customers you're bringing in through a digital-only channel, and the current mix of customers, these new customers today are not bringing in a large part of your liability or asset business. They're larger in numbers than in terms of weight. So the ticket sizes are smaller. So when you look at the compounding impact of a 6, 9, 12-month interregnum, you'll basically realize that it's not as if the earnings shifts by a very material amount. It is more the perception around the systems and processes of the banks and how investors look at those and what comfort they derive from a business like banking, where these processes are absolutely existentially crucial for stability, is where the perception battle lies. Not compounding, not in earnings.
Fair enough. I don't know, perhaps there's also a bit of question about how did, the managements of these very storied and reputed banks allow things to get to this level. But nevertheless, always great speaking with you, Shantanu. Thank you so much for joining us today. That was the perspective on the BFSI space. Time for a very short break. We'll be right back with the pre-open. It's going to be an action-packed morning. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies.
Back with India Market Open right here on NDTV Profit. We are about 45 seconds away from the market open. Let's just look at the implied open very quickly before we get to Amardev Singh and Avinash Gorakhshekar. What about 57 odd points in the green? So actually, let's see if we bottom out early morning or do we do it after maybe a few hours of trade. Amar, good morning. Thanks for joining in. What do you make of the market action? We might have a bit of a green at open. Would you use that to build longs or is this a sell on rise market?
Yeah, very good morning and thank you for having me on the show. So if we look at the intensity of the fall and also if you look at India VIX, so these are very, I would say, clearly telling that there could be further selling as well because most of the large caps, I would say the heavyweights, we are seeing some sort of, I would say, consolidation and some sort of weakness in some of the stocks. But the good point is that Nifty is approaching a very crucial support zone. So if we go back and see, Nifty used to bounce back from almost 21,700, 21,800 levels. So that was a zone of major and crucial support which Nifty has respected and held on to. And if we look at the recent low, that is yesterday's low, that was around 21,932. But I would say that if I look at the short-term trend, that is definitely negative. If I look at the intermediate term trend, that is more or less consolidating with a slight negative bias. And also, if you look at the derivatives data, we see that there's been short build-up happening with significant OI over the last couple of days and yesterday in particular. But I would say that we'll have to watch out for the levels. So 21,600, 700, that's a very crucial zone of support for Nifty. And the short-term trend remaining bearish. So if there is a bounce back, there's a high possibility of we would witness some fresh selling coming into the markets. Till the time we don't see a cool off in India VIX and yesterday's high of India VIX is also going to be a very important level to watch out for. So I would say that one needs to be slightly cautious. The short-term trend definitely remaining bearish. We are moving close to support level, so there could be a bounce back. Whether this bounce back holds is something we'll have to watch out for.
Okay. And Avinash, just before we come to you, Amar, let's just get your stock ideas done as well. What is it that you're recommending?
Yeah, I would say one stock one can definitely look at is Supreme Industries. This is one stock which has, I would say, consolidated. It was in for consolidation for a very long time. And then we saw the stock breakout. Currently, it's around 5,400 odd levels. So any pullback in this stock is a buying opportunity. With an upside target of 5,600 and crucial support for the stock is seen around the 5,200 level. So this is one stock one can look at. And the other stock to look at is Godrej Consumer Products. So this is again one stock which was in for consolidation, has breached crucial zone of resistance. And also what we are seeing is that volumes have been significantly higher over the last few trading sessions, but only on a pullback. So somewhere around 1280, 1300, that's a good level for entry because the stop loss needs to be below 1250 levels. And on the upside, the target is around 1430. So this is the second stock one can look at.
Good morning. Thanks for joining in. Do you feel like there could be a pullback around the corner? The last few days have been pretty rough for the street. Technically, of course, we look ripe for a little bit of a pullback on the street, but fundamentally, do you feel like there's enough reason to go out and buy?
Is this question for me, Samira?
Yes, Avinash.
So basically, see, I think you're going to see a very volatile market. I think markets are now going to be dictated purely by electoral trends. And I think my sense is that we could see a lot of volatility considering the kind of wicks we saw yesterday. Typically, in the month just ahead of the election result, I would be a little cautious in entering any stock in a very relatively big way. But I think if we at all get some further downside, then I think one could start nimbling into the large cap names, some names like ICICI Bank, Axis Bank, or typically even the PSU banks like typically a Bank of Baroda. My sense is that these offer a lot of long-term value, and I think once the election result is out, we should definitely see a strong bounce. But it all depends on the margin of victory. I think the markets are now discounting the number of 400. Possibly a figure of 350 to 370 if it does come in. I think the markets could definitely see a decent amount of re-rating. So I think, this is the time where one has to take a calculated risk and actually bet on the large caps. We would stay away from the mid caps.
Right. Just a quick look at the first cut of pre-open rates coming in, and of course with the caveat that these will settle. What's catching my eye? BPCL about 6% up, Shriram Finance doing well, SBI, Coal India, Adani Ports, Bajaj Finance, all of these on the winning side. Let me just start with BPCL. Avinash, your take on the numbers, the results that came in. The bonus issue was something that had the stock, buoyant through a pretty rough week. Would you say that uptrend continues for you as far as the BPCL is concerned?
No, I think, Tamanna, if you look at the BPCL numbers, there has been a big exceptional gain of almost 1,600 to 1,700 crores. So if you strip it off, I think numbers have been largely in line, but I think not very strong in that sense. The bonus issue is a surprise because, their comparable peer HPCL has given a 1:2 bonus. So I think the bonus has been more lucrative. But I think going forward, hopefully, if crude prices remain soft, and considering that now the Iraq-Israel issue is more or less cooled off, I would not be surprised that in the coming year GRMs could improve. And I think you're seeing a lot of good demand from sectors like automotive, aviation. So I think to that extent, I think definitely it looks a decent bet if one were to look at the next 6 to 12 months. But yes, I think numbers were not very impressive. I think in line, and largely because of the exceptional gain, you saw a big jump in the profit.
Amar, what about on the charts, BPCL and HPCL?
So if you look at HPCL, so we are seeing some sort of consolidation there. And if I look at the stock, it is witnessing some sort of profit booking as well. And because on the weekly charts, it clearly shows that a top is being formed for this particular stock. And on the downside, the stock has got good support coming around the 470, 480 levels. Whereas intermediate term trend, I would say, is more or less consolidation. Talking about the other stock which you mentioned, BPCL, if I look at BPCL, there is Bharat Petroleum. It is having a similar structure as compared to HPCL. And again, it is also witnessing some sort of consolidation. So I would say that it's more of a trendless phase for both of these stocks. BPCL has got good support coming around the 550, 560 zone, whereas on the upside seems to be capped around the 630 zone. So it's more of a consolidation for both of these stocks.
So that's BPHP for you, and interesting moves there. The other one is Asian Paints, and Jefferies has come out with a note saying that they believe that this is a conviction underperform, and after the 4.5% gash yesterday, is there more in store is the question. Now, Avinash, would you be a buyer at the dips, or do you believe that there could be pain ahead for an Asian Paints investor?
I think my sense is, Neeraj, it's better to wait for a couple of quarters because competition in the paint market has intensified. In fact, now there are 2 or 3 new players. And looking at the recent entrant, that is Grasim, I think my sense is that, some sort of price damage in terms of margins has already started getting realized on Asian Paints numbers. But I think you will probably see a bigger impact in the first half of financial year FY 24-25. So I won't be surprised that the stock could possibly continue to remain under pressure because clearly the markets are now looking at the fact that in what way is Asian Paints going to defend its market share and obviously preserve its margins. So on one side, crude prices have softened, but I think on the other hand, competition has intensified. So I think at best it can be a hold. We would not suggest a fresh buy at the current.
Tata Motors had a pretty decent day yesterday. Numbers are expected today. Technically, this was looking good, and it seems like the fundamental news trigger will be the earnings. But this morning at 1,037, would you be brave enough to go long on Tata Motors ahead of earnings?
Yeah, I think, see, if you ask me on Tata Motors, I think the company has now decided to separate both the automotive commercial vehicle and the passenger car business. This remains the key trigger. And I think as far as the JLR business is concerned, Samira, I think we are going to see a better traction on both the volumes as well as the margins. In fact, the company has maintained that it should obviously generate free cash flow, which is a very important variable for them. And going forward, I think the demerger trigger is going to play out. In fact, yesterday, there was some news saying that even the NBFC business is now going to be transferred to Tata Capital. So that also obviously would mean that the company gets more focused on its business entities. So as best, I think we'll prefer to wait for the numbers. But yes, at around 1,000 or just below 1,000, one could definitely look at accumulating it. We feel automotive is one sector which should do remarkably well in FY24.
Okay. Well, the pre-open rates have certainly settled, and if just a quick check before we get to Harsh, my colleague, for the brokerage calls. BPCL should come up on your screen. It was showing some exaggerated moves at the pre-open session, still 4% higher. So the dividend plus bonus plus the brokerage calls seem to be working for Bharat Petroleum. So that's a stock that you certainly want to keep in mind. And just watch the Nifty as well. I think just after the kind of cuts that we've seen in the recent past, it'll be very interesting to see how the index behaves in the first 1 hour of trade. But brokerage is in focus. Harsh Johnson with the top 1 or 2 brokerage calls this morning. Morning, Harsh.
Good morning, Neeraj. First off, you're looking at Asian Paints. Jefferies has a bearish stance on that one. 2,200 being the target price. They've reduced the target price from 2,500. They believe the earnings overall from revenue all the way to PAT was a miss. On the revenue front, they believe volumes, especially on the rural side, were a bit of a disappointment. And of course, with increased competition, advertising and promotion spends were also higher, which they believe as a strategy is good. The volume focused strategy is good, but just the fact that there is going to be intense competition going forward makes them cautious, and therefore what they've done is they've reduced their target multiple on Asian Paints from 50 times to 40 times, and therefore the target price has also come off, and from the current market price levels, it's looking sharply lower. It was just about 10% lower versus current market price earlier. It's now nearly 30% lower. So nearly, my apologies, 20% lower, and therefore clearly bearish on that one. The other one is HSBC on Tata Power. Again, they've downgraded Tata Power, but they've hiked the target price there. 31% downside even now. They believe execution risks beyond what Tata Power is in control of is where the key challenge lies currently. They believe the numbers were softer and will continue to remain softer on the back of that execution, especially slower execution on pump storage projects as well as government reforms. Those are the key catalysts according to them. And also coal prices, they believe, will continue to remain benign. Of course, some upside risks on the back of higher coal prices and execution, but outside of that, they believe that Tata Power is currently a reduced target price 300 rupees, a 31% downside. They've rolled forward their estimates, but nonetheless a 31% downside from current market price.
Okay. Well, thanks. We'll watch out for both of these in the session today, Asian Paints as well as Tata Power, which had corrected a bit yesterday in trade. Now, mind you, like we said, the bigger focus is the index. And if you just look at what the election season has done for the markets, right? And just look at this chart that we prepared, which kind of shows the volatility around the election period for our markets. And it's been a very, very volatile Nifty, starting from April 19th, which was when the first phase 1 of the polling began, till as of 8th May, not 9th May, but the 8th May, 2:30 p.m. There was a loss of over 600 points. If you add the 9th May losses, it's even more. So, the election trade hasn't quite worked well thus far from a bull's perspective. Let's see if that were to continue. Avinash, if you had to accumulate something right now, 1 minute answer, what is it that you would do?
I think I would bet on the hospitality sector. I think we like companies like Indian Hotels, East India Hotels. I think these are fairly defensive bets and with good earnings growth, potential possibilities for the coming year also. And I think within the auto component space also, we like one or two companies like Sundaram Fasteners, Ask Automotives. These are companies which have been beaten down, and I think a good recovery in basically the two-wheeler markets is going to be something which would benefit Ask Auto quite significantly. In fact, Sundaram Fasteners would benefit from a large commercial vehicle and passenger car kind of volume growth expansion in the current year. So I think hotels would be a top pick, and I think Indian Hotels, East India Hotels, even at the current levels, an investor can expect a decent risk.
Right. Last call, Amar, very quickly. What is the one big bet this morning on a very, very, I would say, iffy day where it's difficult to take a clear call?
Yeah, I would say that if one looks at a particular stock, in that case, Bharat Forge is one stock one can definitely keep a close watch on. Because this is one stock which has, I would say, defied the market's correction and continues to be very strong on the back of significant volumes and delivery quantity. And also what we're seeing is that the stock has breached a crucial zone of resistance earlier, which was around 1350 odd levels. So currently it's around 1400, 1420. If you look at the overall structure of the chart on the long-term, intermediate-term trend, short-term, that continues to be very strong. So this is one stock on any correction. This is a stock one can definitely look at buying. The levels to watch out for on the downside would be around 1350, 1360. If there's a correction towards that level, that can be a good buying opportunity with an upside target of 1470 on the upside, and stop loss would be below 1300 levels.
All right, gentlemen, we will leave it at that. Thanks so much for taking the time out and being with us and giving us your thoughts. Here's how the markets are starting off this Friday morning. Are we seeing stability, the signs of stability, or will that get sold into is the key question. For now, starting off flattish, but that green is welcome considering what happened at close yesterday, by the way. The Nifty Bank too, flattish in trade. Mid caps and small caps had corrected quite viciously yesterday. The small cap index was down 3%, and there's a bit of a bounce there for sure, about 0.5% higher for the small cap space. Let's pull up the heat map and show you what's moving on the index. Well, BPCL is the top gainer, but some of the PSUs which got rogered in trade yesterday are bouncing back. There is strength in NTPC, strength in Coal India, strength in ONGC. So certainly a bit of a bounce back. L&T is seeing a small bit of a pullback as well. So that too is welcome. But clearly BPCL is the top draw in the session. But the first four stocks are PSUs, by the way. Hindalco continues to rise, about 1% higher in today's session as well. Remember the Novelis IPO around the corner. SBI, after the 2% uptick yesterday, up another %, so that's not doing too badly. But the reds are slowly mounting now. Britannia is the top loser, was down in trade yesterday too. Asian Paints another 1% down. Tata Consumer is down about 1%. IT is seeing a bit of a stick because Tech Mahindra, LTI and Infosys, all three of them are in the red, and HDFC Bank, which was down about 1.5% to 2%, is down another %. So that's the clear big drag on the markets, and countering that, or trying to counter that likely, is the PSU pack led by BPCL, up now 5% in trade.
At least the initial sentiment a little more positive compared to the kind of drubbing we've seen. Let's just quickly pull up what's happening in the broader markets this morning and see if they're holding up as well. Not too bad, and all of this is of course relative to the last week, which has been a tough one. The Nifty small cap pretty much static over there. Let's start with what's not working and then we'll go to what's working. Intellect Design is one of your top losers on the broader markets this morning because of numbers more than anything else. Net profit down about 14%. That stock down 12% in opening trade. On the other hand, Quest Corp, their numbers seem to have enthused the market, about 1% up, come off its pre-open rates, but still holding up in positive territory. BPCL, HPCL, I'm looking at them together. together. BPCL, of course, the top gainer on the Nifty, but so is HPCL, not doing too badly. BPCL has the bonus share going for it, but overall crude prices also seem benign enough for an HPCL to have a pretty good morning. Paytm, because it's a second day where the stock has been in positive territory after a consistent dropping. Remember, we talked about it in our trade setup as well. I just want to quickly pull up SRF and PNB. SRF has a clutch of brokerage notes which are fairly positive. The market really isn't to that extent. The counter completely flat, and Punjab National Bank, again, quite a few positive notes. Numbers were decent. Yesterday the stock was okay, but today remaining flat but in positive territory. A bit of a hunt today, Samina, to look at what's working. More losers with larger margins today.
Yeah, but it's actually not as bad as yesterday, and I think I'm going to take heart from that. Even though the last few days we had a positive start and then declined as we gone along, this morning a little better. So you've opened flat, we've actually built on those gains, and that's what we'll be taking a little bit of heart from. Broader markets doing better than the benchmark. The mid-cap and small-cap index is marginally higher. The Nifty is trading okay. 22,000 becomes a very important level that the street will be tracking. And also on Bank Nifty, 48,000 got taken out yesterday, so that is still on tender hooks. But in terms of movers and shakers, Jupiter Wagons, and I'm quite impressed by that up move in trade this morning as well. You've got another 5% being added to Jupiter Wagons. Their numbers were pretty impressive. They've going through a pretty sharp breakout after hitting a new 52-week high. The stock trades with a 5% gain this morning again. You've also got Manappuram Finance. It's rebounding after yesterday's fall. Take a look at some of the other ones. So you've got Endurance Tech, that's up 2%. 197 is not doing too badly. You've got BEML, Gujarat Minerals, GMDC trading with a marginal gain. So metals. And our guest had also indicated that if you want to play, Aditya had very clearly said that if you want to play for a sweet rally today, you should be betting the house on metals. And that is one space that continues to look good in trade as we see it. Well, along with that, you've got some of those Adani Group names that continue to gain in today's trade. Tata Motors is having a pleasant morning ahead of its earnings. It had fallen all the way down to 980 only early this week, back at 1,042 on Tata Motors is what we have. You've also got TVS, Hero MotoCorp that are doing quite well in trade this morning. On the sell side, we've highlighted already that Intellect is having its roughs. You've also got a couple of those chemical names that are seeing some weakness. Tech as well in the broader market space is seeing a little bit of softness as we see it. Well, that's the market breadth. Now, whether or not we see some weekend cheer coming in for the street is what we should all be, or rather are hoping for. But Manish Sontalia, Chief Investment Officer at MK Investment, joins in with his view and perspective on the markets. Manish, good morning. Thank you very much for joining us. The last few days pretty much came out of nowhere. Yesterday in particular, so the markets declined quite sharply. I know historically we've seen FIs who rather wait, buy at a premium after there's a conclusive event outcome as opposed to actually come in ahead of that. But as you see it right now, where do you think the biases sit? Do you feel like there could be some more buying coming in on the street, or it's going to be a little bit of a pause before some bit of gains return?
So I think the recent events over the last few days has been to do with liquidation of some hedge funds, India dedicated funds, which had to close down. And I think there was forced selling on account of liquidation of the assets that they had in the fund. I don't read too much into the fall apart from this. In addition, you have the regular volatility that comes along with any sort of elections. As the election passes through the phases, you start with high optimism, then it wanes in the middle, and then the likely scenario and the results starts to play out towards the end of the election. I think in India also, started with 400 seats for the BJP government, now NDA government, and then now fourth phase. You hear on the streets that even 272 is not coming, and then I would reckon that as you approach the seventh phase, you could settle somewhere between 330, 40, which gives you a majority on the government, policy continuity. You have a whole lot of money sitting on the sidelines waiting to get deployed in India, even if it means a 10% higher from the current level. So, I wouldn't believe that there's any reason to be massively bearish on India, because the season has played out, numbers have been okay, and I think sentiments also are quite reasonable.
Manisha, it's not. I guess it's not just elections, right? So while you have elections on one hand, you've got earnings that have not done very much to enthuse the street. You've got the Fed that's got a delayed rate cut from the look of it. You have China that's making a little bit of a comeback. You have higher commodity prices, anticipation at least, which will eventually impact the input costs for a whole bunch of India. But let's not forget that investors have made money. At this juncture, what is the advice that you're giving out? Are you advising investors to sit on some dry powder, take some profits off the table, stay off adding additional money into the markets? What is the strategy? What should the strategy be? What percentage of the portfolio should be on cash?
I would believe that since we are towards the fag end of the elections, and in any case, medium-term outlook on India is quite positive. On the back of high teens earnings growth on the benchmark Nifty for the next 1-2 years at least, you have valuations which are not very expensive. Earnings season for Q4 began with a preview of around 5 to 6% YOY growth. If you leave aside the metals and the oil and gas pack, earnings are in line with around 15% sort of a growth, which is quite decent, I would believe. Yes, there is fear of some input inflation coming through, but that's going to work in favor of producers of commodities also. Pricing power is going to be important in that regard when it comes to users of the commodities. And as far as the Fed cut is concerned, yes, the cut didn't come about in March. Then in the middle, you believe that there's not going to be any rate cut in this calendar year. And now the base case opinion is, no, there is going to be a rate cut this year, calendar year, and that rates in the US are not going to rise. All of this means that, as soon as the bout of cutting of rates for the Fed starts, emerging market as a whole starts to benefit. Of course, emerging market has seen outflows except for maybe a Turkey and a China. They are seeing inflows, but there has been profit booking across the board. Emerging market flows have been negative. And India has also seen a bit of FII selling. But that has nothing to do too much with fundamentals. I would believe valuations are quite reasonable. If one is not too overtly worried about the next 5% correction on the downside, I think it is a buy on dip.
So, sorry, it's a buy on dip. So you should not be fully invested, Manish, at this stage. I'm a little confused. If it's a buy on dip, then I wait it out, right? No, I'd imagine, or stay fully invested.
Yeah, I mean, who worries about a 5% lower downtake on prices if you are positioned your portfolio for the next 2 to 3 years? I mean, it hardly makes a difference. So from that point of view, I'm fully deployed. And in any case, we are asking investors that if they can top up the current correction in the markets, and there's not been too much of a correction, so to speak. You had 22,600, 700 on the upside on the Nifty, and currently maybe you are at 22,000. So a 3.5% correction doesn't mean too much, but there is a lot of fear in the markets that the markets may have fallen a bit too much. But I would think that market positions are extremely light. There is apprehension on the results, which is keeping quite a few players away from the market. I wouldn't fear too much on a next 5% even downside from current levels. In any case, if there is a top up, we would advise investors to stay fully invested.
Manish, good morning. Neeraj here. So the volatility and the reasons that you referred to has led to a fair degree of corrective moves. But I was seeing the list of the top 15 losers on the BSE 500, say. All of them have come off because of very idiosyncratic reasons, results or RBI moves, etc., so on and so forth. Do the regulatory changes, for example, on the NBFC side, worry you about investing in that space as actively as you were maybe, or are you constructive on that pocket?
So two spaces where there has been a lot of fear. One is the PSU basket as a whole. Of course, they have made humongous money for investors, but just look at the numbers that have been coming out of PSU banks in general, even public sector entities as a whole, I mean, those numbers are just too good for the valuation that they are trading at. I would reckon that there's a whole lot of upside on the PSU basket, the PSU banks as a whole. But yes, there has been a lot of selling on the higher side whenever they seem to move up. But I would believe it's clearly misplaced, so to speak. As far as the NBFC space is concerned, that this is going to impact infrastructure funding, power sector funding, etc. I mean, listening to a few of these power financiers calls, I mean, they believe that it is India's accounting, wouldn't impact the PNL, the profit and loss account at all. It's going to be taken away from the reserves. It's going to, at best, impact tier 1 capital of 2 to 3%. But in any case, they are sitting on a tier 1 capital of 23%. This is just a draft paper, so to speak. Whether it's going to impact the entire funding from the PSU banking side as a whole, I would believe that the apprehension is misplaced. In fact, this was to get implemented, it's only going to strengthen the risk management systems in the system. So, the size of the balance sheet of some of these NBFCs are going to be double at least between now and next 5 years. And of course, infrastructure, capital goods cycle, if one believes that this is going to puncture the capital goods cycle and the infra cycle in India, again, I would believe it's quite misplaced. So these are apprehensions. First of all, there is a draft paper applicable till 15th of June. Then there's going to be discussion on this. And then, how we heard the SBI chairman talk about yesterday that they are going to represent the PSU banking space concerns with the RBI on the draft implementation. So it's not a given. And in any case, if it gets implemented or gets diluted in its implementation, I don't think it distorts the bigger picture of infrastructure creation and capital goods cycle coming back in a big way.
So actually, I was going to ask you a separate question, but my follow-up to my question is this, Manish. Power financiers, it's a small bucket, 3 names maybe, largely, which are dedicated here. The con calls seem to suggest some extremely strong targets on the book size, on the profitability as well. And I think there was one Economic Daily which was saying that the government may even revisit these draft guidelines too. My question is, they've run up quite a bit already, so the low-hanging juice is out of the way. Are they still good investment candidates, the power financiers?
100%. I mean, what valuations are we talking about? If we think that these financiers are expensive, we are talking about single-digit P multiples of 15%, at least a growth on the balance sheet, and a NIM, which is the best in class, north of 3%. And if you talk about the balance sheet and the leverage, the tier 1 capital stands at 23%. So the size of the balance sheet of the runway for growth is immense from where we are. So, we're talking about both of these financiers, the bigger ones, combined balance sheet size in excess of 20 lakh crores in the next 5 to 6 years. And REC today maybe have a loan book size of something like just about 5 lakh crores. So, Power Finance in any case is a holding company of REC. So all of them put together, I mean, the size is minuscule, the runway for growth is good. I mean, they can grow very aggressively, but I would believe if they have to grow judiciously, then they should be growing at 15% and, doubling the loan book in years, which is pretty decent. And the valuations are very attractive from the point of view of, compare it with the private sector names. And even so on the dividend yield side. So I believe they are clear buys as far as the valuation and the fundamentals are concerned.
Manish, hi, morning. Tamanna here, and I was listening to your initial comments on poll jitters and the number of seats expected, etc. I just want to understand why voter turnout is such an important factor for market participants. How does it matter? Beyond a point, how does it matter if instead of 400 seats, there are 300 or 320 seats? I'm just trying to understand the thought process, because you're going to have another phase on Monday. There might be another set of lower voter turnout numbers coming in. And will we then see a similar reaction?
Yeah, I mean, so if there's a continuity, then people tend to take it lightly. Plus the heat that is there across the country. Last time around in 2019, elections were in the month of April, which was not that hot when you compare it with the current times. The elections are being held, let's say, the whole of May, and all parts of the country are pretty hot, so to speak. So that could be one of the reasons for the low turnout. And I think if there is a high turnout, which means that voters are enthusiastic for some sort of a change. But if there's continuity, it's just that they don't want to go and vote. Things are fine and good. I mean, that could work against the current NDA government, is what the belief is. I'm not a great expert on politics, but believe that strongholds of the ruling NDA government, where there is a low voter turnout, could be a case of concern.
So, that's the thing about election season. Everyone becomes an expert on politics at this time. But nevertheless, the market makes its decision based on what it perceives. I'm wondering, Manish, that would you gear up for more volatility till, say, the 3rd of June, when your exit poll numbers would be out? What would be your call in that case? Stay on the sidelines till the dust clears?
Not at all. I mean, I would take advantage of the volatility to deploy as much as I can. In any case, if there is any top up or new subscription, it gets deployed the first day, because I clearly believe that the policy direction in the creation of the new government, apart from, let's say, the budget jitters on the taxation front, and the roadmap is pretty clear as far as the earnings trajectory is concerned, the policy continuity. And I would bet on that side, the probability of the current government not coming to power is slim, even though the probability is there. And really, I don't side with the guys who believe that, yes, there has been such a great run-up in the markets that in any case, whoever comes to power, there's going to be a big fall in the market, and give it a few percentage points. But again, once the markets have fallen, you have no other choice but to buy, because India is one of the highest growth countries in the world, and you can't seem to ignore India. There's a lot of cash waiting on the sidelines. In any case, SIP money is pretty decent, and on top of that, if you have FI money come through, it's going to be a problem when it comes to quality stocks to buy. So if today it's available in plenty, I mean, best to lap it up.
Right, thank you very much, Manish. Great getting some perspective from you, especially at a time like this when there's a little bit of nervousness on the street and there's so many triggers that the street and participants are tracking. Thank you, and we'll hopefully see you soon, and you have a good weekend ahead.
Likewise. Thank you.
Thank you. Well, let's move on from there to Quest Corp. Let's pull up the stock. It's reported earnings that were highest ever in terms of top line. They've also managed to get their margins to 4%, which is what they'd set out for the company for FY24. Let's go across and find out what lies there in FY25 and what went behind this quarter as well. Kamal Pal, Hooda Group CFO, and Guru Prasad Srinivasan, ED and Group CEO at Quest Corp, joins in. Good morning, gentlemen. Thanks for joining in. It's been a good year for Quest Corp. I do remember you indicated last year that you'd strive for a 20% growth in FY24. What we've got is about 11%. But still, record numbers on top line. It's been a tough year, which we appreciate. Going into FY25, what is it looking like? Even the aspiration of a 4% margin in FY24 is pretty much achieved. Into FY25, margin improvement, revenue guidance, please share with us.
Sure. Thank you so much for having us on the show. Yes, our revenue growth has been 11%, but however, our EBITDA growth has been phenomenal. It's about 18% year on year. Our PAT has really grown 26% year on year. So many parameters that we had set for ourselves, we have achieved, whether it is the EBITDA margin. We started the year at 3.42% and it ended the year at almost about 3.92 with a blended average of 3.6. So I think, all the parameters that we had set for ourselves, whether it is operational efficiencies that we wanted to bring in, the sales growth and efficiencies that we wanted to bring in, plus the technology investments that we did to bring our cost to serve down. I think everything that has played well in terms of closing the year at a very high note, and we have ever achieved the highest ever EBITDA for Q4 and for the year as well. So we are quite delighted with the result what we have done for ourselves. And as we step into FY25, Of course, two of our platforms, which is GTS, Global Technology Operations, and Operating Asset Maintenance. These two businesses are high margin businesses, high EBITDA margin businesses, and they continue to grow. We are having a good set of sales pipeline and funnel and order book for these two platforms. Plus our workforce, we are quite glad and happy to announce that we have crossed 400,000 by headcount in our workforce. And here on, of course, there are a few sectors which are going to be very augmenting this for FY25 for us, specifically manufacturing and BFSI and telecom. So we are seeing the demand coming in from these segments. So we are quite, I think we are entering into the FY25 with a very strong foot.
Mr. Hooda, let me come to your profits which have gone up. There is an exceptional item, I think of about 20 crores this quarter. Can you tell us more about it? And has that sort of boosted at the end of the day the net profits as well?
So the exceptional profits in the current quarter is due to the divestment that we did for one of our businesses, QTG, which was into break fix business. But if you see on an overall basis, if you take aside any exception on a full year basis, also if you see the profit after tax has grown up to 280 crores and the EPS has gone to 18.6 rupees per share, both of them being in excess of 26% and 24% on a year-on-year basis.
What can you tell us about Foundit, formerly Monster, which you acquired? How long do you see the path to break even?
Yeah, so we had given guidance that Foundit should exit the financial year FY24 at a break even. Happy to share that the Q4 sales run rate for Foundit has crossed 50 crores on a quarterly basis, and it is very near to break even. The burn in Q4 for Foundit was close to around 4 crores. The full year annual burn in Foundit this year in FY24 was close to around 56 crores, down from 95 crores last year. And as we move into the next financial year, we hope on a full year basis we'll be able to get phenomenal growth in Foundit, and we should be the burn that we did last year of around 56 crore, we should be able to bring it down to zero as we move into FY25.
Okay, Mr. Srinivasan, coming on, how do you expect the different verticals to be like in times to come? Because while workforce management is still about 70% of your revenue share, one would believe that things like verticals like global technology services, etc., might do well over time. And I don't know if it's connected, but there is a lot of appetite of GCCs getting up in India in a big way. Does that become a big hiring trend for a company like yours?
It's a great question, and we're also working a lot, putting a lot of blocks together. So, for FY25 specifically, if I talk about workforce, we are getting into a more vertical-based approach. And it's important because each of our vertical, the large three verticals, we have four large verticals: BFSI, telecom, consumer durable, and manufacturing. So of this, at least three verticals, excluding BFSI, we already crossed 50,000 by headcount. And specifically manufacturing, we are almost about 70,000 by headcount. BFSI, we almost crossed about 120,000 by headcount. So what it needs is more focused approach. The solution or the hiring strategy or a platform is going to be very different than the other vertical. So we are getting more granular in terms of our execution. So we know the growth is going to come from each of these vertical at its, and they would be measured very independently. Similarly in IT, GCC focus, if you look at most of my mandates that we are currently delivering, almost 90% is from GCCs. So we have carved out a specific solution around GCCs to capture, and GCC currently employs almost about 1.6 million people, and we have more GCCs coming into the country, and we need a very specific approach. So for Quest, across this year is going to be more focus at a vertical level to create more solution and be closer to customers. That is something that we are focusing across. Whether it is a platform of GTS or whether it is platform of OAM, we are more focusing on vertical-based approach.
And what does this therefore mean for growth for you? Because when one looks from March 21 to 24, not double really, but you've grown about 75% on aggregate. Is there a target that you're setting for the next 3 years or the next 5 years for revenue growth?
So generally, we don't give a forward guidance
No,
on
not
this,
a formal guidance, but broadly.
Yeah, but if you look at Neeraj, India is in its state of investment at the moment where it is. I'm sure once the elections are done, it will be much more firmer to see the way trajectory is going into. And we are seeing the investment coming into specifically in manufacturing and utility infrastructure, and all these are employment intensive industries, and we are directly linked to the economy in that space. So from that standpoint, at least 2 to 3 times of GDP growth should be our growth as well.
This is a great opportunity, Mr. Srinivasan, to also get your sense on trends. Now, when we saw the results coming in for the top IT companies, their net hiring year on year was down, and down by several, years. Are you seeing that trend continue, IT, ITES? What is the outlook there?
I would say yes, without any hesitation at the moment, because we are on forefront to receive the mandates, right? Yeah. So Q4 in itself, we have seen almost about 11,200 headcount coming down in IT sector, specifically IT services sector. And full year, I mean, on an annualized basis, almost close to about 70,000 people. Q1, we are still not seeing a great uptick, but however, I think, the more mandates are coming in from GCCs, as I said earlier, it's a wait and watch for IT services sector to come back. And I'm sure when it comes back, it will come back really hard. So it's been most awaited.
So what are the sectors that are seeing positive mandates for hiring in that case? Because if IT, ITES is looking slow, then that's not great news overall for the industry or for you. So where is the demand coming from?
So specifically in IT, it's largely from GCCs. Again, it cuts across every sector in terms of whether it is product, automobile, engineering, services. But when it comes to specifically to workforce, manufacturing, telecom, BFSI, and retail are 4 sectors which are contributing to the growth.
Right. You want to comment on this one too, Mr. Huda? I want to understand from you in terms of acquisitions and growth. Where is that growth and acquisitions going to come from? Are you looking at buying out companies? You've been on the spree recently, at least. And also, what does that mean for the debt on your books? I know you talked last year about how you wanted to actively work on reducing debt. Where does debt stand, and what are plans going ahead in terms of acquisitions?
Sure. Thank you for that question. So let me first answer the debt part. We had set a target for ourselves and happy to report that we've achieved that. So we could retire close to around 150 crores of debt in the last financial year, FY24. And the present debt levels, at a gross debt level, we are around 370 crores. Cumulatively in last 5 years, we have repaid close to around 700 crores of debt. So we are at a very comfortable levels of debt. In fact, we are a net cash company at a consolidated level. Our net cash stands at around 232 crores. So that's on the cash and the debt position. As far as acquisition is concerned, if you look at our history in last, I think 4 years, we've not done any acquisition. We are, the capital allocation policy has been announced. We're looking to focus only on our core business, and that has also led to we divesting some of our non-core businesses. We actually did a divestment last year, and again, in Q4 we completed a divestment for one of our businesses, which was QDG. And in Q1 we've just completed again a small divestment of division in Allsec, which is CoAchieve, which is into the compliance business. So we're not looking for any active acquisitions right now. The intent is to focus on our core businesses. Like Guru said, a large part of our business is linked to the strength of the growth of the Indian economy. And with investments coming in infrastructure, real estate, utilities, and manufacturing, which are high employment intensive areas, we would love to grow our organic businesses with the growth of the economy.
Very quickly, Guru, do you think there's a good possibility of margins improving above 4%? You've made 4% this quarter, FY25. Does the range move upward?
Of course, all effort around that to see how few basis points we can go up. So I'm sure, I think we'll work towards that.
All right, thank you so much. That was the top management of Quess. They've had a good year, but I think of the many things they've said to us, the takeaway that Q4 is still looking weak for ITES is also an important one. We'll take a very short break, but our conversation with management continues on the other side. We're speaking with Atul Kumar Goyal of Punjab National Bank about the quarter gone by. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
All right, it's results season and as we wind down towards the end of the quarterly numbers, one important set of numbers to look at is Punjab National Bank. Now, the PSU player has been a darling of the markets for most of this year and, has put out a fairly decent set of numbers. Atul Kumar Goyal is joining us. He's the MD and CEO. Mr. Goyal, thank you for speaking with us here at NDTV Profit. Let's just first begin by understanding the numbers. Now, the PAT looks very robust, up about 160%. Your operating profits have also moved up 9% year-on-year, 1% Q-on-Q. Net interest income is also up. But credit growth, while growing at about 12%, is slightly below target. What would be your take on the overall numbers and on credit growth?
Very good morning, Tamanna ji. As far as profitability is concerned, definitely there is an increase of more than 60% in the profit. The profit increases on account of the so many factors, but major factor is the contribution of the reduction in the credit cost. Credit cost for the last quarter has reduced to 0.80% and the credit cost for all over year was 1.40%. Since we have already improved our PCR to the 95%, so we are giving the guidance for the the next year, it will be below 1%. So profitability is bound to increase every quarter by quarter in the times to come. Your specific question regarding the credit growth, definitely it is little less, whatever the guidance we have given, 12 to 13%. It was 11.4%. If you see the credit growth in the June quarter, September quarter and the December quarter, it was more than 13%. But YOY it has reduced on account of, because if you see the last quarter of the last financial year, March 23 quarter, there was some bulk business we have done. So this was the reason, and we are giving the guidance for the next financial year. The credit growth will remain within the range of the 11 to 12%.
And so 11 to 12% is your outlook for credit growth next financial year. What about deposit growth? Even that was slightly under the estimates that were given.
Yeah, deposit growth, we are giving the target around 9 to 10% for the current financial year 24-25. The reason was of the less of the deposit growth. If you see, my CD ratio is already around 71%. So there was no need for taking the bulk deposit. So we have resorted ourselves not to take any bulk deposit. Even as on date, we are having the excess SLR more than 1 lakh crore available to us. So this was the reason. Otherwise, if you see the CASA was 41.40%, and last year we have opened more than 1 crore saving bank account and 2.68 lakh current account where money will flow. So on account of this, we are targeting our CASA ratio should be around 42% in the current financial year.
I just want to come, to the point of recoveries. Recoveries have been robust. NPAs have also been coming down. But what is your outlook to the pace of recovery, sir?
Pace of recovery will remain very good in the current financial year also, because we are having around 90,000 crore rupees TW book and around 55 crore rupees of the gross NPA book. If you see the last year, our recovery was 3 times of the addition also. So 5.73 we have achieved for the gross NPA number, and the guidance for the current financial year is less than 5%. And similarly, the net NPA has been achieved to the range of 0.73%. The target of the net NPA is the less than 50% in the financial year 24-24. And since our PCR is improved to the 95%, so credit cost, as I told earlier also, we are giving the guidance less than 1%.
Okay. Goyalji, let me come to, I would say, the biggest topic right now for the banking space and for you as well, which is the RBI draft guidelines on project financing. Now, you have said publicly there's no need to panic, but there is a need for discipline in the space. Now, before I come to you and ask you, why you've said that, what do you mean? I want to understand what is the share of project financing, how much of this category is on the balance sheet right now?
My reply to this is the first is a draft guidelines. We should wait for the final guidelines also, because this guidelines has been issued by the regulator on the 3rd of the May. It is like a consultative approach. And they have asked the comment from each and every stakeholder, whether it will be a bank and it will be a promoter side also, or the corporate side also. So let us wait for the final guidelines. And one thing I can assure all of you, what will be the final guidelines? There shall not be any worry for the Punjab National Bank, because today our balance sheet is very strong. But some clarification is also required, because you are asking what will be the which type of the loan book you are having, because as per the draft guidelines, it is applicable to all type of the project finance in the infra as well as the non-infra without any limit also. So we will take the clarification whether there is a need of fix any limit etc. also. So I think there should not be a matter of worry. What will be the final guidelines? We should wait for them. We will be in a position to provide that.
Now, so what I want to understand is, as of today, as per the definitions in the guidelines, and I understand completely well these are not final, so with that caveat, as of today, how much of your loan mix will come under these categories, sir, of project financing, which would be subjected to higher provisions if these draft guidelines go through? So I've put all the ifs and buts, but having said that, how much of the loan book right now would be vulnerable to this?
that will not be too much of the impact because some time of the loan in the loan book, the infra where we have given the corporate loan, that will be the out of the this purview, although it is coming under the category of the infra. Similarly, I would like to tell you also some of the discounting of the annuity from the NHI, although it will come in the book of the infra, but that will not come in under this guidelines. So in my opinion, rough estimate is like that, whatever our infra book is there, only 50% of that will be come under this category.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on big decisions, we
Well, a bit of an uptick for the markets, you have to admit today. There is strength, even though if you look at the Nifty 500, the advanced decline ratio is close to 3:2. So it's not that it's a runaway move, but the Nifty 50 is up about 0.7% at the highest point of the day. If you look at what's happened to individual stocks as well, it's decent. I mean, the top gainer is Endurance, which is up just 6%. So not that it's having a big move, but just that list of stocks which have gained. There's an Endurance which is up 6%, Jupiter Wagons is up 5.5%, Paytm is up under 4.6%. No big rara moves, but there's a bit of, a bit of a calm after the unease in trade yesterday. Yes, there are losers, as there always would be. And in today's session, it's no different. Intellect Design Arena, on account of the results and the downgrades that have come in, is down about 13% in trade. There is weakness in Birlasoft, KPIT and a few other stocks as well, particularly the IT space. I don't know if it's got to do with what Intellect and some of the others have done, but there's a bit of a pullback there in the IT, ITES and ER&D stocks. So that's to be kept in mind. PB Fintech is a bit of soft spot in the session today. So that's the other one that you have to keep in mind as well. But a clutch of names are doing okay too, and therein lies the point that say for Nifty IT, a lot of other indices have done reasonably okay. FMCG is of course ruling the roost, up about 1.35%. Pharma is falling closely behind. You would be deceived into believing that it's defensives which are largely holding fort, but Yes, that's the nature of the beast in the session today. Rajesh Kothari, founder and managing director of AlfAccurate, joins us right now on Talking Point to talk about his thoughts as well. Rajesh, good having you. Thanks for joining in. What have you made of the volatility in the last few days? Is it attributable to the lower voter turnout and maybe the markets thinking ahead of themselves, or is it got to do with this much spoken about US hedge fund or a spate of hedge funds which might be liquidating positions, or is it a combination of a lot of factors?
Hi Neeraj. I think volatility is a new mantra of market from last couple of years, particularly post-COVID. And I think volatility is going to increase further because of one or other reasons, be it a geopolitical, be it a local elections, be it a state elections. And I think every month there is one new factor which comes into the this game of volatility. So investors need to get adjusted to the heightened volatility, but one should not get fearful. One should try to consider volatility as your friend, treat it as your friend, and try to optimize as best as you can. Don't panic when markets are at low, and don't be too greedy when markets are at kind of a very high levels. And I think that's going to be the so at our investment house, we always believe, therefore our style is causality. Be quality conscious in what you buy and be agile enough to get out of it. And only this combination is going to work out in future as well.
Rajesh, have you built out a bit of cash in your positions, or are you fully invested currently?
Neeraj, generally we have seen that cash component doesn't make that big difference to your portfolio, because irrespective of what kind of state of market is, there are always sectors and companies which will basically do well compared to the other set of companies and sectors. So for example, healthcare is one sector where we have increased our weightage. We have reduced a little bit from cyclicals and added a little bit to pharmaceutical as a sector since last 2.5, 3 months. And I think if market enters into kind of a consolidation or more volatile zone, and also as the pharma company starts delivering better earnings growth, and that's what our assumption is, I think healthcare sector can be very interesting opportunity. So, we were almost like a 0% in healthcare, less than 2%. From there, right now, we are almost 6.5% weightage to pharmaceutical. And likewise, so we always find opportunities within sectors, across sectors, and that's how probably cash is not that important.
Got it. Okay, so interesting. By healthcare, it's largely pharma, or does it expand into hospitals, into diagnostics, so on and so forth as well?
So the healthcare covers the entire spectrum, but currently what we own is more of a CDMO players, because this is a segment where we have seen that this segment is impacted significantly post-COVID, because budgets from the US, the R&D guys that have reduced, and from now on, we are probably at the bottom of the cycle. Most CDMO players have not done well in last 2.5, 3 years, despite the long-term very exciting opportunity. So I think we are at the probably the worst of the cycle, and from now on, the CDMO players R&D spend should start moving up, and that should help the few leading companies who have positioned themselves well to gain significantly from this trend.
Interesting. So, Rajesh, in some sense, you are preempting what could happen a couple of quarters out, right? Because commentaries from a Loras, I think from a Syngene, all of that suggested that it's maybe 2 quarters out, but that's when it will start coming back, the CDMO spends.
Absolutely. You need to be a little bit ahead of time. You can't be just in time. Markets are very, very efficient.
Yeah,
and
sure.
At times you need to keep 1 or 2 quarters patience. But if you believe that in 2-3 years, companies can deliver 18, 20, 25% compounded earnings growth, that's, I think, fantastic compared to Nifty earnings growth of, say, FY25 is going to be likely to be around 12%. So 12 versus, that 20, 25%, definitely, that's basically what, excites us.
Got it. Rajesh, what do you make of the commentary from Larsen & Toubro, for example, wherein they've spoken about how the election season might hamper the guidance for FY25 as well as the order inflow for FY25? Is that a negative? Or is that priced into businesses like L&T and some others in the construction stroke infra space?
So I think, specific to the name, what you mentioned, there are 2 components of it, domestic business and international business. The more muted kind of a, guidance is more on the international side. Domestic side, it is only a quarter kind of a thing, because during election time, everybody knows that no major capex new announcements or the actual project commencement, all these things basically get kind of a hold kind of thing. But you are also aware that because it is on hold, that's why in fourth quarter they get most of the orders before election. And in capital goods, people focus on order intake rather than the revenue. Current order intake becomes your future revenue and then future profit as projects get executed. So I think international is a little bit more worrisome right now compared to domestic. And since the company, what you mentioned, is having two major segments, both on domestic as well as international, that kind of, to a certain extent, that's why Street has a little bit downgraded their numbers.
Okay, but
we currently do not own that name. Just to put a disclaimer, we do not own that name right now in the portfolio.
Yeah, but do you believe that it could be a bit of a cloud on the overall construction infra space, that maybe the election season curtailment might last not just till June 4th, but maybe a month until post that as well, until the budgets are out, therefore maybe avoid that pocket, or nothing like that?
No, I think, the markets are very, very efficient enough. So market is already discounting that for next 3 to 4 to 5 months, probably, maybe up to September, you may not see a large new orders. But then what will happen? Everything will bunch up in December and March. So whether you should play for June or whether you should play for December or whether you should play for March. And that's why a little bit you need to keep a little bit, medium to long term view. I'm not saying take 10 years view, but at the same time, don't take just 1 quarter view. And importantly, most important, Neeraj, is you need to keep factoring what is priced in. Whether my stock is already discounting 30% order intake for next 3 years, then probably everything is priced in, and I need to be a little bit margin of safety is not in our favor. But if you think it is only 10% compounded order intake is priced in, then probably there is a positive surprise for investors.
Makes sense. Rajesh, the other aspect is what's happening to businesses like Asian Paints, for example. I mean, we've seen the last 2 years, DMart virtually go nowhere except for the last 3 months, let's say. But there was a time period correction. For Asian Paints, we've seen the same. And now that heightened competitive intensity, presumably, is bringing out a margin correction as well. In a business which is blue chip, showing volume growth. But people are being a bit hesitant. What is your own thesis of what to do with some of these expensive stocks, which might be showing volume growth, but we don't quite know if the revenue growth will match that volume growth?
I think you are on dot, Neeraj. I think what is most important is the profit growth. Ultimately, that's what we all are paying for. And historically, if you look at many of these companies, again, there are 2 buckets. There are companies which have delivered 18, 20, 25% earnings growth. And there are companies which are, of course, blue chip companies, extremely expensive, but reported only 10% compounded profit growth for last 10 years. So there is a distinction between these 2 categories. Am I right? There are 2 buckets. And as a fund manager, our focus is where we expect the growth over next 2 to 3 to 5 years. Do we expect them to do 15, 20%? If yes, then of course look at valuation and keep selecting. So for example, in that kind of a bucket, we own, for example, please put a disclaimer, like Pidilite. We own Pidilite. And we like this business. We believe that company is doing extremely well. Even if you look at the last quarter, the volume growth has been exceptionally strong. And underlying demand drivers are absolutely intact. Unlike many other players, the competition is very limited for companies like Pidilite. And I think as the real estate demand, because it is 2.5, 3 years lag effect of what gets announced compared to when the waterproofing and everything starts, it takes 2.5, 3 years. So real estate demand now actually of last 2 years will result into revenue for companies like Pidilite. Yeah. So I think there are some businesses which are positioned for 18% kind of a plus earnings growth over next 2.5, 3 years, and those are the businesses which we would love to own rather than just having a blue chip but 10% earnings growth.
That's a fair call, and thanks, Rajesh, for that as well. One more question, Rajesh. Because you in the past been a believer and probably still are a believer of quality businesses. You mentioned that in this interaction as well. And that is not to say PSU banks are not quality. Some of them are extremely great quality. But the last 4 years, the valuation gap between PSU banks and private banks, at least the largest PSU bank and some of the private banks, has narrowed a little bit. There's still some gap there. But as a basket, PSU banks has outperformed private banks over the last 4 years now. Do you think there is merit in this outperformance continuing, or is there a valid reason for large private banks to make a comeback, if you believe banks will do well, that is?
Well, Neeraj, again, very, very, very right question that you ask. And I think my view is probably both can do well.
Okay.
Right. Of course, then one needs to go company specific.
Yeah.
But there is a reason why the PSU banks got re-rated, because first they got de-rated. So whether 0.3 is a right valuation or 0.9 is a price valuation, it can be a subject of debate. But they derated first. Simultaneously, private sector banks got re-rated from 3 times price to book to 6 times price to book. PSU banks got derated from 1.5 times to 0.4 price to book. Last 4 years, 0.4 has moved to 1.1 and 6 has become 3. So right now it is 3 and here it is 1.1. Gap is still big. I'm not saying both will trade at same valuation. Then of course you need to do a case by case evaluation that what kind of risk you would like to basically take and the policy risk and uncertainty and whether you think the management has basically changed these institutions to becoming more systematic. And I think the good point, Neeraj, is look at RBI. I think RBI is doing a super job and they are making sure that the entire banking sector gets protected in such a way that even whether it is a project loan, whether it is a construction loan, whether it is a disclosure norms, whether it is a provision norms, be it a retail, be it unsecured, be it a credit card, be it a project finance, across the board, they are tightening the entire system to make sure that the credit cost remains low. That's very, very important, because you are cushioning the banks enough for the future shocks. And it means basically they are suggesting to the bankers that please be conservative. It is very easy to lend money to someone, but it's very difficult to get it back. And I think that basically leads to a little bit kind of a re-rating structurally, in my view, for even PSU banks. And we own both. We own PSUs, we own private, we own NBFCs. So, there is no difference for us. Of course, we need to be selective within that.
Great answers, Rajesh. Lovely having you. Look forward to having you more. But thanks so much for joining in today and giving us your thoughts.
Thank you, Neeraj. Thank you very much.
We need to slip into a quick break. Be back with LNT.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna Mana Hai. Co-powered by Canara Bank. Together we can.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting.
Hello and welcome to Earnings Edge on NDTV Profit. My guest today is from Larsen & Toubro, Mr. Shankar Raman, who is the President, Whole-Time Director and CFO of the company. Mr. Raman, thank you very much for joining us on NDTV Profit. We've seen your numbers. We just wanted to assess how the economic climate is with respect to infra projects, because we've seen some kind of slowdown happening in Q4, and that you predicted as well, because going into an election there may be some slowdown. But how do you see FY24, and when do you see this see the pickup in orders coming in?
Good morning, Sajid. Good morning to all the viewers. I think we are extremely positive about the months that are lying ahead in the rest of the financial year. It is to be expected that when we have a major national event like an election, that there is going to be some amount of interruption to the normal flow of transactions, particularly when it involves capital outlay and investment programs. But the good news is much of the programs that were launched over the last 3.5 years are well into their execution phase, and many of them are also nearing completion. So what we expect to happen, let's say post July, August, when the new government settles down, the bureaucracy assumes charge, etc., is a completion of a lot of these which are pending completion, which will feature the initial period. But we expect the government to sustain their investment-led growth program. If you really look back, this model has played very well out for the government, both from an economic point of view and also from a political point of view. I think we've been able to address a lot of social issues in the process of creating and strengthening the infrastructure of the country. Obviously, trade and commerce have benefited, and those are borne out by numbers. I think India stands out as such a shining alternate to the gloom and doom that we see in the economies elsewhere. Either they are caught up in military strife and geopolitical tensions, or they're really caught up in the inflationary spiral. And many of them are going through stagflation as well. So India is a very refreshing change, and I think we are quite fortunate that we are in our business staying very relevant to the growth model that India is pursuing. So we are optimistic. I think from July, August, we expect things to get back to normal.
Give us a sense of the kind of prospective pipeline that we see in FY25, and do you see order inflows or the tender openings happening only post July, August, and so the second half would be much more concentrated with respect to the kind of order flow that will come in?
Sajid, it will happen in two parts. One is all the bids that have been responded to the request for proposals will get processed and get opened. So that will be the first one. Assuming there is continuity of the economic policy, I think we should expect those awards to come in and then the programs to get kick-started. The second part of this is new programs. Now, there are several programs which are actually initial packages of a large nationwide connectivity. Be it the rail corridor, be it the interland connection, be it the trade corridors, the logistics distribution systems. There are several things which are in their initial phases. The country over the last 3-4 years have invested in some segments of those, and those would require completion, because the economic benefit of those programs will really flow through only if they are completed end to end. And we do think the country will get connected increasingly over the next 10 years. The country will get connected fairly deeply by multi-mode. And that could ensure that a company like us, who straddle various segments of infrastructure, remain very busy and relevant.
Sir, if I look at your guidance, you've given a 10% growth guidance for the order inflow. If we translate that into what it's going to come through in domestic order inflow, you is looking at the domestic order book or order inflows going up by nearly 30% in FY25. Do you see the way the orders will flow out, you'll be able to do that? And also give me an assessment of how order flows are coming from the Middle East, because there is one thought that there has been peaking of orders coming from Middle East, and so there will be some slowdown that's coming from there.
It has to be looked in the context of FY25 being really a 7, 8, 9-month period. So when we talk about a 10% growth for FY25, it virtually on an annualized basis could mean upwards of 15%. So on the back of a 30% growth in FY24, a 15% growth is a fairly robust estimation of the opportunity. When we look at the opportunity pipeline on a trailing 12, on a forward 12-month basis, we almost are arriving at somewhere between 12 and 13 lakh crore of prospects. Roughly about 7 lakh crore is Indian opportunity and 5.5 lakh crore is international opportunity. The Indian opportunities are spread across the various sub-elements of infrastructure and energy. I think the energy transition is a major catalyst for some of the investments that would happen in the energy area. Then we look at international. I think Middle East has been a large contributory. And the changing dynamics in Middle East is very noteworthy. Earlier, Middle East used to be largely projects in the area of oil and gas. But over the last 5 years or so, Middle East has started broad-basing its infrastructure development program. It has started building cities. Middle East was always known for road connectivity. It started developing rail connectivity and also urban transportation. Fact that Middle East is getting positioned as a destination for tourists. Dubai was always that, but beyond Dubai, Middle East was not really known for a destination for tourists, and that is changing. The socio-economic order also in some of the conservative countries there are changing. Given all that and the need for that local population to be gainfully employed, the investment programs funded largely by the steady oil price at about $80 or thereabout per barrel is giving confidence to the government that they should embark on building cities, building roadways. And when you talk about building cities, you talk about rail network, water network, sewage treatment, and theme parks, and what have you. So all of this together makes Middle East almost mirroring India in terms of potential for the breadth of infrastructure investment. And L&T feels quite privileged that its capability has got demonstrated in that market over 20 years. I think wisdom of our earlier generation of leaders positioned L&T as a very credible player in the markets. And year on year, we've been delivering projects to the Middle Eastern customers. So between India and Middle East, I think we are bang in the middle of extremely positive 10, 15-year period.
My last question to you is on your strategic vision, because you mentioned that 14% CAGR growth for order inflow and 15% for sales is the target by 2026. And so far, actually, you have been ahead of the target. If I look from FY21 to 24, it's around 20% in order inflow and 18% in sales. Do you expect to continue with this kind of growth rate? Because this year may be a blip, but it may, next year or the year after. Do you see the FI CAGR to be in the same range by FY26?
I think we are at the moment, as you rightly said, running ahead of the plan. We hope to hang on to that lead and enter the last year of the plan with sufficient cushion in the bag. In all probability, both in terms of order inflow and in revenue, we will outperform the plan as we see it today. Of course, this has to be assessed because another 2 years have to go past. And in the third parameter, which is profitability measured by ROE, we had guided the market that our aspiration is to reach 18%. As we speak now, we are at 15%. We started the journey at 9%. So we've come a long way from 9% to 15% through capital efficiency, productivity improvement, profitability improvement, etc. We expect to continue on that path and hopefully meet that target as well. So we are expecting successful completion of the 5-year plan as we see things today.
Mr. Shankar Raman, it was a pleasure talking to you today. Thank you very much for joining us on NDTV Profit.
Thank you. Thank you very much.
Your vote has the power to transform the future of a nation, which is the world's largest democracy. India stands at the center stage of the world today, and it's important to make the coming years count. I also have a message for the new voters. I understand the nervousness that sets in because it's your first ever vote and you want to make it count for a better future. Analyze the options carefully to understand the vision of the leader that you're voting for. Let us all come together and make one of the most important decisions in the history of a nation. One that will positively affect this crucial decade for the country.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है. Co-powered by Canara Bank. Together we can.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others,
Hi, I am Ashish Chauhan, MD and CEO, National Stock Exchange of India. As we all know, vote is an important right, but it's also an important duty for every citizen of this democratic country. On behalf of all my colleagues at NSE, all my brokers at NSE, and all their employees, we urge all Indian citizens to go ahead and vote in this election so that we get the government that we want. We firmly support NDTV India's initiative of Pledge to Vote and urge every Indian citizen to vote in this general election. Thank you.
Election jitters keep benchmarks nervous. Sensex inches closer to 73,000 mark in a volatile trade while Nifty crosses 22,100. Most sectors in green, led by FMCG, metals and pharma. On the other hand, IT and realty trade with cuts. And a big positive for India, JP Morgan bond inclusion is on track. The firm says most of its clients are ready to trade. And more earnings on our radar. Auto majors Tata Motor and Eicher Motors, along with Cipla, are set to report their March quarter numbers today. Hello and welcome. This is the F&O show. And I am Agam Vakil. In this show, we take you through all that is happening in the futures and options space in Indian equity markets. A quick look at how things are panning out as far as the markets are concerned. And at the moment, what we are seeing is well, some strength returning. I am not entirely certain of whether or not this is about a short covering, but well, strength all the same, because the Nifty is up by 0.6% at the moment, and we are looking at the Bank Nifty up around 0.5% as well. So we are seeing some sort of positive traction. Of course, yesterday's day of trade was mired by a handful of reasons why we saw such a sharp cut. Well, the Nifty weekly options expiry notwithstanding, there were more concerns about the earnings coming through, and several other factors with respect to certain glitches, certain technical glitches when it came to, FPIs and their flows there. But it seems like those concerns have now abated, and we're starting to see a little bit more traction towards the positive end at the moment. Now, does this mean that we can see consolidation going forward? Does that mean that there is more weakness in store for the benchmarks? Let's wait and watch on that one. But for now, of course, the benchmarks are steady. The Nifty is above the mark of 22,000, comfortably so, and we'll have to keep a close eye on some of them. That's as far as the Nifty is concerned. Let's take a look at the broader markets as well and see whether or not there is a little bit of recovery there, because it does seem like there has been a sharp cut earlier on the session, and then there was a little bit of a U-turn there. So the mid-cap index is up 0.4%. The small-cap index is up around 0.3% as well. Just a notch below what the benchmarks are doing, but in the green. And that is the big positive, perhaps, at the moment in this hour. Now, let's take a look at the futures and options space. As far as the Nifty is concerned, that's where we are, in fact, seeing, unwinding with a decline of less than 1% at the moment, even as the underlying advances by around 0.6%. And as far as the Bank Nifty is concerned, let's pull that up as well. And that's where we are seeing surprisingly more addition in open interest, even as the index advances by around 0.4%. And I say that surprisingly is because over the course of the last two sessions, when the index came off, we were continuing to see increase in OI. And today, well, the index is taking a little bit of an opposite turn, but the OI interest or OI addition continues. So that's something, that's another important factor to make sure to have in mind. But from there on, we talk about the options market. Now, as far as the option market is concerned, over the last 2 to 3 sessions, what we've seen is a max OI move from 23,000 calls to 22,800 calls, and eventually down to 22,500, where it's not a max OI call, but there has been substantial amount of open interest accumulation, not unlike and very close to the mark of 22,800 as well. Now, and of course, all the traction on the put side had shifted from 22,000 all the way down to 21,500. So it's a very broad range that we are working with, but I reckon that this morning's action will have changed a lot, and we are once again looking at your overall put open interest distribution at the 22,000 mark, a substantial amount. And of course, on the higher end, we have about a 500-point range at the moment. But because of the fact that the India Volatility Index remains elevated above the mark of 18, the expected range as far as the Nifty is concerned on a week-to-week basis until the run-up to the outcome of the general election, it's going to remain relatively large, the range. So that's another key metric to watch out for and bear in mind. But on that note, let's get in our experts for today. We have Jatin Gedia of Sharekhan by PNB Paribas, and Amit Goel, founder of Amit Ventures, who's joining us on the show. Gentlemen, good morning, and thank you so much for joining in. Jatin, I start with you on your view on the Nifty going forward. What's the way ahead, and what is your assessment?
Good morning, everyone. So as far as the Nifty is concerned, we believe that the Nifty has already witnessed a correction of around 850 to 870 points in the last 5 to 7 trading sessions. So what we believe is that the Nifty in that sense is a bit oversold. And considering the fall, the Nifty has now reached the crucial support zone of the lower end of the rising channel, within which it has been trading since the last 4 months, since mid, I think, January. So it has reached the lower end of that range. So I think that there is a strong possibility or probability is high of a short covering rally from current levels. So we are playing, or we are expecting a short covering rally to kick in. Today also we have the last trading session for the week. So some of the shorts might want to just book out their profits. So that would also propel some kind of covering in the frontline index. So we are trading or suggesting longs in the case of Nifty. We believe that on the upside, 22,280 to 22,300 are the levels that we are expecting in the pullback. So I think with a stop loss of 22,000, one can go long on the Nifty.
Okay, that's Jatin's view on the Nifty. Amit, good morning to you as well. Welcome to the show. What is your assessment of the Nifty?
Hi, good morning, Agam, and to all your viewers. Let me first and foremost wish everyone a very happy Akshaya Tritiya. Let's hope that the May month is, glittering like gold. Having said that, the view on Nifty, structurally, I still remain a buy on dip candidate. Okay, notwithstanding the recent volatility, but one cannot take away the fact that Nifty has been in a corrective mode after creating a recent top. But right now, what would a trader want to do? Creating fresh shorts at these levels, at these lower support levels, seems to be not offering a great RR. So I tend to concur with Jatin's view that the better position would be to play the contra view here and try and seek opportunities to go long in the index, keeping 21,000, 22,000 as your technical stop. Since I trade Nifty in my own books, so giving a proper trade would be a little out of the question as per the SEBI regulations. Though I do have a view on Bank Nifty and I could offer a trade setup there.
Right, absolutely. We'll come to Bank Nifty in just a moment. But I actually, let's take a look at the Bank Nifty constituents at the moment, and I wanted to see where there is a pull and push or any sort of traction there when it comes to change in OI and the kind of bearing that a lot of these counters may have on the Bank Nifty. So of course we know that the Bank Nifty is advancing by around 250 odd points. What is in fact playing in favor and giving you that tailwind here in today's day of trade is the usual suspects, your private sector banks, your large cap private sector banks like ICICI Bank and Axis Bank. Both of them are up and about. Axis Bank to a certain extent higher by around 1.3%. HDFC Bank is absolutely flat. It's only marginally in the green. And it looks like SBI is building on the kind of gains from yesterday. So that's the other aspect that you need to keep an eye on. Now, in terms of stocks which are seeing unwinding, we do have Kotak Mahindra Bank, but that's also flat. On the whole, 10 out of the 12 constituents are up and about, and that's the reason why we're seeing that advance. The question really is that, will this hold? So we were talking about the Bank Nifty, and our experts were also forthcoming about it. Amit, I come back to you on your view here, your assessment.
Yeah, Bank Nifty is also now looking to take support at the lower levels. What we've been discussing over the last month and a half, that Bank Nifty, after creating this recent top, has given away a lot of those gains and is now seen taking support at these lower levels of 47,000, 47,500 levels. So creating a fresh short again in this index would also not offer a great RR. Since Bank Nifty is also seen taking support at a structural impulse upward trending channel. So what I would like to do here is I would like to set up a slightly interesting strategy, which I would like to call a rolling short strangle for the next expiry, that is the 15th May. Then I would take a fairly large range of about 1,000 points on either side and sell the 49,000 call and sell the 47,000 put of the 15th May expiry. This triangle gives us should give us net as a max credit or a max profit of about 2,250 or 2,500 levels. We will keep a rupee stop loss of about 2,000 and trail from there. When I say it's, we could look at it from a rolling perspective. What I mean here is, since the Bank Nifty has fallen at a support level and is taking support and trying to move up, though structurally over the last few trading sessions it is on the down move. So there is a lot of mixed feeling here. So what I want to do is I don't want to take a directional bet on Bank Nifty, and hence if there is a move of about 500 points on either side, we will shift the entire triangle that we set up originally. So for example, if Bank Nifty moves up by about 500 points from the current levels, we will shift our triangle of 47,000 and 49,000 to 47,500 and 49,500, thereby having a delta neutral stance and wait till the expiry to collect that credit as profit.
Right, fair enough. And of course, the idea is to maintain your delta well at zero. But, and of course, Jatin has also mentioned that in his earlier response that he's also looking to buy the Bank Nifty with a stop loss at 47,400, target of 48,000 to 48,200. But moving on, let's also address how things are shaping up as far as the stock futures are concerned. And that's where, once again, where we're going to take a look at whether or not there are more gainers than losers here. We'll first pick out the list of all the stocks which are seeing an increase in open interest in today's day of trade, and that should be on your screen for you, where there is in fact some longs or some shorts being built up. A lot of longs are in fact, and it's turning out to be quite a good day, specifically given the kind of session that we've had yesterday. So Escorts is up and about, as is BPCL. And I reckon that BPCL, of course, is reacting to earnings. Apollo Tyres is flat, and Sun TV and ABB are also advancing at the moment. So longs across all these 5 counters that we have for you on your screen there. What about stocks which are seeing unwinding? Let's pull that list up as well. And we have long unwinding for something like a Britannia. But besides that, short covering for Canara Bank, Bata India, Jubilant Foodwork, IDFC First only marginally moving. Wouldn't necessarily want to call that short covering, but you never know. But that's as far as your buzzing counters go in terms of change in open interest, decline or in advance. What are the other stocks which are on our radar for experts? So Jatin, I come to you on stocks that you have on your mind this morning.
See, considering that we are expecting a pullback, so I'll bet on the heavyweights of the index. We believe that ICICI Bank, which has corrected and has reached a crucial support zone, because the uptrend is up, I'll just trade the resumption of the up move. So I'll go long on ICICI Bank. The stop loss which I will keep is 1,100, and on the upside I'm expecting 1160 and 1170 on the upside. So I am expecting from the Bank Nifty ICICI Bank to outperform, and hence I have selected ICICI Bank. Another stock which we like is from FMCG pack, that is Hindustan Unilever. So Hindustan Unilever has I think formed a short-term bottom, and now we are expecting some good up moves in the case of HUL. So you can buy with a stop placed at 2320, and target on the upside will be 2430 to 2480.
Okay, so those are 2 recommendations coming in from Jatin. Amit, stocks on your radar this morning?
Yeah, I have a couple of recommendations. One is from Asian Paints, and the other one is the IT major Infosys. Let's talk about Asian Paints first. Asian Paints has been structurally moving down for a fair bit of time. There has been a lot of overhang as well, and the recent up move a couple of weeks back has also been sold into. Technically speaking, Asian Paint is looking to give a is looking to make a bottom here and is technically trying to give a reversal pattern on the daily chart. I also happen to see a little bit of a positive divergence on the RSI on the daily time frame. Since we have the results of Asian Paints today, I would want to plan a limited risk strategy here, known as a bullish call butterfly, in which I will sell an OTM call, 2 lots of 2,900, and we buy wings of 2,800 and 3,000 strikes. The max profit in this trade would work out to about 20,000 rupees at expiry. But what we are really looking to do is try and cash in on this short-term reversal outlook on Asian Paints and target a profit of about 2,000 and trail from there. And as always, I'll keep a rupee stop loss of about 2,000, making this trade a 1:1. Just ensure that you buy the wings and not keep a open naked position in Asian Paints counter, simply because we have the earnings today and the stock could have a more than expected directional move on either side.
Right. So, well, that's as far as Asian Paints is concerned. Very well explained strategy out there. But Amit, what is the other one which is on your radar, you said?
That's Infosys, a bellwether of the IT pack. After the results, there was some expected up move on the IT counters, but that seems to have been sold into. And given the overall weakness in the market also, we have not really seen Infosys breaking out on any new range, out of any new range. So on the chart, if I see Infosys has been displaying some bit of resistance at around 1,450, 1,500 levels, and has been looking to take support around 1,350 and 1,375 levels. So what I would like to do is, I would like to again play a non-directional bet here, wherein we look to sell the 1,500 call 1 lot and sell the 1,340 put 1 lot. This is a strategy recommended only for traders who are well versed with a short strangle strategy, because this happens to be an unlimited, theoretical unlimited strategy, because we have naked positions of call and put on both sides. So we will aim for a max profit of about 5,000 and keeping a rupee stop loss of about 2,500. This is an aggressive view. Conservative traders are recommended to buy hedges and convert this short strangle into an iron condor, thereby keeping a limited risk on the books. So, you know, you want to play this on a non-directional aspect, whether you want to do it by the short strangle or an iron condor, really stems from the fact of your risk management comfort levels.
Right. Okay, there you have it. Well, two largest option strategies from Amit there as well. Well, on that note, we're out of time on this segment, so I'm going to take a moment to thank both our experts, Jatin and Amit, for joining us and taking us through their views on the markets and well, helping us with a whole host of well, trading ideas and strategies out there. Well, we slip into a short break, and on the other side, we get you all the action from the commodity space. Stay tuned in.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna Mana Hai. Co-powered by Canara Bank. Together we can.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one.
Welcome back. This is the FNO Show. Time to take a look at the commodity space on Commodity Tracker. We have Ajay Kedia, Director at Kedia Advisory, who's joining us on the show. Ajay, good morning. Thanks for joining in. You have a long list of, securities that we can in fact look to trade. But on the occasion of Akshaya Tritiya, let's start off with your view on gold.
Yeah, very good morning, Agam. Today is a very auspicious day of Akshaya Tritiya, and we have seen last couple of years we have got a double-digit return, and still the fundamental remain very much bullish. Let it be geopolitical tension or interest rate cut scenario from Fed. But for the intraday perspective, we see yesterday we have seen after a data point, gold prices has shoot up about 72,000. So we still expect this rally would continue. In international, we can see a level like 2360, 2365, but on domestic side, one can try to take long position around 72, 72, 100. We can see a bounce towards 72, 500 on higher side. Similarly, in case of silver, that is a base metal also, we have seen a good consumptions and import figures for silver also. Gold-silver ratio is trying to pull down again, which shows silver will outperform gold. So here also we have already breached the level of 85,000 that could continue to flow on higher side. So one can try to take long position around 85,000. Maybe immediate target could be 85,800 to 86,200.
Okay. Well, moving on, I believe you also have a call on silver.
Yeah, as we have discussed, silver seems to be more volatile and more attractive as compared to gold, because gold-silver ratio is now coming down, and with this support from the base metal, we expect 84,800, 85,000 is a good to buy for silver. Immediate target could be 85,800 to 86,200.
All right. Well, from there on, we talk about crude, which is also trading at elevated levels. What's your take here?
See, I think the fundamentals are being slightly colliding each other, because one side we have seen due to geopolitical tension, escalations has came down, and we have seen Brent prices came down from the level of 90 to almost 82. But I think the demand slowly and steadily improving, Saudi increasing their premium for Asian countries. So I think one should take long in crude oil around 66.20 on domestic side with a stop loss of 65.50. We can see a limited upside to the tune of 67.40. Overall, Brent seems to be trading in a range of 83 to 86 only.
Okay. And of course, the other one on your radar is natural gas as well. What's your assessment here?
See, natural gas up till now, we have seen the inventory is still on the elevated level as compared to last year. It is around 33-34% higher. But currently the weather is supporting, and also the production from US side, EQT and Spec Energy has cut down their production, and nearly 9% shortage would be there for new production. That is really supporting the prices. So I think 192 is a great level to enter long position in natural gas May futures with a stop loss of 188. Maybe we can see closer to 200 level mark, that is 198 level for natural gas on domestic side.
And of course, then we have your base metals, which is also in focus, zinc and copper. What's your take here?
See, both the base metal are getting very good support from the numbers what we have seen from the China and European nation. So I think unless and until data doesn't come changeably, we can see support in base metal prices. As of now, dollar index has been very much steady. We would see shortages, supply side shortage, which is supporting copper prices. So one should take long around 862 with a stop loss of 858, and target could be 870 in case of copper. Whereas we have seen zinc prices also moving with the positive bias only. One can take long position in zinc also with the overall target of around, let's say, 245 to 46 level.
Right, Ajay, we'll leave it at that. Thank you so much for joining us and taking us through your views on the various commodities that we have addressed. On that note, out of time on this show. Well, you're watching the F&O show, but lots more lined up on the other side. Stay tuned in.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna Mana Hai. Co-powered by Canara Bank. Together we can.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages, and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voice.
Good
morning. Welcome. You're watching NDTV Profit. I'm Harsh Saita, and this is the small and mid cap show. Quickly, taking a stock of where the Nifty 50 is at. We're off the day's highs, but nonetheless well in the green. So some reason to smile. 1/3% higher on the Nifty 50 as we see it. And in terms of contributories, let's just quickly pull those up. We have a whole host of them, and around 35 positives to just about 15 negative contributories on the Nifty 50, led by something like an ITC around contributing roughly 14 odd points to that Nifty gain. Also something like a Bharti doing well. The IT pack not particularly participating today, doing quite poorly in trade. And with that, let me quickly pull up the sectoral indices if we can and try and dissect those, because IT clearly not participating today, around 4/5% lower. Even realty stocks are seeing some amount of pressure, but outside of that you're seeing a whole host of sectors in the green. So a positive day of trade on that count. Look at metals, PSC, all of which are doing fairly well. Even pharma doing well, 1% higher. Let's also try and pull up the Nifty IT constituents and try and dive slightly deeper and see what's happening there. Outside of a Coforge, everything in the red. So essentially the pressure on IT is across the board, led by Persistent, 2% lower, and Infosys, which was a gainer in trade yesterday on a very tough day of trade, but today down 1.4%. Even something like a TCS is down 1% or so. In terms of the small and mid caps, let's pull up those indices. Largely trading in line with where the Nifty 50 is currently at, 1/4% higher on the mid cap index. Even the Nifty small cap just about 1/10% higher. So maybe slightly underperforming the Nifty actually. Stand corrected there, but that's where we are at where the small and mid cap indices are concerned. Couple of stocks in focus if we can quickly throw some light on results. And Intellect Design is trading 12.5% lower. Something like a VST Tillers also down roughly 4.5 odd percent. In terms of the gainers, a BPCL down 3.7%, and Abbott, a BPCL up 3.7%, and Abbott up 2 odd percent. So those stocks doing quite well in trade. Also, if we can pull up where a Relaxo is at, decently poorish set of numbers. Revenue also still in the decline, but the stock doing fairly well in trade, 4/5% higher in trade. Well, seems like some pain for Relaxo seems to have ended despite a poor set of numbers. Let's also pull up where the life insurers are before I move on to our first guest for the day. Something like an HDFC Life up 2%, and SBI Life pretty much around the 0.5% kind of mark in the green nonetheless. Max Financial up 1.8 as well. So some life insurers in focus. LIC initially up 2.5 odd percent if we can have the chart. Now cooling off in terms of its early morning gains. So that's where we're at, but we'll stick with the PSU pack like LIC. Indian Overseas Bank declared its numbers, and we have Ajay Kumar Srivastava, the MD CEO at Indian Overseas Bank, who's going to come in and help us break down some of these numbers and what should really expectations for FY25 be at, because it's a good set of numbers. So first off, overall growth seems to be coming in quite well for you. 16% on advances, nearly 10% on deposits as well. What does FY25 hold in store in terms of growth? So I believe you're on mute. If you can please unmute.
Yeah, good morning. Thank you.
Hi, good morning.
Yeah, growth, as you spoke also, last year growth has been deposit and credit both sides. Total business also growth has been good. Earlier year also 22, 23 also, if you look at those numbers, the growth was good only, I will say. So over last 2 financial years, the growth has been consistent, and if you look at our performance quarter on quarter, so you can see consistent improvement in all the sectors, all the areas. The guidance for financial year 25 is that we intend to grow in the same speed. Of course, deposit we like to grow more. The internal guidance which we are looking at is a growth of around 11% in deposit. And credit we intend to grow around 13 to 14%, and that 13 to 14% will come from all sectors. That is the plan.
That's great, sir. I want to also try and bring to everyone's notice that your margin number has actually gotten better in FY24. What's led to this kind of a margin improvement versus FY23 when the entire industry is seeing a bit of a lag? Is it the adjustment of your loan to deposit ratio is what explains this, or could you just give us some perspective?
Yeah, it's a result of all these factors. First thing first, we have focused on increasing our interest income, and we have gone a bit aggressive in those areas where we are getting yield which is more than the normal. That is one part of the strategy. And on deposit front, if you look at my deposit portfolio, 43 to 44% of that consists of CASA, which we traditionally call at low cost deposit. And over last almost 2 years, this 43 CASA percentage of above 43% we have been able to maintain despite increase in other forms of deposit. So we are, the term deposit is also growing, but CASA also is showing a substantial growth. And last year, if you look at the numbers, 9.6% in my total deposit growth, but CASA has grown by almost 10%. So that is another part. And these two parts mainly have contributed in protecting my margin and an improvement also. So from 3.12, we have moved to 3.28, and we hope to stay there.
Sure. Okay, so can we take it as 3.3% being the normalized kind of margin for FY25 and beyond?
Yes, we are looking at those numbers only, maybe 2-3 bips here and there, depending on the circumstances, but of course, more or less will be there.
Sure, I don't think the market will complain if the margins fall by 2 to 3 basis points. Anyway, so got your point, sir. With regard to operating expenses, that one has remained elevated. Your cost to income ratios have inched up a little bit, by quite a bit. Is it just wage revisions, or is there something else at play?
No, it's only wage revision.
Understood. And therefore, where would cost to income trend? Where would you like it to trend? Because it's above the 55% mark now. Where would you want it to be at? Where would you be comfortable? What kind of a number?
It has to be less than 50 only. Ideally, it should go below 45, but over next 12 months, the plan is that we need to bring it to below 50, maybe 48 or 49, and then next year we can take it forward.
Okay, so FY25 will come below 50. Is that a correct metric to look for?
Yes, exactly.
Okay, understood. And that is one of the levers which will help you build on the ROA number. So currently at 0.8, can we expect full year FY25 ROA to be in excess of 1%?
Yes, that is what we are looking at. And hopefully by the end of this year, it will cross 1.
Understood. So all 4 quarters, would you be looking to cross 1, or will it just be the latter half?
It will be in the latter half. First half it will be difficult, but latter half we intend to go beyond that.
Sure, and overall will be above 1% for FY25, roughly.
Yes.
Okay, understood. Any other levers that you look for to push that ROA number higher outside of growth?
Yeah, it ultimately boils down to profit numbers. And for profit numbers, we need to generate income.
Yes.
So income generation is going to be the concern, not only interest income, but non-interest income also. We are aggressively focusing on that. So with increase in numbers this year also, you can see NII, we have grown by almost 19%.
Sure. And right. And sir, you suggested, you're focusing on higher yielding loans. Could you elaborate a little bit on that, try and give us some flavor on what the focus is more on, and going forward, would that be a larger focus area, and how is the loan mix evolving as a result?
We are focusing on mid-segment MSME.
Okay.
That is one part. And in MSME, those sectors which are coming under PLI and which are under the priority of the government, that is another sector. And in agriculture, like ethanol and food processing centers, that we are focusing at. Unsecured personal loans, we are absolutely not aggressive on that. And on existing customers and existing businesses, also we are trying to increase the yield by way of negotiation. So these are the stages through which we intend to increase our interest income.
Sure, sir. Sir, absolutely any impact of project financing and the new norms on your bank?
Our portfolio as far as project funding is concerned is less than 10,000 crores, not a substantial amount.
Sure.
And the second part, I would like to say that it's still in draft guidelines only in that form. The final guideline is yet to come.
Understood.
It will be mature to comment at this stage.
I understand. But sir, just a flavor, how quickly is it growing in your view? And do you believe that that growth will come off as a result of this if this were to be implemented as is?
I don't think the growth will be subdued. Okay. The lending will happen as usual. Only thing that the cost part of that will be borne by the borrowers. But growth will happen, lending will happen.
Understood. And you will have to provide, if this draft is implemented, you will have to provide for this 10,000 crore book. You'll have to start providing for it starting FY25. Will that at all impact your numbers, or do you still expect a 1% ROA despite these provisionings coming through?
We have not gone into details as of now because it's still in the draft stage, but some impact will be there, and I don't think it will be substantial and it will impact my ROA. I don't think so. Some impact will be there which can be offset by, of course, passing on the cost to the borrowers.
Understood. And sir, in the last year or so, how much has this portfolio grown by?
Project funding?
Yes, sir. If you can give me a ballpark, that's fine.
Ballpark will be around 5 to 6%, I think. I'm not very sure. I can give you the data later also.
Fair. So, sir, single digit is...
Single digit, yes.
Single digit. Understood. Sir, last off on recoveries, what's the expectation for FY25 and what are the numbers like for FY24?
Yeah, for FY24, total recovery was around 4,700 crores.
Right.
And one of the important part of this recovery is that more than 50%, 52% has come from technically written off account. That is one part. And second part is that for this financial year, we are looking at a number of 6,000 crores of recovery. And we have put 92 accounts, NCLT and non-NCLT both together on sale, amounting to 13,000 crores. We are getting good response from the market. We do hope that this financial year, more than 6,000 crores recovery we will be able to do.
Very, very interesting. On a book of 2 lakh crore, 6,000 crores of recovery. Thank you so much, sir. It's been a pleasure speaking with you. We'll keep our eyes glued on to Indian Overseas Bank. Thank you for this conversation. But time to slip into a very short break. More on the other side, we'll be speaking with the management of Alembic Pharma to talk about Q4 FY24. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna Mana Hai. Co-powered by Canara Bank. Together we can.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can
Welcome back. You're watching the Smid Show on NDTV Profit. I'm Harsh Saita and we're joined in by our pharma analyst. We're going to speak with Alembic Pharma and I have with me Varsha Chandani as well to speak to us along with we have, and let me welcome on board Mr. Shaunak Amin, who's the MD at Alembic Pharmaceuticals, to talk to us about Q4 numbers. First off, welcome Mr. Amin. It's good having you here.
Yeah, good morning everyone. Thank you for having me.
Right. First off, let me ask you with regard to the top line as well as how new launches are really aiding your numbers in a certain sense for Q4 and what can one expect from FY25 as a result of this?
Yeah, so a couple of things. I think we had a strong recovery quarter in Q4 versus the last year performance. I think new launches have been an integral part to the growth that we generated this year as well as for the quarter. In the US segment. Going forward, I think we expect this level of stabilization to continue. But again, I think we don't give forward guidances, so I'd be unable to put down an actual hard number on that.
Mr. Shaunak, Varsha on this side.
Hi, Varsha.
We did see improvement in margins year on year and quarter on quarter as well. So is there any more opportunity left for margin improvement considering the new facilities that has been generating revenue for us, and we have been guiding that will reduce our R&D cost as well?
Yeah, so I think on the margin front, a bulk of the margin expansion was driven by more volume throughput in some of these facilities. Hence, better margins was a major result of this. I think going forward, as long as the volumes do continue, I think there's significant opportunity for margins to stay at this level or maybe see a slight uptick on this front.
Okay, Mr. Amin, how quickly will this happen and where should the margin number lie at?
Like I said, I think we don't give a forward guidance on things, so it's hard for me to comment on it. But I think our endeavor is to work through better plant optimizations, and I think plant optimization through better throughput should give us better margins. So I think we stay on that path, and I think going forward, I mean, we want to move in that trajectory.
Sure, and therefore, should it be higher teens by FY25? Is that a fair assumption to make?
I would refrain from giving you a forward margin guidance.
Sure.
The markets are extremely volatile. I think pharma has been very volatile the last 5 years. So it's really hard to give a really forward guidance at this point in time.
All right. Just going back to your revenue numbers, we did see uptick in revenue year on year, that's right. But has there been any pressure quarter on quarter, or is there any change in product mix? Because quarter on quarter, we have seen some pressure in revenue.
So I think it's just a matter of lumping. And I think there are quite a few new launches that happen. So I think sometimes that does have it. But generally, I think the product mix, it does not say this has not been the same for Q4 as well as Q3. But I think, the margins and the product mix, keeps evolving as we go forward.
Also, your majority business comes from US, if I'm not wrong. And so how are you seeing the pricing pressure in US markets going forward?
Yeah, so I think going forward, I think the pricing pressure, like we said, we maintained in the call, I think we maintain this level of pricing pressure to continue. We don't see a further deterioration from these levels. So I think from that point of view, I think this is where we see the bottoming of the market.
Okay, and Mr. Amin, what about new launches in FY25? How many are we looking at? What's the pipeline like? And give some color with regard to how the products will look like in terms of how are you looking at them adding up on your top line number, as well as how do you expect them to contribute on the margin side of things?
Yeah, so again, I think our endeavor is to launch, high teens in terms of the US markets. If you go for my filing records, we launched 19 last quarter. I think going forward, we expect, significant launches to happen. But at this point, it's really hard to comment on each launch until actually it gets launched. But I think, new products is an integral part of our strategy. So we do expect to have a significant momentum going forward through new launches, but it's hard to comment at this point in time.
Also, you were expecting debt-free status in FY25. Any view on that?
Yeah, so I think if you see our debt's been significantly coming down over the last 3-4 years. We finished the capex cycle last year. We're actually at the end of it, and then going forward, we don't expect any significant capex or rather new greenfield capex to happen. It just be maintenance capex at this point in time. So I think from that point of view, and if you look at our cash flows, I think we'll be quite comfortable on the debt today, and I think going forward we see a natural reduction of our debt at this point in time. So I think we would be moving closer to a debt-free kind of status maybe in the next year or two.
All right, and also my last question to you would be your API business. If you see that has grown 5% year on year, but over the last 5 years we have seen that business growing almost 15%. Now, how is the API business performing considering the pricing pressure that we have seen? What is the kind of realization that we are seeing and margins going forward?
Yeah, so a lot of the API business that we have is built on a niche and more driven towards global approvals. So at this point in time, there's not much in terms of commercial supplies where we are facing pricing pressures. There has been a bit of slowdown more due to the high base of the last 3-4 years, but I think we're quite comfortable on the API front, and we expect, a little better performance going forward next year on the API.
Okay, Mr. Amin, as you go debt-free, what's the plan with regard to capex? Have you pushed that out to FY26? Nothing in FY25?
No, so like I said, we've been through a significantly large capex cycle in the last 5 years.
Sure.
Almost close to 2,500-3,000 crores.
Right.
So I think at this point, I think the focus for the management is to look at getting these plants optimized, get them up and running through new product launches. I think at this point, we're largely committed to doing that. We haven't talked of any new greenfield capexes at this point in time, but I think we have some work to do in terms of building up our plants through volumes as well as through new launches on the capex that we've done in the last 5 years.
Understood. And what would your utilizations be like, given the fact that you're going to add efficiency and therefore ought to add to margins, just logically speaking?
So, I mean, like I said, it's the multiple plants with multiple levels. It's hard for me to come down to the single number at this point in time.
Sure, sure. And just in terms of broad level numbers, can we expect a mid-teens kind of growth on the top line, at least going into FY25?
Like I said, I think we don't give forward guidances at this point in time. Sure. But if you look at if you look at in terms of market stabilization, US price erosion, India market coming off a high base from 23. I would say that the markets would be quite supportive to drive that number. So that's as far as I'd like to comment on that.
Fair point. As scale comes about, would you expect your return ratios to start to improve again?
Yes.
Is that what one can see? And what internally, as you all invest, there would largely be a target number in terms of return ratios. What would that number possibly be?
So we have some internal numbers. Again, I wouldn't want to comment on that, but if you see our return ratios pre the capex cycle happening, I think the endeavor is to go back to that level. It's not always possible because of the product mix dictates a lot of these numbers. But I think the endeavor is to go back to those kind of return ratios over time.
Mr. Amin, before we let you go, one last question from my side. You are going for product launches. Now, you have reduced your launches in oral solids, considering the low margin business that is. So, what are your product launches going forward? Are they towards high margin products which will actually aid your margins?
So it's like I said, I think the US market, I think it's more dictated by expiries that allows you to launch. I don't think there's a concerted effort on our side to not to launch oral solids. But I think because of our investment in other dosage forms over the last 5 years, I think the composition of our launches has changed more due to the fact that we have quite a few launches in both in the non-oral solid spaces. So from that point of view, yes, we are committed. I think in terms of the margin front, it's very hard to comment on a product launch, before the launch actually happens, when you understand how many people are competing on that market and what is the contours of the competition. So, but I think we try to select products which are, we feel we can get a good, return at a screening phase, but it does not necessarily play out, or rather it's harder to predict it from a very accurate point of view.
Okay, sure. Mr. Amin, I must compliment you for the way you've tried to maneuver this, but we tried.
Listen, honestly, you guys know, the markets are so volatile,
sure.
And it's really, really hard to give any kind of, hard numbers in terms of what the markets are going to do going forward. But
sure.
Yeah,
no,
like I
really
said, I think let me put it this way. I think directionally we're quite confident of doing. I think a lot of the stuff you outlined, I think we're quite confident of moving in that direction. Now, whether that happens, in 3 months or it takes 9 months or 12 months, it's really hard for me to comment. I'll be very honest about that. So
fair. Thank you so much. It's been a pleasure chatting with you.
Thanks, guys. Thank you.
Thanks for your time. But with that, completely out of time on this edition of The Smidge Show from Varsha, myself, everyone who puts the show together. Thanks so much for watching. Stay tuned to NDTV Profit. More on the other side.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna Mana Hai. Co-powered by Canara Bank. Together we can.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things.
Hello and welcome. You're watching Ask Profit on NDTV Profit. I'm Smriti Chaudhary, and this show is all about your stock-related queries. So write to us any of your short-term queries or even long-term investment decisions that you're trying to make. Ask your queries on the WhatsApp number that's flashing on your screen, or through the YouTube live chat, or even through any of our social media channels, and we'll take your questions from there. But before that, let's take a quick check of what the markets are currently doing. You see the benchmarks doing fairly well in trade today, considering the last 2 days. It's up about 0.5% off the high point of the day for sure, trading well above 22,000 mark. And let's pull up the contributors there and see what's pulling the index higher today. A host of companies there. You have something like an ITC that's contributing about 14 odd points to the benchmark. You have Bharti Airtel doing fairly well today, ICICI Bank as well doing well. On the other hand, you have IT names like Infosys and TCS dragging, and that also gives you a view of the sectors. If you can pull that up, and you will see that the two drags today in the sectors are IT and realty as well. IT seems to be doing not so well in trade today, but on the other hand, everything else in green. You have PSC index doing very well, metals up about 1.5% as well. Let's also look at some of the individual stocks. You have in the mid-cap space, something like an Intellect Design that's down about over 12%, 12.5%, and that's on the back of fourth quarter earnings. A couple of other names as well on the back of earnings, something like an MGL that's also down about 2%, over 2% rather. On the other hand, you have something like a Jupiter Wagons doing very well in trade today, up over 9%. Also, now this is the second day actually for Jupiter Wagons. It's doing very well today as well. Hindustan Zinc up 8%. Vijay Diagnostic on the back of fourth quarter earnings as well, up 8%. However, the focus for today is the biggest Nifty 50 gainer, which is BPCL, that came out with its numbers. And just to give you a review of what happened in the fourth quarter with BPCL, there was a revenue and profit miss on estimates, but EBITDA was a beat. You look at revenue that grew only about 1.5% to 1.17 lakh crore. Margins were up, however, to 7.9% versus 5.39% in the previous quarter. You have net profit up 24%, so quite a decent profit there. It's about 4,224 crore rupees. You look at some of the gross refining margins as well. Now, the refining margins were at somewhere around $14 per barrel versus a $20 per barrel a year ago. So slight pressure on the gross refining margins there. But overall, we're also seeing the commentary coming in from BPCL. The call is still on and we're tracking that. And there's some numbers that I'd like to point out. Now, of course, still the call is still on, but just what's come out till now. You look at BPCL's 5-year investment plan. They're talking about 75,000 crore of refinery and petchem segments, 32,000 crore investments on upstream production, 25,000 crore on gas business, and 10,000 crore in green business. So quite a substantial capex plan for BPCL there. But let me also pull in the guests for on the show today. We have Rajat Bose, who's a research analyst, a technical research analyst. Along with that, we have Astha Jain, senior research analyst at Hem Securities, joining us today. Astha, I'll come to you on BPCL first. Now, in the Jefferies note today, we've seen earnings, quite strong profit gain there. But Jefferies pointed out on the valuations front that it's still trading below its long-term average, and that seems to be the point where we're seeing that sort of buying happening, because revenue was a miss in terms of estimates. How are you viewing this from a longer-term perspective?
Hi, good afternoon. Talking about this counter, yes, I mean, the results were the mixed set of bad, but what is fueling right now this, I mean, the run-up which is going on in this stock is that I think, first of all, the capital outlay by the company, which the figures which they have mentioned of about 1.7 lakh crore. So that will really drive the earnings of the company in the future. So that is the major factor, because markets always see the future or the forward-looking performances on the basis of what management is giving in their statement. So they have mentioned about their capital outlay of 1.7 lakh crore, and that is really very strong, which will help the company in posting strong financial performance going ahead. Apart from that, yes, we have seen some sort of gain in their margins also. So EBITDA margin has shown some sort of positive momentum in their quarterly earnings, and that has also, positively surprised the markets. So all in all, and valuation is again on the reasonable side. So all these factors are contributing and indicating higher upside from here, and that is why we are positive on this counter, remain and hold on this counter with a price target of 700 to 720 at the initial level. So recommending hold with a price target of 700 to 720 in the longer term.
All right, fair point. Now, before we dive into the queries, Rajat, I'd like your view on the benchmarks. We're seeing a lot of volatility in the markets. Started off slightly lower than 22,000 levels today as well. Now, trading comfortably over 22,000. But what are the key levels you should watch out for in a market that's extremely volatile at this juncture?
First of all, to talk about the Nifty, I would say that Nifty needs to move up at least 200 points from the current levels, because getting past 22,225 to about 22,275, this is a zone that would be a major supply zone now. If it were to manage to get past that, then there would be some bullish gumption. But only when you see the Nifty getting back to above 22,375, when all the short-term moving averages, 9-day, 20-day, and 50-day are taken out on the upside, the bullish gumption will be confirmed. Regarding the Bank Nifty, I would say that it needs to take out 48,000 mark. Prior to that, between say 47,750 to about 47,880, there could be some amount of resistance. But if it manages to get past that 48,000, then definitely there would be a good amount of rise. But what really bugs me is that relentless rise in the India VIX, the volatility index. If the volatility index continues to rise, even today it is 1.21% up as we talk. If it continues to rise, especially if it maintains above 18, these rallies are not going to sustain.
Well, all right. Thanks for that, Rajat. Seems like we're going to continue seeing this volatility until we get through this elections phase, and then we're going to also see a final budget coming out from the new government. But let's take queries now, and the first query is from Shubham Nayak. They're talking about Tata Power. They bought the shares at a price of 440 rupees. Now, Astha on Tata Power from somebody who's bought it at a 440, slightly elevated levels, long-term holding period here, but brokerages continue to maintain a sell on this counter after the fourth quarter results. What would you suggest someone holding at these elevated levels?
So in the past, we have seen strong performance by this counter only due to the, I should say, the softness in the input prices. And in fact, the demand of the power is also giving some sort of strength to the counter. Right now, Q4 results were not that strong, and that's why we are seeing such sort of price momentum. But in the long term, as the power demand will remain intact, there will be no issue on that. And I think going ahead also, as India plans to self-sufficient in the power, so definitely it will give impetus to all the power companies. And in the longer term, Tata Power will remain a key beneficiary in the space. So my stance here is, maybe on the results right now, the stock can see some sort of corrective momentum, but in the long term, the story is still intact. So remain hold on this counter with a price target of 460 to 480.
Okay, so that's a hold on Tata Power from Mastha. Let's take the next counter. That's Jio Financial that we're talking about. This query is from Amol, who's writing in from Noida. They say they bought the counter at an average price of somewhere between 315 to 320. This is from a short to medium term perspective. I'm going to take a technical check on this one. And Rajat, the counter is trading comfortably above 345 levels. You look at the 6 months chart, given 56% returns. But from a short to medium term perspective, do you have a target on this counter?
Well, instead of giving a target, I would say that if you are the investor is a short-term player, short-term to medium-term player, say the horizon is something like end of in this year or something. The huge negative candle that is developing at the end of the day, the weekly chart will give a major sell signal, because from a level of around say 380, it is breaching 360 where the 9-week moving average was located. And this fall, coupled with the oscillators showing that lack of momentum, this is going to fall. If one is taking a fresh entry, then 320 would be a good level to buy. But as of now, it's a sell.
All right, so a sell on Jio Finance from a short to medium term perspective from Rajat. The next counter we're talking about is L&T. This one's from Rosemary. They say if this is the right time to expect a reversal in the stock. You look at L&T, it's been trading lower today as well, down about 0.1% there. On a L&T perspective, we discussed this yesterday as well, Astha. We saw the commentary come in now. While the results were strong, the order book seems to be currently a strong order book, but outlook remains weak, and that was also expected, to be honest, considering this is an election year. However, the cut where I think the major point that came out with that they cut their 20% guidance to 10% on order inflows. So that seems to be a negative counter that seems to be working, not working for L&T. But from a longer term period, would you suggest this is an opportunity to buy something like an L&T?
So yes, opportunity to buy, but not at the current level. Maybe some more dips can be there. So I think if anyone wants to make a fresh entry, then it's better to wait for more dips to arrive. Maybe 3,000 is the level where one can make a new entry. So talking about this counter, fundamentally order book is quite strong. But whenever a management cut their revenue guidance to the lower side, basically, then street never likes a sort of cut in the guidance, and they always punish the stock. And that is what we are seeing right now. But still, the order book is healthy, and I think the macro environment is still healthy for L&T. So going ahead, they won't be facing any issues on the financial performance front, but maybe it's a temporary downside which we are seeing in the stock, and that's why we are recommending buying on dip strategy on this counter rather than buy at a current price. It's better to wait for more correction, maybe at 3,000 level. The stock is well poised to show upside. So right now, hold or buy on dips is advisable on this counter with a possible price target of 3,600 to 3,700.
All right. Next counter we're talking about, and that's a counter called Cosmic CRF. This one's from Samir from Kolkata. They bought the shares at a price of 769. It's trading above 900 levels right now. You look at the 6-month chart of this counter, Rajat, and it has given returns of over 200%. What are the charts showing on this counter? What are the key levels you should watch out for?
Key levels to watch out for would be 800, which is about 103 points from the current levels, because there is a horn top like formation in this counter on the weekly chart. Horn tops, first there had been a top around, say, the first top was close to about 1,000, a little above that, and this was at 1,010. This time we had a much higher top of about 1157. Yet the horn top formation is still on, and the oscillators are suggesting weekly chart is very weak and it can fall further. So it would be better to wait at least 800 before you contemplate any kind of buying. One thing I would like to tell you is that most of the counters, that even the L&T stock that you said, that if it falls below 3230, it can go much further down. So now if you look at the weekly chart, you will find that most of the stocks are giving sell signals. That's the problem at the moment.
Did you, if you can also mention a stop loss level for this counter, because that seemed to be the query from the viewer as well.
It should be 825.
825, got it. All right. It's time for a short break right now, but Rajat and Astha, stick with us. We'll take more questions on the other side. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna Mana Hai. Co-powered by Canara Bank. Together we can.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarva and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Welcome back. You're tuned into Ask Profit. Let's dive into the queries again. Now, this one's on Polycab, and Polycab has just come out with its fourth quarter results. This query is from Subodh Malhotra from Delhi. They say they bought the shares at a price of 4,150. It's comfortably trading above 5,800 levels. You look at the results as well, Asta. Strong results there. Revenue up 29%, EBITDA up 25%. You have profits up 29%. Slight contraction in the margin from 14% in the last year to 13.6%. So just a slight contraction there. But from a longer term perspective, now looking at these results as well, the stock has been doing fairly well. Seems like we're out of that regulatory action that happened, and that was clearly a buying opportunity for a lot of investors. What would you suggest somebody who's also sitting on a considerable profit right now?
Right. So, right now it is quoting 5,800. Results are good, but yes, we have seen the dip in margins, which was 14% around operating profit margin, and this 14% of operating profit margin we have seen since last few quarters. So yes, that that is an issue, that there is a dip. But since this investor is sitting on a huge profit, so my idea here is that since we are predicting that markets may fall further down from here, So it's better to book partial or at least 1/4 of the position profit in that 1/4 of the position, because here the profit is high. So our idea here is that book some profits and then remain hold the other other quantity. And here the price target which we are setting for this counter is around 6,100. But yes, it is a longer term price target, because in the shorter term we might see some sort of hiccups in the price movement due to a weaker macro environment.
All right. The next counter we're talking about is Lakshmi Organic Industry. This one's from Darshan, who's writing in from Gujarat. They say they bought the counter at a price of 290 rupees. It's trading around 228. Rajat, the counter seems to be in a negative downtrend, and for somebody who's sitting on a bit of losses here, what should they do?
Best thing is to sell this counter at current levels, or if you want below 225, because this is giving a fresh downtrend signal. Now it has been moving sideways since the middle of 2023, or rather say early part of 2023 to current date, but now it is breaking its lower support levels. So if it were to fall below 225, one should exit to save whatever capital one can save.
All right. All right, got it. Next counter we're talking about is Union Bank. This one's from Sandeep Prasad. They say they bought the shares at an average price of 144. It's currently 228, but a bit of a pressure there on the stock today, down about 1.5%. Ask this for something like a Union Bank. We're also expecting fourth quarter results today. But, and of course, we'll discuss it after that as well. But from where we're currently at, what should somebody do with the stock considering? And this for a 1-year period, and seems like it has doubled from their buy price right now.
Yes, but we are expecting strong results from this counter. In the past also, due to the digital momentum, this bank has really gained traction from customers also. In fact, if we talk about their asset quality also, so asset quality has also shown improvement. So in the past, on the back of the strong financial results, we are positive on this counter, and going ahead also, we are expecting this counter to show strength in their bottom line as well as total income front. So recommending a hold on this counter. Price target which we want to give to this counter is 160 to 180. So 160 to 180 is the price target which can be set for this counter for 1 year perspective, and remain hold in this counter.
All right, got it. Next counter we're talking about is Ratan India. This one's from Polumi from Kolkata, and they say they bought the counter at a price of 91 rupees, and it's below that. And they say they've been holding this from the last 3 months, but they want to hold it from a longer term perspective. Asa, do you have coverage on this counter, and what's the long term view?
So they are talking about Ratan India Enterprises, if I'm not wrong.
Yes, Ratan India Enterprises.
So if we talk about this counter on the basis of past performance, since I have not tracked their recent results, if they have posted. So in the Q3, the results were very strong. In fact, their bottom line was very, very strong. They have shown a strong growth in the bottom line. So in the past, the results were good, and we are expecting this counter to post strong results also going ahead. So maybe before the results, one can remain hold in this counter, and if results come according to our expectation, then this counter can move till the level of 80 to 85 also. So right now our hold is recommended for the price target of 80.
All right, fair point. The next counter is CG Power. This is from Venkat Ramani from Bangalore. They say they bought the counter at a price of 480 rupees. It's trading above 581 levels, but a bit of pressure there on the stock today. But the counter has been doing very well after its fourth quarter numbers. But let's take a technical check on this counter. Rajat, on a CG Power, bit of pressure today, but has done well in the last week. What's the short to medium term view on this?
Both short-term and medium-term views are bullish. Short-term target is about 629 on the upside, and unless it falls below 525, there would not be any kind of weakness signal. So I would suggest that it is best to hold on to this counter, and at dips one can continue to buy, because there is no fracture in the fracture signals on the long-term uptrend. Right from that 5 rupee March 23, 2020 COVID low. It is moving up and up. So carry on. We have a good stock.
Well, it's a thumbs up from Rajat on SEG Power if you're holding that stock. But unfortunately, now we're completely out of time on this edition of Ask Profit. Thank you so much, Rajat and Astha, for joining in today and for answering questions for us.
Thank you for having me.
Pleasure's ours. And viewers, thanks for joining in. If you were able to take your questions today, then if you were not able to take your questions today, we'll definitely try and take them on Monday. But don't go anywhere. We have lots more lined up for you during the day. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai. Co-powered by Canara Bank. Together we can.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television.
Welcome. This is NDTV Profit, an earnings edge, and we are taking stock of the quarter gone by for Asian Paints, which has come out with its numbers yesterday. Well, to take us through the quarter gone by and what we can expect going forward, we are in conversation with the MD and CEO of the company, Amit Singhal. Amit, good afternoon and thank you so much for joining in. Well, my first question was to do with your volumes growth, which was in double digits, and yet we had a subdued revenue growth number coming in. Can you talk to us about the factors that have actually led to the revenue number for the quarter gone by?
So overall, as you rightly said, the volume growth has been pretty good in terms of the double digit in terms of what we have been able to kind of get in. The value was under pressure because of the price decreases in terms of what we had taken to the tune of almost about 3.7%. And that is why we saw that possibly there was a little bit of a degrowth in terms of value, what we saw. We also saw a little bit of a mixed difference in terms of our product range, which kind of also depressed the value a little bit more to that extent. But having said that, what we definitely saw was that overall the urban and the rural demand was at par. Urban was a little bit higher as compared to rural, but the rural is starting to prop up to that extent, which is a positive sign in terms of what we saw in the environment. We also saw the institutional B2B segment kind of doing quite well overall to that extent in terms of both the spends on infrastructure, construction, builders, and so on and so forth to that extent. And the third bright spot was the industrial sales, where we saw the auto finishes sales as well as the protective paint sales kind of surging well for us to that extent to double-digit numbers. So overall, I think that has been the scenario overall, a little bit kind of dip in March in terms of the institutional sales because of the lack of government spendings because of the election code kind of kicking into that extent. But otherwise, I think the demand has been a little bit moderate overall, and these have been the bright spots in terms of kicking up the double-digit volume growth which we've seen.
Right, Amit, so I want to talk about demand and break that up into two areas. Of course, the first one is your institutional sales. The first quarter is also going to see elections naturally because, the next two phases are still playing out at the moment. And we won't have that much clarity when it comes to government spends. Moreover, when it comes to the real estate sector in general, residential or commercial for that matter, while there was a lot of construction activity which was happening in the past few quarters, the construction activity in the next few quarters is not expected to be as high. So if you could first tell us just about the institutional sales on your outlook and what your expectation is, of course, notwithstanding the auto sector as well to a certain extent, which contributes to your B2B sales.
So overall, our expectation is that the B2B segment should kind of grow in terms of double-digit value numbers is what we see, and this is double-digit value is what I'm saying to that extent. Because today, if you look at the components of the projects business, it kind of comes in a large part comes from factories as well, which is the spends with respect to maintenance and new factories which are kind of coming up to that extent. The second area is the area of government in the infrastructure which kind of comes in, which possibly would be a little bit slower given the elections kicking in this quarter one to that extent. The third area is the builder construction segment, which is again, according to us, I think the mid and the top segments are still kind of really doing well overall in terms of what we see around. And the fourth area is the cooperative housing societies and so on and so forth in terms of their own maintenance and stuff like that, which is also a fairly big segment to that overall to that extent. And I think given these segments, CHS is also supposed to be great. So overall, I would still be pegging the projects B2B business at a double-digit value overall in terms of what we see. We have traditionally had very big growths in terms of even excess of 20% going ahead. A little bit slow down, but I think they still should be in the double-digit value growth.
Right, Amit, I know that Asian Paints is by far the leader in the paint segment, but we have another player who is deploying a lot of funds and they're coming up with a substantial amount of investments in the area as well. Of course, it should be up and about over the course of the next few months and perhaps the next few quarters. I just want your overall take on competitive intensity, what you are anticipating over the course of the next 3 to 6 to 9 months, and whether or not there are some measures that you guys are taking, or for now, you guys are not very unfazed about competition at the moment?
So as we look at it, I've always maintained that we've always had competition in this industry, and given the fast pace of the growth and the kind of profitability we see, I think it's not surprising that we will see more and more competition kind of coming in this industry as we kind of go forward. Currently, as a leader, we have been always working in terms of increasing the per capita consumption of paint in the country, since it is much lower as compared to any of the developed economies in terms of what we see outside. And therefore, I think one of the big imperatives of Asian Paints as a leader is that we are expanding the market in a very big way. We've just launched one new product called Neo Bharat, which is based on a new latex technology which we have introduced, which is really going to the bottom of the pyramid, looking at the unorganized sector, looking at low-cost paints which are kind of operating there, and getting the unorganized customer into the organized market in a big way to that extent. And therefore, it opens up another 5,000 crore segment for us in a very big way. Similarly, we are looking at some other oceans like the French polish market, which is another big market in terms of looking at where there is unorganized players playing, and we are kind of looking at converting that into a branded market to that extent. And therefore, we feel that today, as we kind of see this 80,000 crore market, we want to kind of really build it even more so that there is enough space for each and everyone who kind of comes in. I think today, the way this industry has been growing, we are not really worried about new competition coming and what they are doing. What we are very clear is that as a brand, we are putting energies behind increasing the brand equity, increasing our advertising spends, looking at supply chain efficiencies, which are far more to that extent, looking at working around in terms of innovation in a very big way as we kind of go ahead. So I think currently I would say that we have seen competition earlier, and we really welcome the new competition which is coming into that extent, and we are not looking too worried about in terms of what's going to happen as far as competition is concerned.
Right, Amit, let's move on and talk about margins then. Of course, your gross margins have seen an expansion. The concern to a certain extent was that crude was high in the quarter gone by, and on that account, your crude derivatives would have some sort of impact. Is there a lag impact that we can expect in the upcoming few quarters? And the second question is that while your gross margins did expand, your overall EBITDA margins were slack at the moment. So what was that on account of, and what can we expect going forward on your overall operating margins front?
So 2-3 areas. One we see is that the crude has been a little bit up and down in a certain band because of all the geopolitical situation which is going on to that extent. We're watching the situation pretty closely, but as I see it, the material inflation has not been very high in terms of what is there. In fact, it has been a little bit more flattish in terms of what we have seen. And therefore, I think in the immediate future of Q1, we don't see any price disruptions which are going to happen in terms of either increases or decreases to that extent in terms of going forward to that extent. As I see it, overall, the gross margins have definitely gone up, and I think there also we have been maintaining a certain band in terms of the gross margins, which we will kind of operate at. The PBTA margins, if you look at for Q4, definitely went down because of increases which we took in certain areas. For example, the whole area of advertising and marketing. We've upped our expenses overall in terms of really upping the brand equity, taking new brand ambassadors, putting out a lot of below the line, above the line measures in terms of what we have done to that extent. And that is possibly eaten into some part of the margin. But more, I think, deficit has come in because of the value growth not coming in very, very strongly. As far as the year is concerned, we are still maintaining strongly a margin of 18 to 20% as far as PBTIT is concerned. And we think that FY24, we have delivered almost about a 21.6% kind of a PBTIT margin, which is much higher than the previous year, which is the financial year 22-23 in terms of what we see. And going forward, I think we are confident that we should be able to maintain the overall margins above the guidance in terms of what we have been given.
And under what circumstances can we expect perhaps some sort of pricing action over the next few quarters? I'm assuming that there won't be further cuts in pricing. Could there potentially be, price hikes perhaps over the next few quarters? If that is the case, what are the factors that could lead to that?
So currently, I think we are all aware of the geopolitical situation which is going on. So if crude, for example, literally kind of upsurges and there is a disruption in the crude price going up, it would kind of really affect all the derivatives which kind of come in along with crude, especially the monomers which are kind of involved and the solvent-based prices to that extent. So I think in that case, if there is a surge which happens, we will try to adjust the pricing, that something will have to get passed on to the market if it happens. But as I said, that Q1 is looking secure. We will have to look out for Q2 and Q3 in terms of what really happens if there is a disruption in terms of the crude prices. And that is something which we are watching ahead with fingers crossed.
Amit Singh, thank you for joining us and taking us through how the quarter's gone by and what we can in fact expect from the upcoming financial year. You're watching NDTV Profit.
We as professionals understand the importance of making informed decisions and often are advisors to our clients. Voting is no different. As citizens of this great nation, we have the power to shape its future. And one of the most crucial ways we can do that is by casting our vote. It's not just a right for every citizen, it's a responsibility. A responsibility to ourselves, to our communities, and to our country. So, I urge all of you to exercise your right to vote. I always ensure that I fulfill this duty to our country. Let's show the world the power of our democracy, the power of our collective voices. Together, we can make the difference. Together, we can build a better tomorrow.
Brought to you by Canara Bank. Together we can.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right.
Your vote has the power to transform the future of a nation, which is the world's largest democracy. India stands at the center stage of the world today, and it's important to make the coming years count. I also have a message for the new voters. I understand the nervousness that sets in because it's your first ever vote and you want to make it count for a better future. Analyze the options carefully to understand the vision of the leader that you're voting for. Let us all come together and make one of the most important decisions in the history of our nation. One that will positively affect this crucial decade for our country.
Good afternoon and welcome to Earnings Edge here at NDTV Profit. We're tracking VST Tillers right now on the back of the Q4 performance. The company's revenues degrew by 15%, while EBITDA and PAT were down roughly 26% and 3% respectively. We're now joined by Mr. Anthony Cherukara, the CEO of VST Tillers. Good afternoon and welcome to NDTV Profit, sir.
Good afternoon and thank you for having me.
So let me just start off with the Q4 numbers. Now, revenues degrew roughly on the back of fall in the overall sales by roughly 10%. What do you attribute this fall to, sir?
So H2 has been affected due to the poor monsoon, both the spatial and temporal distribution of monsoon. So this affected both our Q3 and Q4. However, if you look at the full year, the drop is just 3% in terms of revenue, and we have been able to grow the operational EBITDA. And of course, we have done well on the profit after tax as well.
Understood, sir. Now, power tillers is one of the key and the biggest segments for the company, which saw roughly a 5% fall in sales for the whole financial year of 2024. Now, I wanted to ask just a little bit of a larger question. Now, in this segment, how much is currently the organized market for the whole as a whole? And I also wanted to check that who do you kind of compete with in the listed space in this particular segment? And what do you see the outlook for this particular segment going into financial year of 2025?
Yeah, so let me start with the outlook first. There is a tremendous potential in this segment. The fact that 80% of farmers fall in the small and marginal farmer segment creates this to be a very potential segment for us. And in Q4, we had a decline, and Q3, Q4, of course, there was an effect of monsoon. Apart from that, in Q4, March, the Model Code of Conduct came into being, and that affected a couple of orders that were to come through. That did affect the small farm machine performance, as we call it, small farm machines, not power tiller, because the range starts from about 4 to 5 horsepower and goes all the way up to 16 horsepower. In the listed space, there are a couple of players in this space in the power tiller segment. However, with 70% market share, VST Tillers Tractors is the largest in the industry, and we expect this industry to grow in the future as well.
And on the organized bits, how much of this market would currently be organized? Because we see that, amongst the listed players, as you said, there are a couple of competitors, but how much of it would be organized and unorganized, sir?
So up to 8 horsepower, it is largely unorganized, but 8 to 16 horsepower, it is an organized industry.
Understood. Now, I want to talk about a little bit about the tractor industry in general, which is roughly degrown by 7% in the previous year. Roughly around 8.7 lakh units is what they sold. Now, that also is one of the key segments that the company operates in. How do you see this segment, going into FY25? And for this financial year also, the segment was down roughly 22% versus 7% fall for the industry in general. Could you just guide us through what led to this fall, and how do you see in the next financial year moving into for tractor segment specifically?
Yeah, our company operates only in the compact tractor segment, which is less than 30 horsepower, and specifically in the four-wheel tractor space. If you look at this industry, which is dropped by 8 to 10%, if you see the north and central part of India, there was no drop. But the heavy drop has happened in the south, west, and the eastern part of the country, where the drop has been almost 18%. And specifically, if you look at the compact tractor segment, the drop has been mainly in the state of Maharashtra and northern Karnataka, where the industry has dropped more than 30 to 40%. So, considering that drop, which affected our tractor business, and we could not grow in this year. But however, expecting that monsoon is going to be normal in the coming year, we expect to grow that business as well.
And sir, I just want to take forward the point that you've been saying that Karnataka as well as Maharashtra has been affected. Now, we've seen similar commentary from the other players as well who operate in the higher horsepower segment as well. Is there any key reason that you're seeing for this fall? Because this is industry-wide.
Yeah, like I said, in the higher horsepower segment, the northern markets where VST Tillers Tractors Limited is not present has remained flat. There was no drop. However, in Maharashtra and Karnataka, there has been a drop overall industry, and there is a larger drop in the compact tractor industry, which is a niche segment where the tractors are used specifically in sugarcane farming and grape vineyard farming. So there has been a larger drop.
Understood, sir. And let me go across to the next segment, which is the power weeder segment, which showed a really good 35% growth in the whole financial year of 24. I wanted to understand the competitive intensity in this as well, and how do you see this segment shaping up in the next fiscal?
As I said, up to 8 horsepower, that is the classification of power weeders. Okay. And that is largely an unorganized segment. Most of the manufacturers or players in the market import these products and sell in India. We are the first ones to manufacture that in India. So it is completely make in India for us for the power weeder segment. We were only in the second year of our selling of power weeders in India, and we expect this segment to continuously grow. I would say that it would grow exponentially.
And is there any kind of PLI benefit or any kind of subsidy that you get across your segments that you operate in currently? And if so,
there is no.
Please go ahead. Please go ahead.
So there is no production-linked incentive per se, but there is definitely subsidy, which is a direct benefit transfer, which the government offers to the farmers. And that is a state-dependent subsidy. So it will vary from state to state.
Understood. And for the tractors, like you said, you currently operate in the compact tractor segment, and you have been exporting roughly 1,700 tractors as well in the previous financial year. I wanted to understand which geographies do you generally cater to, and how are you seeing the export market in general? We've seen some geopolitical issues as well cropping up and affecting all automobile as well as tractor companies. So how are you seeing this market for export specifically?
Yeah, we have grown the export tractor business in a scenario where there is 2 wars going on, one in Ukraine and the other one in the Middle East. However, it affected our logistics, but we have been able to grow. Our exports are mainly to France, Germany, Belgium, Netherlands, Spain, Portugal, and especially Western Europe. And this year we plan to enter the Nordic countries as well. So consolidate in Europe. And we have already announced our entry into US market as well.
Got it, sir. And any other Indian OEM who competes with you in this space for exports of tractors currently?
There are 2 to 3 major players who are already in Europe, and I would say that Indian tractor manufacturers are doing well in Europe as well.
And as you guided right now that you have formed a company in the US as well, as you will be entering in that space. Now the market is generally very competitive in general. Could you guide us through what has been the sense of deciding to enter into this particular geography? What is the competitive intensity for the products that you offer? And how do you see the market in general for the next fiscal?
So our core strength has been in compact tractor segment, as I told you earlier. And interestingly, the US market has almost 3 times the industry size in the compact tractor segment, while the Indian segment is at about anywhere between 60 to 80,000 tractors for the four-wheel drive compact tractors. But in the US, the same industry is at about 300,000. And there is a positioning that the Indian manufacturers can achieve in this segment. That's the experience that we have had in Europe. And we believe that success that we have had in Europe can be replicated in the US market as well. This gives us the belief that we can enter the US market.
Understood, sir. And my final question is your collaboration with Zetor, where you launched also the first one in the tractor segment. Now, this being a tech company, how has this been received? Like, has the product already been launched? Because we saw that the filing, the company had said that in the end of 2023, the product was launched. How has this been received, if any feedback that you've received? And do you see any further collaboration with this company as well as any other going forward as well?
Yes, we have launched our first range of tractors in the higher horsepower segment, which VST Tillers Tractors is entering through the joint venture with Zetor Tractors Czech Republic. These tractors have been well received. In Q4 last year, we did seeding of these tractors in various markets and got tremendous feedback from the farmers. Now on May 6th, we have launched these tractors across India, and we are currently making these tractors available to dealerships across India. And so far, the performance and the feedback that we have received from the farmers has been excellent.
Understood, sir. Thank you so much, sir, for joining us today here at NDTV Profit. We wish you the best for Zetor as well as your further launches. Look forward to talking to you post your Q1 or in case before that also for any other business update. But thank you so much, sir, for joining us today.
Thank you. Thank you.
So that's all the time we have today on this show. Stay tuned to NDTV Profit for more.
Brought to you by Canara Bank. Together we can.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things.
Hello and welcome to NDTV Profit. Today we have with us Mr. Anuj Kumar, the MD of CAMS. Welcome to the show, sir.
Hi, good afternoon, and thanks for having me over.
Thanks for taking out the time, sir. So my first question would be around the company reported its earnings. So what is your take on that?
You would have seen it was a solid quarter for us, perhaps beating our expectations and one of the best in recent years. In sequential year terms, overall revenue grew 25%. So we were firing on all cylinders. Mutual funds, which is the core spine of the business, revenues grew 21%. Non-MF, coming off a small base, revenues grew 52%. On a constant base, if I take out the contribution of Think360, which was an acquisition made in 1Q last year, on a constant base, non-MF revenues grew 38%. And overall, PAT grew 38%. Now, given the trend of previous results, I think this is stellar. This is very strong, and is just indicative of the sound business franchises that we built across various business lines.
Sure, sir, got that. Next, I want to understand your mix around mutual fund and non-mutual fund business. I see a higher yield from the non-MF MF sector, and while MF is a little bit of muted. So, any take on that?
No, I would say that there was a significant ahead of the market growth across the board. MF revenues, like I said, grew 21%. Our non-MF contribution is a key metric. It's a key diversification metric. Non-MF was at 11% in 4Q last year, has grown to 13.5% contribution this year, which means that despite the fact that there was a runaway growth in mutual fund assets, there was runaway growth in mutual fund revenue. Despite that, non-MF increased share by 2.5%. That's the best way to look at it. Multiple reasons there. Our KRA business grew 90% year on year. Payments grew 24%, and alternatives grew again mid-20s. So contribution by a basket of non-MF businesses, which all grew strongly, put non-MF at 52%. You obviously can't do that to a very large revenue base, but MF growth at 21% has been very satisfying.
Right. You mentioned about sustained investment in scaling up the tech backbone in your earnings. So will that affect margins going ahead? And if yes, to what extent?
I think it's all costed in. I mean, we just got off the earnings call. When I just see transaction volumes, they've gone up almost 32%, during the year, which means which means 1 year back, we had done about 13 crore transactions. And in 4Q, we did 17 and a half. So that's a runaway increase. It's also the fact that this is a deeply retailized market. So the number of SIPs, retail investors, small size SIPs, daily collections, all of that is becoming very common. It just needs an incredibly strong backbone to be able to make sure that every part of the transaction makes every communication, every SMS, every email reaches the intended recipient, that we just keep the parameters very, very strong. But all of this growth in technology, assets, data centers, security, etc., has been costed in. There's nothing new there. We continue to invest and we will continue to make it stronger and stronger.
So these kind of investments are already there in the cost. Do you indicate that?
That's correct. That's correct. We typically do an IT capex, so between 35 to 50 crore a year. In a busy year, maybe about 60 crore rupees. That continues as a standard practice.
Okay, so all in all, you expect the margins to remain in these levels, is it?
So if you see, we have stated in the past that our operating EBITDA, which is basically the lead margin indicator, should expand by about 1% every year. In 4Q, we have delivered operating EBITDA of 46.1%. This was 44.8 last quarter. So just given the sharp revenue increase, I think profits are looking better than we were expecting. Expect perhaps more moderate 45 to 46 kind of margin in the next 2 quarters. We will undergo, annual compensation increases, etc., which will moderate margins a little. So expect the next 2 quarters to come between 45 to 46%.
And what about the second half of the year?
So second half of the year, everything depends upon, our core franchises in the capital markets. If markets shape up, which means the annual 12 to 15% growth continues, I think we will expect some margin expansion to happen towards the later part of the year as markets stabilize. But you know that there could be surprises and there could be a bit of cyclicity. In the first half, I think a 45 to 46 range-bound margin delivery can be expected.
Sure, right. A very clear picture on margins front. Let's move on to pricing. There was talk, in last quarter and the earnings call currently as well. What's your take from the pricing renegotiations? Are you seeing such with the existing clients, and your outlook on the pricing of deals?
So our core pricing architecture is very attractive to the buyer because it is telescopic, which means every time the buyer grows, they pay a little less. That is just part of the overall architecture. That creates a small contraction in prices, as you know how a business runs. And that's been part of the architecture for the last many decades. It's nothing new. Whenever there's a sharp run-up, clients may believe that they should get a bit of a fee remission. We are not worried about fee remission at all. Fee depletes by about 2.5% a year. I think that's been the historical course. We are not expecting anything new. You should expect about a 2 to 2.5% on fee on a BIPS basis fee to deplete. All of that is factored into our estimates, our cost estimates, and our outlook.
Right. Another point on CAMS KRA that was strong last year, like around 100% of growth. So, what is the take this quarter?
So CAMS KRA used to service only mutual funds. We were going after a subset of the market for strategic reasons. About a year and a half back, we started selling to brokerages. You know that the world of demat and broking accounts is, from an account number perspective, has been growing faster than the mutual fund segment. So we went into that segment. We service several brokerages now. The top 2 or 3 are still not our clients for KRA. The others are. And that has led to this 90% revenue growth during the year. It is again coming off a small base. As we continue to penetrate the markets, expect growth to remain sustained for at least 1 more year, and then I think we will come back to the the mid-20s, early 20s kind of growth.
So the growth in this segment is directly related to the MF growth, is it?
Part of it, like I said, new KYCs are done by customers who are entering mutual funds, but they're largely being done by people who are opening new broking accounts for either F&O or cash delivery. and also those opening demat accounts. So that's a slightly bigger growth driver compared to mutual funds.
Right. Okay, now in terms of TAM, right, the addressable market seems to be divided into MF and non-MF largely. So once this kind of markets is captured, what is your vision further beyond these two, or is there some more headroom, bigger headroom that can drive the business going ahead?
I think we have all the business drivers in place. We have the markets, and we have the products, we have the platforms, and we've done what we had to do. Today, we are not planning to either enter newer markets or launch new business lines, because obviously you spread yourself very thin when you start doing those things. On the MF side, of course, we've been leaders for many decades, and we will protect that position of 68% market share and the growth that comes. On the non-MF side, we have 6 core franchises, all operating within India. We are very sure that those are the businesses we want to be in. So you will see all the scale up happening in the same 6 markets outside mutual funds. You will also see any inorganic activity or acquisitions that we may plan to happen in the same markets. We want to remain focused, don't want to fritter away the advantage, don't want to spread ourselves thin. So that's really the story.
Right, sir. One last question from my end. I'm looking at this opportunity on the Atal Pension Yojana, which the government has opened for organizations other than protein. So I think that could be a big opportunity for the company. What's your take on this?
The Atal Pension Yojana, of course, being available to CRAs outside of the incumbent or outside of Protean, I think is great news for us. So we're excited by it. As you know, it's a socially relevant pension scheme, and therefore pricing, etc., is thin. All that, of course, we'll deal with. So we're very excited with our entry into this segment, and we will focus on scaling a component of that marketplace.
Sure, sir. Sure, sir. Thank you so much for taking out time for us today, and very great insights on the company. So that was Mr. Anuj Kumar from CAMS. It's time for a short break. We have a special earnings conversation with PNB's management lined up for you on the other side. Do stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani, and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000, because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages, and the way we speak to each other, in mixed coding, where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead, as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, Some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others,
All right, it's results season and as we wind down towards the end of the quarterly numbers, one important set of numbers to look at is Punjab National Bank. Now, the PSU player has been a darling of the markets for most of this year and, has put out a fairly decent set of numbers. Atul Kumar Goyal is joining us. He's the MD and CEO. Mr. Goyal, thank you for speaking with us here at NDTV Profit. Let's just first begin by understanding the numbers. Now, the PAT looks very robust, up about 160%. Your operating profits have also moved up 9% year-on-year, 1% Q-on-Q. Net interest income is also up. But credit growth, while growing at about 12%, is slightly below target. What would be your take on the overall numbers and on credit growth?
Very good morning, Tamanna ji. As far as profitability is concerned, definitely there is an increase of more than 160% in the profit. The profit increases on account of the so many factors, but major factor is the contribution of the reduction in the credit cost. Credit cost for the last quarter has reduced to 0.80% and the credit cost for all over year was 1.40%. Since we have already improved our PCR to the 95%, so we are giving the guidance for the next year it will be below 1%. So profitability is bound to increase every quarter by quarter in the times to come. Your specific question regarding the credit growth, definitely it is little less whatever the guidance we have given, 12 to 13%. It was 11.4%. If you see the credit growth in the June quarter, September quarter and the December quarter, it was more than 13%. But YOY it has reduced on account of, because if you see the last quarter of the last financial year, March 23 quarter, there was some bulk business we have done. So this was the reason, and we are giving the guidance for the next financial year. The credit growth will remain within the range of the 11 to 12%.
And so 11 to 12% is your outlook for credit growth next financial year. What about deposit growth? Even that was slightly under the estimates that were given.
Yeah, deposit growth we are giving the target around 9 to 10% for the current financial year 24-25. The reason was of the less of the deposit growth. If you see, my CD ratio is already around 71%. So there was no need for taking the bulk deposit. So we have resorted ourselves not to take any bulk deposit. Even as on date, we are having the excess SLR more than 1 lakh crore available to us. So this was the reason. Otherwise, if you see the CASA was 41.40%, and last year we have opened more than 1 crore saving bank account and 2.68 lakh current account where money will flow. So on account of this, we are targeting our CASA ratio should be around 42% in the current financial year.
I just want to come, to the point of recoveries. Recoveries have been robust. NPAs have also been coming down. But what is your outlook to the pace of recovery, sir?
Pace of recovery will remain very good in the current financial year also, because we are having around 90,000 crore rupees TW book and around 55 crore rupees of the gross NPA book. If you see the last year, our recovery was 3 times of the addition also. So 5.73 we have achieved for the gross NPA number, and the guidance for the current financial year is less than 5%. And similarly, the net NPA has been achieved to the range of 0.73%. The target of the net NPA is the less than 50% in the financial year 24-24. And since our PCR is improved to the 95%, so credit cost, as I told earlier also, we are giving the guidance less than 1%.
Okay. Goyalji, let me come to, I would say, the biggest topic right now for the banking space and for you as well, which is the RBI draft guidelines on project financing. Now, you have said publicly there's no need to panic. but there is a need for discipline in the space. Now, before I come to you and ask you, why you've said that, what do you mean? I want to understand what is the share of project financing, how much of this category is on the balance sheet right now?
My reply to this is the first is a draft guidelines. We should wait for the final guidelines also, because this guidelines has been issued by the regulator on the 3rd of May. It is like a consultative approach, and they have asked the comment from each and every stakeholder, whether it will be a bank and it will be a promoter side also, or the corporate side also. So let us wait for the final guidelines. And one thing I can assure all of you, what will be the final guidelines, there shall not be any worry for the Punjab National Bank, because today our balance sheet is very strong. But some clarification is also required, because you are asking what will be the which type of the loan book you are having, because as per the draft guidelines, it is applicable to all type of the project finance in the infra as well as the non-infra, without any limit also. So we will take the clarification whether there is a need of fix any limit, etc. also. So I think there should not be a matter of worry. What will be the final guidelines? We should wait for them. We will be in a position to provide that.
Now, so what I want to understand is, as of today, as per the definitions in the guidelines, and I understand completely well these are not final, so with that caveat, as of today, how much of your loan mix will come under these categories, sir, of project financing, which would be subjected to higher provisions if these draft guidelines go through? So I've put all the ifs and buts, but having said that, how much of the loan book right now would be vulnerable to this?
That will not be too much of the impact, because some type of the loan in the loan book, the infra, where we have given the corporate loan, that will be the out of this purview, although it is coming under the category of the infra. Similarly, I would like to tell you also some of the discounting of the annuity from the NHI, although it will come in the book of the infra, but that will not come in under this guidelines. So in my opinion, rough estimate is like that, whatever our infra book is there, only 50% of that will be come under this category.
And what would be that quantum?
Quantum, if you see the infra is around 92 to 93 lakh.
So 50% of 92 to 93 lakh.
Yeah.
So you're saying about 47,000 crore rupees would be under this category if these guidelines go through. Am I understanding that correctly?
Yeah.
Okay. And then you also say that there is no real reason to worry. But I just want to understand if at any point there is an increase in requirement of provisioning, does that then logically pass on to higher rates?
Even if you see the last time also, when the regulator has increased the RWA on the NBFC financing also, that definitely if we have to make the more provision, definitely what will be the impact on our profitability, little bit, definitely we will pass on to the customer.
Okay, so if there is a higher rate or higher provisioning, it will pass on to the customer. I just want to get your take on another, I would say, hot potato topic right now in the banking space, which is IT backbones and IT budgets for banks. Now, your IT spends is at about 2,900 crores for FY25. Is this enough? Do you aim to increase this over time?
As on date, 2,900 number is the adequate also, because last year also the budget was around 2,800 crore rupees, and out of which already we have spent more than 2,000 crore rupees, and remaining is under at the time of the completion of the project will be incurred. So as on date, 2,900 is sufficient, and we will review also everything. If there will be need of the increase also, so we will revise the budget also with the approval of the board.
No, that is true, sir. But my question is this adequate, considering that more and more transactions are online, more and more onboarding of customers are online? We've seen what's happened in the recent past with a large private bank. So in that context, I'm wondering if, the bank is going back to the drawing board and thinking that there's a requirement to strengthen the IT platforms.
Yeah, it is sufficient, because we have calculated each and everything, what will be the requirement of the IT for the each and every project. Considering that, 2,900 is adequate as on date.
Okay. Just last question, sir. And this is really an outlook more than anything else. Where do you think your credit costs are going to go, or cost of funds is going to go moving ahead as we wait and see whether there is a rate cut this year by the Reserve Bank? Do you see that pressure coming down and then impacting NIMs positively?
As far as cost of deposit is concerned, I do not see any pressure will be on the cost of deposit because 95% of the term deposit has already been repriced. Only 5% which was in the long term in the category of the deposit 4-year, 5-year, that has not been repriced. So I do not foresee any pressure in the cost of deposit in times to come also. As far as your specific question, if rate cut will be there, whether there will be any pressure on the NIM etc. also, definitely there will be pressure at the time of the rate cut, but definitely then because immediately repricing of the deposit will not be there, so otherwise we will reprice our liability side also.
Okay. Thank you so much, Mr. Goel, for speaking with us. That was the top management of Punjab National Bank. They've had a good quarter and, in very impressive turnaround story for this bank. They move towards recoveries also at quite a fast pace.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit.
Hello and welcome back to NDTV Profit. You're watching Market IQ. I'm your host Mihika Barve. Before we go ahead with what we have in store for you today, let's just take a quick look at how the markets are faring. The benchmark is fairly flat, up about 0.17%, but it is in the green after the volatile session that we did see in trade yesterday. The counters that have been contributing the most to the Nifty 50 currently is an ITC. We also have a Bharti Airtel as well as an NTPC. The ones that show a little bit of weakness on the benchmarks is an HDFC dragging the counter the most, and followed by an Infosys as well as the TCS. When you look at the broader markets are clearly outperforming, and the Nifty Mid Cap 150 is the one that's outshining today, up about 0.3%, and the ones that have been dragging this the Nifty Mid Cap is Hindustan Zinc. It's up over 8%, and the stock is also dragging the Nifty Metal upwards in trade today, which is the top sectoral gainer that we have today. You also have counters like an Endurance, a JSW Energy, as well as a Honeywell Automation India. The ones that are not doing so well in trade today is a Supreme Industries, as well as a Timken and a PB Fintech. When you look at the sectoral indices, we have the Nifty Metal as the top sectoral gainer today, as well as the Nifty Pharma, which has shown some strength in trade today. Both these sectoral indices up over 1%, and the ones that are not doing so well is the Nifty Realty. Saw strong amount of gains in the last few sessions, but it's down 1% currently. We now focus, Citi has come out with a report on the emerging markets as well as India, and has upgraded India to overweight on the back of strong EPS growth. To tell us more about the same, we have Neeraj joining us.
Right, so the Citi view on India is constructive, and this is the global report that they put out on emerging markets by and large, and I'll take you through some of the key highlights of the report. They've of course upgraded India to an overweight rating amongst other EMs. They've downgraded China. I'll get to that as well. But no, let's first stick to the first plate, wherein they've upgraded India to an overweight rating. They're saying India is benefiting from strong EPS momentum and projected growth. Effectively very constructive on growth and earnings on India. On China, they say, and it's not just India, there are a couple of other EMs that they've upgraded, but amongst the major ones, India upgrade to overweight, downgrade China to neutral after the recent rally that we have seen. They say China's recent rally has occurred despite weakening fundamentals, according to Citi. Now, that notwithstanding, on India specifically, there are a few reasons which they bring out. So on India in particular, they say that the Nifty target for March 25 is to 23,900, which is about a 7% upside from the closing prices yesterday. They say valuations at 20 times 1 year forward are just about one standard deviation over the long-term averages to the EM basis. So that's the first reason, of course, that valuations are in favor. And on earnings growth as well, they are saying that the earnings revision trajectory is broadly stable and trending better than the long-term averages, which is actually a respite. I mean, we've seen 4 years of double-digit growth for the Nifty on the earnings front, and if indeed we have the same thing in FY25, then you can certainly call it a much better trending earnings growth market than what the long-term averages have shown. Now, moving on to some specifics, of course, they say that the good momentum in public capex and private capex is gradually improving. So that is one key fundamental reason. They of course speak about the rate trajectory as well, and they say that they continue to expect RBI's stance change in June, and they see the first rate cut coming out in October despite all the chatter around what could happen to rates. So that's the other important part of the Citi view on India. And then of course they come out with specifics on what sectors they like and what sectors they don't. So their key overweights include PSUs, utilities and defense, industrials, banks and insurance. Very interestingly, that PSU, utilities and defense, which have been in a bit of a cloud of late, are finding favor with Citi as the key overweight, because remember, they talk to a lot to global FI clients, and therefore it's interesting to see this. Where is it that they are underweight? Well, not a surprise. Consumer discretionary, IT services and metals. You could argue maybe consumer discretionary is a bit of a surprise, but IT services and metals is something that most people are not too bullish on. So this was the large view of this is actually in a nutshell the view that Citi has on India from maybe an 80-page report that we've tried to bring it for you.
Thank you so much, Neeraj, for giving us those details. Now, we now should focus to the oil and gas space. And I want to talk mainly about the oil marketing companies, which have shown a bit of strength in today's trade after weakness towards the end of trade yesterday. And the one that's clearly standing out today is Bharat Petroleum, up about 4%, an intraday high of over 5%. And this was on the back of their results. Now, markets yesterday during the sell-off did react negatively to their results because it was a profit miss when you talk about estimates, but the net profits sequentially were up 24% for the count, and these are the standalone numbers. Revenue did see an uptick of almost 2%. EBITDA was up 48%, and margins expanded significantly more from 5.39% last quarter to 7.9% in the fourth quarter. And when you look at the whole financial year 2024, the companies had a robust run. Net profits are up 23 times, a 754 basis point expansion. Now, a little bit of details about the earnings. Now, the company did approve a bonus issue. Now, this is in the ratio 1:1. Record date for the same is June 22nd. And when you talk about the gross refining margins, yes, FY24 average refining margins did see a contraction to $14.14 per barrel versus the 20 range last year. But it's key to know that Brent prices did see a 10% uptick in FY24. When you look at the operational highlights, refinery throughput was up 5% on a quarter-on-quarter basis, as well as market sales, which were up 2% sequentially. The Bharat Petroleum earnings call also happened early in today's day of trade. Now, here are some of the key highlights that I think we should mention. Now, they're planning to increase their refinery capacity to 45 million metric tons by FY29. They're going to add 4,000 new marketing outlets by FY29. They have a 5-year investment plan where around 75,000 crores will go to the refinery and petchem segment, and they've given their FY25 capex guidance in the 15,000 to 16,000 range, which is more than a 30% uptick than the 11,000 range they had last year. And they also gave us some key details about their Bina refinery, which is the most profitable refinery, if not in the country, at least for BPCL. And they say that majority of their crude is sourced from Russia, more than 30%, and they expect Russian crude to also be a significant crude source for FY25, which will help drive profitability in the future. But moving on, we do have an update on the Air India crisis, and around 30 new crew members were fired over the sick leave, whereas others received an ultimatum. Operations at the airline are, however, expected to normalize and within a couple of days. Sam Daniel joins us with more details on the Chennai International Airport.
We come to you from the Chennai airport, where the Air India Express has restored flight services to 6 cities, including 2 international flights connecting Singapore and Kuwait, besides 4 domestic flights connecting cities including Hyderabad, Kolkata, Guwahati and Bengaluru. But authorities in Air India Express say still it would take till the 13th of May for 100% restoration of flights, because technically the Air India Express crew who went on strike applying sick leave ought to now go through a medical fitness process, getting themselves medically certified, and that will take some time. To expedite this, they've also installed an internal hotline number the crew members can call so that the management would expedite the medical certification process. While for passengers who were booked to depart from Chennai airport, they have a good connectivity to have the option, to exercise the option of cancelling their tickets and to take on other airline flights. Passengers who are in smaller cities like Trichy, Madurai and Coimbatore, they would be put to severe hardship, although Air India Express provides them 100% refund. For them to book on other airlines in the last minute, they say it costs them double or even 3 times the original tariff. And the situation in places like Kerala, again, would be of matter of concern, because Kerala connects to Gulf countries where a large population moves back and forth. and Air India Express authorities say by later today they would give another statement giving the percentage of flights restored and that would remain cancelled, and the exact timeline before 13th when passengers would expect complete restoration of Air India Express flights. At the Chennai airport with Suresh, Sam Daniel, Find It TV.
Well, there you have it. It'll be key to watch out the restorement and the timeline for the current issue, and we will get you updates on the same. We now have PepsiCo India, which is in hot water as it begins the trials to replace palm oil in its Lay's chips. Now, let's go across to Sessa Sen, who has more details on the same. Sessa, what are you picking up?
Right, so PepsiCo India has initiated trials to replace palm oil and palmolive with a combination of sunflower oil and palmolive in its snacks portfolio. Now, this decision follows several criticism over, the usage of cheaper ingredients which are considered healthy in packaged food in India from several nutritionists, health food groups, and even social media influencers. Now, in the US, PepsiCo, which is PepsiCo's largest market, it uses heart-healthy oils such as sunflower and corn oil in Lay's. Now, there are often different recipes for food and drinks used in different countries, is what the PepsiCo India spokesperson has said. This is due to several factors such as local preference, manufacturing capabilities, ingredient availability, and even the market dynamics. However, the company says that the ingredients are listed on every product that it sells in India, allowing consumers to make conscious decisions about their purchases. Now, the PepsiCo India spokesperson has also said that the trials of this blend of sunflower and palmolive started last year and not this year, and it also makes PepsiCo one of the few players in the food industry to do so. Now, not only palm oil though, the India unit of PepsiCo is also working to reduce salt in its snacks to less than 1.3 milligram of sodium per calorie by 2025. Now that the market leader has also already taken cognizance of this issue, so it remains to be seen if others like Haldiram's and Parle follow suit. So we'll wait and watch on what comes from the other companies on this, on this particular issue.
Yes, thank you so much, Sessa, for giving us those details, and it will be key to watch out how that pans out. Now, on the auspicious occasion of Akshaya Tritiya, doors of the Yamunotri and Kedarnath Dham opened for devotees. Now, while the Badrinath Shrine will open on 12th of May, the ceremony was performed amid recitals of bhajans and Har Har Mahadev chants at the revered shrine of Lord Shiva. Additionally, flowers were showered on the devotees that queued up outside the temple by choppers. The Uttarakhand Tourism Department has initiated online registration for the Char Dham Yatra covering Badrinath, Kedarnath, Gangotri and Yamunotri. And with that, let's take a break for now, but do stay tuned as we have lots more lined up on the other side.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If
you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable show.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome back to NDTV Profit. You're watching Market IQ and I'm your host Mihika Barve. We now move on to NDTV's special election coverage. Now, the leader city of India, Kanpur, will vote in its fourth phase of Lok Sabha elections on Monday. It's a two-way battle between BJP's Ramesh Avasthi and Congress's Alok Mishra. As the city struggles with issues such as lack of government jobs and tanneries moving out of the city, what are the people expecting from the candidates this time around? Well, NDTV's Tanish Punjabi gets us the ground report from the hot seat, Kanpur.
Kanpur was called the Manchester of the East because of its flourishing industries. The city, once a bastion of British Empire, has a rich cultural history. But today, Kanpur is grappling with its very own challenges like pollution, industrial decline, and rapid urbanization. Kanpur is considered the leather hub of India. At one point of time, the city was flourishing with 400 tanneries here producing leather. Now, with a sharp decline in tanneries, there are around 150 to 200 left here.
Inside Kanpur's Jajmau area, multiple tanneries throw up a pungent, stomach-churning stench, but also provide employment to thousands of people. But in the last few years, many have shifted their business to Bengal and elsewhere after tighter pollution control norms. A big jump in the cost of tannery waste treatment and orders drying up.
और इन लोगों को थोड़ा अंतर्राष्ट्रीय बाजार में जो मंदी चली है उसका बहुत बड़ा फर्क पड़ा है। अच्छा। अगर इसमें सरकार सहयोग दे या कोई बेल पैकेज दे सरकार तो ट्रेनियां चल सकती हैं।
गवर्नमेंट की तरफ से कुछ सपोर्ट मिल जाए, कुछ सहयोग मिल जाए तो आज भी इंडस्ट्रीज चल सकती हैं और मतलब पॉल्यूशन के साथ और बिजनेस के साथ समन्वय बनाकर के चलाया जा सकता है।
भारी संख्या में आप देख सकते हैं। The Bharatiya Janata Party won Kanpur for the first time in the 1991 Lok Sabha election, coinciding with the Ram Temple movement peak. The Congress won the seat between 1999 and 2014. In 2014, BJP stalwart MM Joshi won from Kanpur, and the BJP retained the seat in 2019 with a different candidate. The party has changed its candidate this time too. Ramesh Avasthi is a former journalist turned politician.
मुझे लगता नहीं कि कहीं उनसे कोई मेरी टक्कर है और ये आज गठबंधन है। उसके बाद आगे आप हासिल देखें तो जनता ने मान लिया ये गठबंधन नहीं, ये सिर्फ ठगबंधन है। मतलब हमको ठगने के लिए आ जाते हैं। माननीय हमारे प्रधानमंत्री नरेंद्र मोदी की जो जनहित की योजनाएं हैं वो घर घर तक गई हैं।
Against Ramesh Avasthi is Alok Mishra of the Congress, a close aide of party veteran Salman Khurshid.
हवा इंडिया गठबंधन के पक्ष में है। कानपुर में कांग्रेस बहुत ताकतवर है। 400 पार बिल्कुल सही बोल रही है। वो ये नहीं कह रही 400 सीटें पार, वो कह रही है 200 रुपए किलो जो अरहर की दाल बिक गई वो 400 पार, 200 रुपए लीटर जो कड़वा तेल बिक गया वो 400 पार।
In Kanpur's coaching hub Kakadeo, paper leak and lack of government jobs are a big poll issue.
प्रिपरेशन करते हैं, सब चीज़ करते हैं, जैसे ये बोल रहा था पेपर लीक हो जाता है उसके बाद, और पेपर लीक होने के बाद फिर कैंसिल हो जाता है, फिर नेक्स्ट वैकेंसी कब तक आ रही है, ऐसे करते करते 1-2 साल चले जाते हैं। उसके बाद फिर लड़कों बच्चों के लिए एज के लिए लड़ना पड़ता है कि हम लोगों को कोई रिलैक्सेशन मिलेगा कि नहीं मिलेगा। तो सबसे ज़्यादा दिक्कतें तो हम ही लोगों को हो रही हैं।
Roli Gudia, one of only 126 third gender voters in Kanpur, was allotted a home during Mayawati's tenure as UP Chief Minister between 2007 and 2012, but says that the road to real empowerment has been long-winded.
राजनीतिक पार्टी तो आज तक कोई हम लोगों के बारे में कुछ सोचा नहीं है। नहीं, बहुत ज़्यादा ज़रूरी भाई, क्योंकि जब तक जैसे कि हमारा कोई पुरुष जीत रहा है, ठीक है, तो अपने पुरुषों के लिए वो ज़्यादा कार्य करता है। जैसे कि हमारी महिला जीत रही कोई, तो अपने महिलाओं के लिए वो सोचती है। तो हम लोग भी यही सोचते हैं कि जैसे हम किन्नर हैं तो अपने किन्नर समाज के लिए ही कुछ करें।
Before the 2014 elections, the Congress won continuously for 3 times. But in 2014, it was Murli Manohar Joshi who became the member of parliament from here. And in 2019, it was Saddev Pachori. If the BJP manages to win one more time from Kanpur, it will be its hat-trick. But can Congress make any dent in the BJP's plans for hat-trick? We will only know when the people will answer on 4th of June. With camera person Virendra Kumar Saini, Arun Asif and Tanish Punjabi for NDTV.
Well, that was the coverage from the Kanpur ground itself. Now we move on to, listen in. My relationship with former Finance Minister P. Chidambaram was uneasy but not unhappy, is what former RBI Governor B. Subbarao said while speaking to NDTV's Gauri Dwivedi. He added that he declined requests for higher growth rates from the UPA 2 government. Listen in.
There were 2 finance ministers when I was governor. Mr. Chidambaram was the finance minister when I was appointed governor. Then Mr. Pranab Mukherjee was there for much of my tenure. And then towards the end of my tenure, Mr. Chidambaram had come back into the finance ministry. And it was an uneasy relationship, as you described it. I talk about it in the book. Perhaps part of it is hardwired into the system. There are differences traditionally, historically, differences between the central bank and the government. It's not unique to India. We've seen these differences in other countries, in Japan, in the UK, in the US, in Turkey, and we've had differences. What is important is how you manage them. And that depends on the economic situation and also on the chemistry between the governor and the finance minister or the prime minister, as the case may be. So I had uneasy relationship, but ultimately looking back, it wasn't unhappy.
Now it is Akshaya Tritiya today, which is an auspicious day to buy gold. It's believed that buying gold on this festival brings prosperity as well as good fortune. Now our colleague Akshat Mishra at Kalyan Jewellers in Borivali today. Now Akshat, give us a good mood check. Are people buying gold despite the higher prices during this occasion?
कस्टमर से बात करने के बाद ये अंदाज़ा ज़रूर लगाया जा सकता है कि लोग अक्षय तृतीया को ज़ोर शोर से मना रहे हैं। कई लोगों का ये कहना है कि अक्षय तृतीया है तो भाई सोना तो नेक के तौर पर ज़रूर लेना बनता है। कई लोग इसे इन्वेस्टमेंट पर्पज़ के उससे ले रहे हैं और कुछ लोगों का तो ये भी कहना है कि इससे पहले सोना और महंगा हो, हम इस सोने को अपने पास लेके रखना चाहते हैं। हमने स्टोर मैनेजर से बात करी तो स्टोर मैनेजर का ये कहना है कि थोड़ा दाम सोने का ज़रूर बढ़ा है, लेकिन लोग तब भी सोने की खरीदारी खूब कर रहे हैं और स्टोर्स ने काफ़ी तैयारियां कर रखी हैं, काफ़ी एक्साइटिंग ऑफर्स दे रखे हैं अपने कस्टमर्स के लिए, जैसे मेकिंग चार्जेस पे फ्लैट 25% ऑफ और कई ऐसे अन्य ऑफर्स हैं।
Another one of our colleague, Maitri, is now at Vaman Hari Pete Jewellers in Dadar. Maitri, give us the sense of the atmosphere there as well.
आज अक्षय तृतीया के मौके पर मैं हूँ दादर में और यहाँ पे मैं काफ़ी भीड़ देख पा रही हूँ ज्वेलरी शोरूम्स में। और जब मैंने यहाँ पे लोगों से बात किया और शॉप के ओनर से मैंने यहाँ पे बात की तो मुझे पता चला कि इस बार भी पिछले साल के मुकाबले उतना ही ख़रीदारी होता नज़र आ रहा है। हालांकि जो आंकड़े हैं कि कितनी ख़रीदारी हुई वो दिन के अंत तक ही पता चलेगी, पर ऐसी उम्मीद की जा रही है कि पिछले साल जितनी ख़रीदारी देखने को मिली थी, जितने लोग ज्वेलरी शॉप्स में आए, जितने फुटफॉल्स देखने को मिले, वो उतने ही लगभग रहेंगे। अब बात करें अगर ट्रेंड्स की, तो बहुत सारे ऑफ़र्स और डिस्काउंट्स हैं जो जिनसे और ज़्यादा जो हमारे कस्टमर्स हैं वो अट्रैक्ट हो रहे हैं। और साथ ही साथ डिज़ाइंस की अगर बात करें तो फिर हर तरीके के डिज़ाइंस में ख़रीदारी है। ऐसा नहीं है कि मुहूर्त ट्रेडिंग है तो सिर्फ कॉइन्स की ख़रीदारी हो रही है। इवन ज्वेलरी को लेकर, स्पेशली जो ब्राइडल ज्वेलरी है, अगर हम उसकी बात करें तो उसमें काफ़ी बिक्री देखने को मिल रही है इस समय, क्योंकि शादी का जो सीज़न है वो भी पास में ही है। इसीलिए कई ऐसे शोरूम्स हैं जिन्होंने मंगलसूत्र का नया रेंज यहाँ पे निकाला है, नेकलेसेस की बात हो रही है, अलग अलग ट्रेंड्स की बात हो रही है। तो डेफिनेटली इस बार मुहूर्त ट्रेडिंग सिर्फ कॉइन्स और जो गोल्ड बिस्किट्स हैं उनको लेकर तो नहीं है। एक और यहाँ पे जो मैं देख पा रही हूँ वो गोल्ड प्राइसेस को लेकर है। काफ़ी ऐसी चिंताएं थी कि गोल्ड प्राइसेस बढ़ गए हैं तो उसकी वजह से शायद कम क्राउड देखने को मिलेगा इस अक्षय तृतीया पर। ऐसा कुछ भी नहीं है, उतने ही लोग हैं। और इवन जो ओनर्स हैं, जो मालिक हैं शोरूम के, उनका भी यही कहना है कि यहाँ पर हम अगर गोल्ड का बिक्री नहीं देखेंगे तो डायमंड का देखेंगे, क्योंकि इतने वेराइटी ऑफ ऑप्शन है और जो कस्टमर्स है वो हर ऑप्शन के लिए ओपन है इस समय। साथ ही साथ डिस्काउंट्स भरपूर होने के साथ साथ मेकिंग चार्जेस पर भी कुछ कटौती की गई है, जो और ज़्यादा ख़रीदारी और ज़्यादा लोगों को अट्रैक्ट कर रहा है आज के दिन। सो अक्षय तृतीया जो है वो आज काफ़ी भाग्य जुड़ा है अक्षय तृतीया के साथ लोगों को लेकर। और बिल्कुल अक्षय तृतीया पे अच्छी खासी बिक्री देखने को मिल रही है और बहुत ऑप्टिमिज्म है, बहुत ज़्यादा कॉन्फिडेंस है ओनर्स को आज के दिन को लेकर।
And that's all that we have on the show for today, but do stay tuned to NDTV Profit as we have lots more lined up on the other side.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell.
The grass is always greener on the other side. I found that to be true in a lot of cases. When, for example, you're working for a company and earning a salary, you dream about what life would be if you were your own boss, if you could choose when to wake up and when to work. How amazing does that sound? You'd be able to wake up whenever you want, like I said. You'd be able to take days off without having to take permission, and also have flexible working hours. If on the other side, you're a freelancer, you're dreaming of a regular income as well as fixed working hours and retirement benefits, to say the least, as well as group health insurance. This is Big Decisions on NDTV Profit, and I'm Alex Matthew. On today's episode, I'm reaching out to all of the freelancers out there. If you are a freelancer, we're going to talk about what the challenges are that you face and how do you overcome them, as well as the ways that you should manage your money effectively. But before we get to that, let's talk about some of the misconceptions out there about managing money as a freelancer.
As a salaried employee, you might think that the life of a freelancer is all about flexible work hours, endless coffee, and cute co-working places. But it's also a constant battle with, so what have you decided about the future? Freelancing comes with its fair share of misconceptions. Some people think we can't get a loan, some think we can never make a retirement corpus, and well, some just think we can never fully manage our expenses on our own. Most people also believe that we can't do any regular investments like SIPs just because we don't have a steady income, nor can we have any long-term goals. Another one that I've heard is that we don't need insurance, be it life or health. But everyone needs a safety net, right? The most common one I've heard though is freelancing to theek hai, but what are you really planning to do? Are you planning on getting a job or starting your own business? But the thing is, freelancing doesn't need to be that risky, not if you manage your expenses properly. And that is exactly what we're going to be talking about on this episode of Big Decisions.
My guest today is Harshvardhan Rungta, co-founder of Rungta Securities. Harsh, thanks as always for taking the time.
It's always my pleasure, Alex, to be here.
And it's great to have you back on this new avatar of Big Decisions. Let's talk about freelancers. And I must admit that in the mainstream media, we often, shall we say, skirt this group of individuals in favor of the salaried individual. Is it very different, the managing of money, if you're a freelancer?
Yes, in fact, as you rightly said at the beginning, that if you're a salaried employee, there are certain benefits that you get. There are some compromises you have to make. Now, there are going to be pros and cons of each type of profession that you're pursuing. If you're working with a corporate, you have certain comforts and at the same time certain challenges. If you're a professional freelancer that you're on your own, then you're not going to get certain flexibilities that you have or certain privileges of being into a corporate sector. Like, for instance, you have a regular income coming in the form of a salary if you're salaried. Now, that is a great advantage in terms of planning your finances, right? You have visibility of your cash flows, so you know, and you can commit yourself to certain, say an SIP, as simple as that. Whereas a freelancer would have certain challenges to commit a maximum amount towards SIP. So what we would necessarily, talk to a freelancer or professional in that context would be that you commit the smallest amount, okay, as an SIP, so that there is a flow that you know that on an auto mode, certain amount will get deducted from your bank account every month. Over and above that, if you land up saving something in a particular month, then you do a lump sum investment. So yes, there are going to be pros and cons in each type.
But let's talk about some of the challenges that you might have discussed with people that have come to you for advice. Is the irregularity of income the biggest challenge to overcome?
Yes, in fact, as I said, everything is dependent upon how regular you're going to get your cash flows. So all planning essentially would be dependent on this one single factor. So while for a salaried, we know there is visibility of exact amount of money that is going to come in. So you can plan many things accordingly. Whereas for professionals and freelancers, there is going to be, phases where you have no income. You've rendered your services, but the bills are going to be paid after a couple of months. Okay, so that could be a kind of a situation. But your expenses on the other side are fixed.
Yes.
Right. So your income could come in, in lump sum sometime, only in a couple of months in a year. But your expenses are going to be incurred every month.
So then from that perspective, is there any way to get around that? The obvious way would be to have a certain amount of, I loosely calling it a contingency fund or an emergency fund, but could it be a daily needs fund, if you can call it that?
Yes. So in fact, what we do for freelancers, I'll tell you. So there are two parts to this. The first one being that 6 months worth of your expenses, the mandatory expenses, which are your household day-to-day living expenses, your food, clothing, shelter, in fact. So 6 months worth of that, you keep it aside in a liquid fund.
Sure.
So that's essentially only to take care of your living needs, as you rightly mentioned. It's not a contingency fund, it's your expenses fund.
Okay.
Okay, so this is just an employer kind of a situation that you kept it aside, saying that every month, whenever I need money, I will pull out of this particular fund. Now there's another set of expenses which are annual in nature, okay, which is not going to come every month, but these are annual commitments that you have.
Right.
Now these are also mandatory expenses. Okay, so our suggestion on that count is, like, say for example, your children's fees.
Sure.
The schools may charge you on a quarterly basis or a half-yearly basis.
But that amount is for the full year anyway.
That's for the full year.
Yeah.
So what we recommend in cases such as a school fees or your housing society charges, your insurance premiums that you have, you rather make advance payments for them when you have the money with you.
Right.
Okay, so say for example, you have to pay your children's school fees. So what do is, though the school may ask you to pay quarterly or half-yearly, you can go up to the school and say, look, I want to deposit that annual fee at one shot itself. At that time when you have the money in your hand. Okay, what this helps you do is that because your schooling cannot stop, right?
Yeah.
Irrespective of whether your client has paid you or not, you will still need to pay your fee. So at least those expenses you ensure that you've paid off in lump sum, so that you're not worried about for the next whole year. Look at it from a life insurance or a health insurance perspective.
I was going to come to that, but we'll talk about life insurance and health insurance a little down the line. What I want to ask is, at the start, assuming that somebody's listening, watching this, and they haven't done any of this, and they want to set their finances in order, Harsh, what do they prioritize? Do they look at these expenses first and foremost, because that's something that's not going away, and then after that, once that is put into place, because it's going to take some time to put those 6 months together, only then do you look at investments?
Yes, of course. I mean, so, as much as we say that you should save for your retirement well in advance, etc., but you will have to still wait for the right time when you can start investing for it.
Right.
Now, in cases of freelancers and professionals, as I said, if your priorities are going to be different. As I said, first make a list of all those mandatory expenses which you have to incur in a year.
Right.
And there's no choice to it. So it's school fees, housing society charges, your electricity charges for that matter, your utility bills for that matter.
Even your rent, I would think.
Your rents and your insurance premiums. Okay, so these are expenses, whether or not you're earning, you will have to pay for the year. So you make first those mandatory expenses that you have, you make a list of them.
Right.
Now what you do is, then of course the 6 months worth of your living expenses you'll need to keep provisions for. So these two things, you have it in your hand right now.
Yes.
Now as and when you get paid for your services, you allocate towards them.
Okay.
Okay. What you could do, as I said, is at first keep aside for 6 months, because if you're not going to be having some work or freelancing job work, if you don't have that for the next 2 or 3 months, doesn't mean that you're not going to have your food in that period. It doesn't mean that you don't have to pay electricity bills.
Very true.
Right? So what you do is, first you ensure that you have enough buffer for your 6 months cash flows. Okay. Thereafter, if you're left with something surplus, you will think of long-term investments.
But then, so 2 questions here. Why liquid fund? Why not just leaving it in your bank account, or have your flexi fixed deposit in terms of your sweep in, sweep out facility? And the second point is, what happens to the contingency fund? Because I would think that these individuals would need to have a larger contingency fund, or is that a misconception as well?
No, so contingency fund is a part of the living expenses that we're talking about in this case.
Okay, it covers that.
Yeah, in this particular case.
Sure.
Why? Because the flow of income is not going to be assured unlike a salary. So what do you mean by a contingency fund? Is such a situation.
When you don't have a job. Right, okay.
So contingency fund is equivalent to this. Right. So as you're rightly kind of pointing out, that what do you do? So first is, of course, you need to make sure that your present is pleasant as well.
Right.
Right. We can't be in a situation where your next month's expenses are, you don't have visibility of that, and you're talking about retiring after 10, 20, 30 years.
Yeah.
It's not going to logically make sense to anybody.
But why liquid fund?
Okay. So either ways, given the sweep in, sweep out facility, if you are comfortable with that, you can most certainly continue with that also. There is no problem. Just a small, administrative issue. if there's a sweep in, sweep out account, I mean, there is a tedious implication.
Sure.
Okay, because it gets converted into a fixed deposit. Then every time there is going to be a small, withdrawal. So there is going to be some kind of TDS and those compliance issues.
Whereas liquid mutual funds, there is deferment of tax. Whenever you pull money out, you then pay taxes on.
So that's simpler to calculate. You don't have to. It's just simply a long-term, short-term capital gains tax statement that you need. Where vis-a-vis, when you compare to this will be more like an interest payment to you.
All right. Now, the next point is about your insurance, because you mentioned that, and this is, I know that you've said this on conversations that we've had in the past, that you need to have a few things in place before you look at investments, right? And your safety net is the most important thing. A lot of people, be they employed by someone or working for themselves, they look at insurance and think, why do I need this? But why would you say that freelancers absolutely need insurance, and how much do they need?
So in fact, Alex, all individuals, whether employed or unemployed, or for that matter freelancing professionals, I mean, everybody needs insurance. Okay, I would say, I put it like this, insurance is the best man-made product in this world. I mean, it is the first step of financial planning. And I go ahead and say to this extent as well, that in case you have to delay your investments, you delay your investments if required, but do not delay insurance. I mean, that's how critical it is as a part of your own financial good well-being.
But so health is non-negotiable. Term, I would think, is negotiable depending on whether you have financial dependence.
Absolutely. So health insurance is something that you are just ensuring that you are accessing good medical treatment in case you fall ill. Even if you're maintaining a very good lifestyle and you may think that you're the fittest and you consuming the best of food, you're taking full care of yourself, accidents happen, there's so much of chemicals that are going into our body, in terms of pesticides and all those things.
And you never know.
I mean, I've seen the healthiest of people suffering from cancer, all you know.
Yes.
I mean, healthiest in that sense, maintaining good lifestyle, maintaining good diet, working out, etc. But, if something like a cancer strikes you, what do you do? So you just have to ensure that you have access to good medical treatment. And given the cost of medical treatment these days, I mean, a treatment of during COVID, an average hospitalization cost was 1.5 lakhs. That was average, the national average that I'm talking about. And claims in that time also were paid only to the extent of 90,000 rupees. So there was still some money that you had to pay. So imagine some claims that have gone to even 10 lakhs and above. I have seen cases where claims have gone to even 50 lakhs for COVID kind of a treatment. Right. So how do you access good medical treatment for yourself? So whether you're working, not working, unemployed, whether you're a freelancer, illnesses don't strike you just because you have money.
So, and how much do you need as health insurance?
So, well, if you're in metros, because the cost of treatment is going to be higher there, given the current situation, being very conservative, just because I have to give you the minimum amount, I would say that do not have insurance less than 10 lakhs.
And if you are part of a family, then you should look at top-ups as well.
Yes. So, in fact, if you are in middle to affluent family, I mean, make sure that you have a combination of a base policy and a super top-up, going up to say a 50 lakh or a 1 crore cover.
Wow. Okay, that much.
And that is possible with a very nominal premium because of this super top-up concept. Okay, so if you're a middle income or an affluent family, just ensure that you buy an insurance in combination with a base and super top-up to the extent of at least 50 lakhs or 1 crore. Okay, nowadays we have even options of global cover being included. You can go for treatment overseas.
Sure. So we've covered quite a bit of the cost side of it. I want to talk about the investments and the savings for goals, and also a lot of people that tend to want to create a business. I know of a lot of professionals that say that that's the next logical step. So I'd like to talk to you about the pros and the cons, and also the pitfalls to avoid about that. But we have to slip into a very quick break. Before that, we'll be back on the other side with a lot more. Do stay tuned. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option.
Welcome back. We're speaking about freelancers and how they should manage their money, or you should manage your money if you're a freelancer yourself. Harshvardhan Rungta is in conversation with us on Big Decisions. Harsh, we've spoken about the cost side of things, but when it comes to the investment side of things, I think a lot of people face this challenge. If they're spending so much time and effort and money, setting aside that amount of money that's going to be taking care of their daily expenses, they're focused on the very near term. How do they save for their, 20 years down the line? You're talking about post-retirement. Do freelancers ever retire?
They would not intend to retire, of course, because the purpose of doing freelancing is that you're offering certain specialized services, which is a skill set, essentially. And that hopefully will not be outdated over a period of time, and they would continue to work as long as they can. So, this is a very interesting element of saving for long term. Why? Because you're so engrossed with managing your cash flows in the present that you lose sight of what you need after, say, probably 10, 20 years from now. But you have to somewhere ask yourself, shake yourself up and say, look, one day, if I'm going to struggle for my cash flows in the present, I don't want to be doing that 10 or 20 years down the line, right? Because you never know if your skill sets are still relevant. And you may not probably at that point in time be able to offer freelancing services. So what happens at that point in time? And you don't have an organized pension or a EPF or an NPS for that matter to take care of you. So what do? So there's one small side that you'll have to, by the corner of your eye, just keep, be mindful of the fact that, look, if I am able to set aside a small sum of money, okay, it need not be a huge fancy number. It could be as less as even say 1,000 rupees. Just giving an example, need not literally mean 100. That does not mean 1,000 rupees at all. It could be as much as you can set aside comfortably. Set it aside, assuming that you don't have that money, access to that money at all. As if your client has paid you less to that extent. It could be 10% of that income that you're generating. Set that 10% or 20% aside.
So when you're saying it could be a percentage, what according to you is the ideal? And of course, you have to strive to it. It may not be possible, but in your opinion, what is the ideal amount to set?
It's very difficult to generalize because it depends entirely on what stage of freelancing
and how
you're
much
in.
You're getting, yes.
So if it's, so let's assume.
But you're starting out.
Yeah, so let's assume that extreme, that you're just starting out, you're trying to build yourself as a professional or a freelancer. Try and set aside 10%.
Sure.
Even if it means 1,000 rupees.
Yeah.
Okay, but just form that habit, create a corpus, create a fund rather, to say that, look, I'm setting this money aside for a time, say 20 years from now.
Yeah.
It's as good as TDS, say for example, a client is deducted
tax
TDS.
deducted as source.
Yeah, so you feel that, there's another 10% deducted as a retirement fund for you. If you were in employment, even then there was a deduction from your salary, right? So why don't you behave as if you're employed and doing this for your own self? So put a 10% aside, and as and when your income keeps going up, that 10% will obviously incrementally go up. Alternatively, what you do is that whenever you have some surplus left at some point in time, then pocket lock, stock and barrel.
So lump sum investments whenever you get the chance.
I think there's no other way, because if you have irregularity of income or no visibility of a smooth regular income every month, then as and when you get money, you'll have to park it aside.
Right.
Now, it does not mean that you need to put a lump sum. If you have few lakhs coming in, you don't need to put that entirely into equity.
Sure.
At one shot. If you're not comfortable with investing lump sum, you could do an STP, no? So you invest it into a debt fund.
A systematic transfer
plan.
So you put it in a liquid fund, which you're doing already for your daily expenses. You can maybe have another liquid fund, and from that fund you can do a systematic transfer plan into a couple of, or 2 or 3.
Exactly. So
funds.
in case you're not comfortable investing lump sum in equities.
Sure.
So you have received a lump sum which you don't need in the next 2-3 months.
Yeah.
So why not put it aside for something that you may need after 10-20 years from now?
Okay, so what you're essentially saying is that SIPs may not work, obviously, because you don't know when you're getting money.
So one thing you could do over here is, for the SIP part of it, that you commit the lowest amount that you believe that you will have in any case.
Right.
So suppose your total potential to invest every month is 20,000 rupees. Say the best case scenario. Commitment you can also take for 2,000 rupees. No?
Yeah.
So you can say at 2,000 rupees will go
whatever
whether
you're comfortable with.
Whatever you're comfortable with. 1,000, 2,000, 5,000, whatever you're comfortable with. So let there always be one amount which is auto debited. Okay, so that has to continue. Now, as and when you receive a lump sum and you don't need it in the next 2-3 months, then you can just put it as a lump sum in the same fund. Plus that SIP continues. Why am I saying that minimum amount at least you should commit? Because unless you commit, irrespective of the amount, you will not have it in the system, in your scheme of things to do.
In your experience, is it tougher to get a loan as a freelancer?
See, if you have some kind of income, it need not be every month, but you have regularity or some kind of a pattern in your income for the last 3 years. Okay, not as just starting off, but if you have certain kind of a history of 3 years of some pattern of income, then it's not very difficult to get a loan.
And if you, so for example, one of the biggest loans that you would take is a home loan, and there are risks associated with that. Of course, you've said this before, but I will reiterate it. You should ideally have term insurance if you're buying a house and if you have dependents. But having said that, are there any pitfalls that you should be aware of before you go and buy a house as a freelancer?
So see, house is a very long-term commitment.
Yes.
Okay, you don't want a situation that you've paid 25 or 50% of it, so some amount of it you have to pay down payment, which is approximately 20%.
Right.
So that much you're already committed to the property. Thereafter, you're also committing a fixed payout every month in the form of an EMI, and you don't know how much income you're going to generate. If you're in that stage, there are many freelancers
who are doing really well,
who are doing very well for themselves. And then I'm not talking about those people. I don't think we are addressing to those people in that any case. So we're talking about people who are in that zone where they're just in the process of setting themselves up with irregular cash flows. So while house is a very big commitment to make at that point in time, you're just putting undue pressure on yourself at this juncture to say that, look, my payments are going to be fixed. What if I don't pay? Then what happens?
So wait till you have a little bit of stability, you have larger amount of income coming in, and then you can take that call and save till that point.
Absolutely.
So instead of 25% down payment, you could well do 40% off.
So and because house is something that you can also take on rent, right?
Sure.
It's not that if you don't have a house, you have nothing to, nowhere to stay.
Yeah.
So then it does not fall into the mandatory category at this juncture.
So then the last question, and that has to do with those individuals that are looking to take the plunge and set up their own business. In a lot of cases, they're doing things that are allied and that would lend themselves to setting up a business. Is there a distinct advantage to setting up a business?
So setting up a business or doing freelancing is more or less in the same category.
Yeah.
Just that when you're setting up a business, it could, see, freelancing would essentially mean giving your services.
Sure.
Okay, business could be, you can put up something which requires a lot of capital to be infused into in the form of an infrastructure that you need to set up.
Yeah.
The kind of people that you will need to run the business. So that's a different equation in that context.
Yeah.
Okay, but
you're working with more people.
Correct.
Yeah.
So freelancing would be you're rendering your own personal services for some, just doing something which is only to do with you.
Yes.
You don't have a large infrastructure. You could do it from home.
Sure.
So, but when you're doing a business, then of course there is going to be some goods or services that you're going to produce in that sense to offer it to your clients. So, which will entail an infrastructure.
Yes.
So, all those people who've been into corporate life for a certain number of years and then they accumulate that kind of corpus, build that regularity of income through that investment, and then plunge into business is a different scenario altogether. Now, if you don't have that corpus and you're plunging into business, then your primary objective is to make the business work.
Yes.
And at that time, if I was to land up in somebody's office and tell them, look, don't worry about your business, save for something 20 years from now.
You're not going to be thinking about that. And also, I would think that if you are setting up your business, the biggest investment that you can make is in that business.
Exactly. And the kind of returns that a business gives, probably an investment will not give.
Yeah.
So if your business is successful, I mean, your retirement is taken care of in that context. So setting up a business has got a different,
connotation.
Yeah.
So, but the bottom line that I'm taking from this conversation, that it's not terribly difficult. Of course, there are challenges, especially in the early days. But the other advantage is to push the envelope just a little bit more. In a salaried job, you only get a certain amount of salary. Whereas I would think that with I've never done it, but I would think that as a freelancer, you can maybe take one more gig and push the envelope a little bit more. So maybe you earn a little bit more in those early
Absolutely.
years.
So that's as popularly said. I mean, in a job, you know exactly what you will gain, what you will earn the maximum, right?
Yeah.
That's the most you can do, that's the most you learn. In a business or a freelancing, that's the minimum amount that you can earn,
and the ceiling is endless.
The top is you can just go as much as you can. So, and as you rightly said, it's not terribly difficult. It's just about whether you're able to manage your rather you spread your legs as much as you have, as much as you can tolerate. As बोलते हैं ना, चादर जितनी बड़ी उतनी पैर.
Exactly.
So the point is, you can survive for sure. It's just that you need to be within your means.
Yes.
And you need to plan. Okay, you just need to be clear in what you're doing. So as I said, we've been discussing what should they plan for.
Yeah.
Is that you make a list of your fixed expenses, provide for them, then you're free to do what you want to do, right?
Absolutely.
So those fixed expenses need to be provided for, and if you've done that well, then I think then you're a free bird to do whatever you want, and then you're not worried about your expenses.
And that's exactly what I wanted to have communicated. Harsh, thanks so much for joining us on Big Decisions. Viewers, listeners, it's been an absolute pleasure bringing you this episode. Do write to us if you've got any specific questions, and we'll try and address them in future episodes. Do stay tuned. This is NDTV Profit.
As citizens, we must remember that voting is not only a privilege, but also our duty towards our nation. I, Akash Ori from the DLF Group, pledge to encourage my colleagues, their friends and family to vote for the government they believe in. This is the strength of our democracy.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insight.
Hello and welcome to NDTV Profit. You're watching IPO Adda, and the company in focus for us today is Go Digit General Insurance Company. It's coming out with an IPO which opens on May 15th, closes on 17th, price between 258 to 272 rupees per share.
The issue comprises of 1489.6 crores in fresh capital and an OFS of a little over 2,600 odd crores, where promoters are selling some of the stake and some other shareholders are also selling their stake there. And joining me is Kamesh Goyal, who is the chairman of the company. Mr. Goyal, thank you very much for joining us on NDTV Profit. My first question to you, sir, I was going through your RHP, and prior to that on the DRHP, there has been a, you have basically scaled down the size of the IPO with respect to the OFS portion. Can you take us why?
Good morning and thanks for having me. So basically, the offer size has been reduced simply because the selling is only happening by the holding company and no other shareholders are selling. And we felt that from the holding company's perspective, as a promoter's perspective, that at this stage, we would only want to offer what is the minimum possible shares in OFS to make it to the minimum requirement of 10% of the offering and not really sell more.
Because if I look at your fresh issue also, it's been reduced by nearly 100 odd crores.
That's right. Actually, because the IPO was a bit delayed, in month of December 2023, we had raised about 200 crore of Tier 2 capital. So if you include 200 crores of that plus 1125, yes, actually overall capital which we are raising, not share capital. The first one was, as you said, is more Tier 2 capital, more non-convertible debentures. So I think we're still raising more than what we intended for the company. But the primary offering has been reduced because that that capital was raised already in December 23.
Give me a sense of, sir, what are you going to do with the fresh capital? Is it going to be fully to augment your solvency, or is there a separate use for that capital?
So actually, in insurance business, you have to maintain solvency margin, like banks have to do capital adequacy, and this solvency margin is essentially linked to the premium. It is not really linked to your assets or to the cash flow which you have. So the entire solvency, the entire capital will go towards beefing up the solvency to support the future growth of the company. If we look at purely from a asset size or AUM perspective, as of December 31st, 23, our AUM size is approximately around 15,000 crore. But I think this is purely from a solvency perspective.
So how will your solvency move? Because if I'm not wrong, it was around 1.7 at the end of December. So where will it be after the IPO?
I think we should definitely be over 200%, 210% or so, because the solvency will get calculated after the capital raise as of 31st of May. So, and obviously from December to May, 5 months would have gone. But my sense is that we should definitely be over 200% after this capital raise.
This capital raise would be good enough for a growth rate that you've been growing for the last 2 to 3 years. Means if I look at your gross direct premium income and how it's growing, it's over 30%. So is it sufficient enough for the next few years for you?
So our sense is it should be for the next few years. But how many years, how much growth, etc. I think that is very difficult to, I would say, project. And we also don't really work on that basis. But my sense is, if we look at from the day we started till December 23, in terms of equity capital, we have raised roughly around 3,400 crores. So this actually is 1/3 of the additional capital we are raising. And overall company is also profitable as of December 23. So those profits will also add to the solvency. So I feel that it should be decent in the near future, but all these numbers projections can change depending on as to how on what sort of opportunities which come.
What about operating profit level? Because I think there you have your losses have improved, has narrowed down, but it's still at a loss.
So in insurance companies, in general insurance companies, there's a very famous Warren Buffett's letter, 1997 letters to the shareholders, in which he had defined the concept of float in general insurance companies. So when we actually look at profitability of general insurance industry anywhere in the world, including India, investment income plays a very important role. And this investment income comes, I spoke about 15,000 crore of AUM for Digit as of December 23. Out of that, the net worth is only about 2,500 crores. So this 12,500 crore of AUM has come from the insurance business only. So without investment income, there's actually no logic to look at the overall profitability. My understanding of insurance business is that we need to look at the overall profit. And I think on that basis, as I said, we were profitable already on December 31st, 23.
How do you look at the entire, claims ratio point of view, and how do you compare yourself with other general insurance companies? Now to clarify it, you are you are digital insurance mostly, and you should be compared either with Navi or for that matter ACO. But those two are not listed, so I have to compare you with the listed one who have a dual model of there. So how do you compare yourself with them?
So one great thing about insurance industry is that whether you are listed or not, every company publishes their quarterly results on their website. So even in case of Digit or anyone else, all their results are published on the website of the companies as of 31st December. Every insurance company results are there. So you can actually look at all insurance companies. Our sense is that if you look at our loss ratios overall in the last 3-4 years, we should be amongst the best in the industry. I don't want to get into individual companies' name, but as I said, data is publicly available, and our loss ratios would really be good overall compared to almost any player in the industry.
And what about the return on net worth?
Return on net worth, as I said, last year till December was which is our 6th year of business. Our business is, I would say, has a long gestation period. So if you think from a perspective of, I would say, any startup in any sector in India, in the 6th year of business, in 9 months to reach premium of about 6,800 crores, and this excludes service tax, which is included in the revenues of all other companies in different sectors. And to reach a profitability, my sense is, I have not seen every single company in the sector. My sense is you'll not find many companies who have done this. You can also compare Digit's performance to any insurance startup anywhere in the world and see how many companies have been able to reach this sort of either volume of business, scale of products, number of policies, and also profitability. So, and I think media does a great job in covering both startups as well as insurtechs, or so-called new insurance company across the world. I think you can correct.
Unfortunately, the street looks at the listed company and the ratios of the listed company. So, you have those ICICI Lombards and the Bajaj Alliance of the world where the return on net worth are much higher than yours.
So there again, the question is that we are looking at a company which is 6 years old and looking at a company which is 23, 24-year-old. I'm sure over a period of time, we can be compared even on ROE with other companies. But I think if you see it from a 6 years perspective, you will not find any insurance company which has reached this sort of a scale in 6 years. But industry and street is right. They have to compare us with the best. And as I said, over a period of time, as we reach another 3-4 years, I think it'll be the time then. Once you're 10-year-old, I think then it's a good time to compare with companies irrespective of age. That's my personal view, but everyone is entitled to their own views.
What you're trying to tell us that there's enough growth runway for you, and so by the 10th year, you will have that growth runway is available for the investors, right? That's what you're saying?
No, what I'm saying is that insurance business, it gets a bit technical, but if you actually look at when you grow fast in our industry, the way accounting works is that your revenues earned on a 1/365 basis while your expenses get expensed on day one. So this obviously creates a bit of a strain on the P&L in the initial period. That's what actually I'm trying to say. As no other reason, it's nothing else which is linked to. So the way one should look at is loss ratio should be seen irrespective of how old a company is. Expense ratios have to be seen over a period of time because that is the, I would say, a matter of scale. And also this accounting maturity, where initially when you are growing fast, you obviously have more expenses. And if you can, anyone can compare, as I said, all results are available. Any company can be compared in the first 6-7 years, listed, unlisted, any company in India and across to see what sort of a revenue and ROE, etc. we have. I'm sure we would be doing well in that segment.
Give me a sense of the segments as well, because you are there in the motor, property, health, personal accident and travel segment. But if I'm not wrong, 61% of your gross written premiums are coming from motor. Do you see property and health to play a bigger role going forward?
So I think if you look at, say, December 23 and prior to that 3 years, and all this data is available in RHP and from day one data is available on our website. I think, if I recall correctly, in the last 3 years, our growth in non-motor has been more than motor. And the percentage of motor has been coming down. But I must add that we as a company don't feel that there is an ideal line of business mix or there is an ideal distribution channel mix. We try and look at opportunities irrespective of product or channel. And we don't drive ourselves artificially towards an ideal mix.
Okay. Also give us a sense of the combined ratio that you have, because among your peers, how do you fare in that ratio?
So combined ratio, I would say 2 things here. First is that profitability is not a straight function of combined ratio. And you can look at, say, companies in health insurance, even if with the combined ratio of 94, 95, they might have an ROE of 14, 15%. On the other hand, a multi-line insurance company, and I'm talking about India right now, could have an ROE of about 16, 17% with a combined of 104. And in the case of Digit, because our leverage is higher, even if we compare ourselves to other multi-line, as I said, over a period of time, at the same combined ratio, our ROE will be higher. So I think our business, it would be a mistake to only look at combined ratio, my understanding of business, of general insurance business, and one has to look at it overall. Otherwise, you could be writing a company with a combined ratio, as I said, of 95 in health insurance and have an ROE of 14 or 15%. While another company in multi-line, as I said, at 104 gives you an ROE of 17%.
Right, well, we're breaking news here, and we understand that Arvind Kejriwal has got bail from the Supreme Court at the moment and then gets interim bail until June 1st. Well, the request was for July, but for now, we are looking at the latest. And we're gathering more details at the moment, but this is the latest in terms of what we have now. I also have my colleague Tamanna joining here with us. Tamanna, a significant moment for the AAP campaign at the moment.
Yeah, big news this afternoon. Remember, Arvind Kejriwal has been trying to secure this bail for a while, and the conditions of this bail also make it very interesting. He's been given bail; it's an interim bail only for campaigning till June 1st, which, remember, is the last day of polls. That's the 7th phase of polls. On June 2nd, he has to surrender himself. So when the results are declared, he will be back behind bars. So this is solely for the purpose of campaigning. It's important because it coincides with the voting in Delhi and Punjab, which is in the 6th and 7th phase each. And these are where the maximum of Aam Aadmi Party candidates have been fielded, the 2 states that the Aam Aadmi Party runs right now and where they're the strongest. So he manages to come out in time to campaign for this. Amitabh Tiwari, political strategist, on the phone line with me, just to get a very quick sense of how significant this is and how much of a difference it makes to the prospects of the Aam Aadmi Party. Amitabh, first of all, significant because it's specifically to allow Mr. Kejriwal to campaign, and he comes out from behind bars and speaks to voters from this backdrop of, listen, I have been put in jail.
Yeah, so essentially, as you mentioned, the two states where AAP has maximum influence go to polls, and Aam Aadmi Party was missing him for campaigning, since Aam Aadmi Party is largely dependent upon Arvind Kejriwal. There's no other leader of his stature. So it's good news for Aam Aadmi Party in the sense that their star campaigner is out on bail, and he could focus on these 20 seats where the Aam Aadmi Party government is there. He could also actually become a star campaigner for the India Alliance or bloc and could campaign in other states also.
Delhi, for example, which goes to vote on the 25th of May, the BJP won all 7 seats in Delhi in 2019. It's the India Alliance right now which is fighting together, and the Aam Aadmi Party has a significant number of those 7 seats from on behalf of the India Alliance. How much of a game changer is it politically, Amitabh?
Essentially, in Delhi, there is a big swing vote. So essentially, we've seen that a large chunk of people vote for BJP in Lok Sabha and then vote for Aam Aadmi Party in the Vidhan Sabha election, which essentially means that this voter is not hardcore ideologically aligned voter of any party. So this is the voter which Aam Aadmi Party will be tapping into to get some sort of sympathy as to how because of the political vendetta of the BJP, a sitting chief minister has been put behind bars. So that number is pretty big in terms of almost 36% voters who switch between parties in different directions, and that is where Aam Aadmi Party will be focusing on. Of course, they have Congress as a partner. They are contesting on 4 and Congress on 3. And since they have gained largely at the expense of the Congress party, the vote blocks are fairly complementary. They hope that the vote share of the Congress and Aam Aadmi Party also seamlessly transfer to each other, and they tap into this swing vote to make things difficult for the BJP, is what they hope. Yeah.
Okay, so Kejriwal coming out to campaign for Delhi ahead of the elections becomes important, ahead of the vote becomes important. What about Punjab from an NDA versus India Alliance point of view, Amitabh?
No, so Punjab is complicated because in neighboring Punjab, he will have to basically ask for votes against the Congress party, right? Because both the parties are not in alliance in Punjab. And the main competitor somehow for Aam Aadmi Party is the Congress party, which won 8 seats in 2019. Though BJP also has inducted a lot of leaders from both Aam Aadmi Party and Congress and is hoping to make a significant dent, but largely the battle still is between the Aam Aadmi Party and the Congress party. So there it could become tricky for Arvind Kejriwal, and we'll have to see which party he attacks, because BJP is not a big player there, correct? Congress party is the big player. So we'll have to see how he shapes his campaign and how he differentiates between the two states while campaigning, and which is the party he is largely targeting. Because if he continues to target BJP even in Punjab, what happens is that indirectly Aam Aadmi Party then props up BJP, and this is what BJP would want it to do, because then it becomes Aam Aadmi Party versus a BJP kind of a battle there as well.
You know, interesting in terms of what the top court has also said. So Kejriwal had said he wanted time till July. The results are coming out on the 4th of June. The Supreme Court said no. He said we are keeping the same conditions like Sanjay Singh when he was given bail, and said clearly also, let's not make it a prestige issue. I'm wondering, within the voters of the Aam Aadmi Party and the India Alliance, the fact that 2 of their key leaders will be coming out on bail to campaign and ask for votes. How will that go down, Amitabh? Is that a positive or a negative?
Well, at least for the party, it is a positive because they have been bereft of a leader, a strong leader who has been campaigning. And Kejriwal will also try to gain some sympathy. His wife has been campaigning and trying to garner support. Because one is that you need to keep your own vote bank together, which might also be dented by the BJP on the grounds that Arvind Kejriwal or the Aam Aadmi Party, which claim to be a party with a difference, is actually behind bars or rather out on bail in a corruption case. So the bigger problem for the Aam Aadmi Party today is to keep its vote bloc together, because it is a party which was born out of a corruption against a movement against corruption. So to convey to its voters that they have been politically framed in a case, that would also be a daunting task for the Aam Aadmi Party in both the states.
So a tricky one either or, and interesting that in Delhi it's an advantage to the India alliance, but in Punjab it's a different story because because Congress and Aam Aadmi Party are not together in Punjab. So which way does Kejriwal campaign? Thank you so much, Amitabh, for joining us with that perspective. One way or the other, Agam, the election sort of poll campaign now becomes more interesting.
Yeah.
With Kejriwal back in the mix, who was all of this time in jail as, the authorities are bringing serious charges, graft charges against him in the Liquorgate scandal in Delhi.
Right. So, Tamanna, there is just a couple of things I wanted to understand here. The concerns were the BJP getting a certain number in the general elections. But considering Delhi and Punjab, it does seem like that it would either be Congress or AAP.
Yeah.
BJP doesn't really have such a stronghold anyway. So Punjab was never a concern. I guess Delhi, as Amitabh mentioned, is the swing state or the union territory. And I reckon that those few seats will perhaps matter and come into play in terms of count, right?
Yeah. So Punjab, last time round in 2019, BJP got just 2 seats.
Right.
In Punjab. So they are not a real contender, and a three-way fight in any state, and especially Punjab, helps the BJP because then you have the non-BJP vote getting split between the Congress and the Aam Aadmi Party. So it always helps them. Which is the question, will it be sort of a friendly match in Punjab between Aam Aadmi Party and the Congress? They can't quite afford it because remember the largest number of seats they get is from Punjab for the Aam Aadmi Party. That's their sort of new territory. Now in Delhi, at least in the last 2 elections, the BJP has been very, very strong. So Delhi votes, interestingly, in their state elections, they vote Aam Aadmi Party completely, large numbers. When it comes to general elections, they vote for BJP and Modi very, very clearly. Does it make a difference this time? Those 7 seats is what matters. Now, in the bigger picture of 543 seats, 7 seats also might matter if it comes down to the wire.
Right.
So traditionally, BJP is strong. At these last 2 elections, BJP is strong. In the Lok Sabha elections in Delhi, does, Mr. Kejriwal coming out and campaigning, does that make a difference? My colleague from NDTV, Sunil Prabhu, is joining in with more on this. Sunil, if you can give us details of the conditions under which Mr. Kejriwal has been allowed to campaign and really what it means for the Aam Aadmi Party and the India Alliance at this point.
Well, I'll take the first question that you pointed out. The Supreme Court is not yet put the order out, but what it indicated was that it would put the very same conditions that they put for Sanjay Singh, who has been given bail in a similar case relating to this entire liquor policy matter. So it's in this entire context that the Supreme Court has said that bail will be given to Mr. Kejriwal. He has to surrender on the 2nd of June and very clearly making it and very categorical about the fact that the same conditions that have been put for Sanjay Singh in his case when he was given bail will apply, where he hasn't to talk about this entire case in this entire matter, and it's in this context that Mr. Arvind Kejriwal will be given bail in a short while from now. Having said that, it is a big boost for the Aam Aadmi Party, for the India Alliance, because they have worked against odds in many ways to actually ensure one way or the other they get this very, very important relief in this case. There were really tense moments. It was going to be extremely difficult for the Aam Aadmi Party and its lawyers, who really felt they were working against time. But the judges today made it clear that we have determined to go ahead with this entire issue. So definitely it's a big boost. It will help their political campaign. It will be a new talking point across the next 4 phases that are going to the polls to ensure that there is maximum advantage to the Aam Aadmi Party, because as you were pointing out, Delhi, Punjab, where it's going it alone. In Punjab, it's fighting a lone battle, not with the Congress Party. These are 2 important states where they are in power. That is Delhi, where they're having an alliance with the Congress Party, 4 seats for the Aam Aadmi Party, 3 for the Congress Party. And in Punjab, where they will be, they're fighting because they have an incumbent government. They will be trying to retain and try to wrest control in Punjab in terms of seats, even though they're contesting against the Congress Party. So nevertheless, it is going to be interesting times. It's going to be what we will see as a changing face in the entire political campaign, because the Supreme Court's decision has far-reaching implications. This after the Enforcement Directorate and the government used and tried to convince the court, saying that it's not a fundamental right to campaign, but ultimately the Supreme Court and the bench was very clear that we have decided on this matter.
So this is literally bail just for campaigning. He has to go back in on the 2nd. So not even stay out to see the election results, and that's fairly stringent. Thank you for that, Sunil Prabhu. Probably, I don't know if he'll watch it on TV from behind bars on the 4th of June when election results are announced, but till the 1st he can very much be there, which is the last day of polls and which is when Punjab goes to polls. All right, thank you so much, Sunil Prabhu. We'll take a very short break at this point, but stay tuned. In a market close on the other side.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate. Well, thanks for tuning in to India Market Close, and it's turning out to be a really good session had it not been for IT. By really good, I don't mean a breakout session. Really, frankly, we are off the highs of the day. So at 0.29%, it's not something to really go rara about, because at a point of time we were up about 0.7%. But if you pull up the Nifty intraday, you will see that we've had variations through the day, volatility through the day, from being high to being in the red to being now up about 64 odd points. So it's actually not turning out to be a bad afternoon to my mind, and considering what had happened yesterday, I think it's turning out pretty good. Look at this. These are the lows for the day. I think we are doing much better. In fact, the lows for the day hit early morning trade, and then the highs also hit somewhere around those levels. Banks, Nifty IT is down. So that's the first point, that if you get Nifty IT 1% lower and dragged lower by a clutch of indices, clutch of large cap stocks, and banks should come up on your screen just to show you the reversal. It's not in the green, but it's lying flat, which is not a bad thing. Now get the advanced decline ratio and then get the heat map up on the screen. First the market breadth, just to show you what's happening there. And look at this, the widening of the gap that happened. In between there was a bit of a pullback, but I think we widened quite considerably. So the advanced decline ratio is positive as well. Get the heat map and you should see IT down below. Right here, TCS 1%, 1.7%. There is Infosys, which is down 1.2%. LTI Mindtree down about 1%. There is Wipro down about 1% as well. And Tech Mahindra about 0.6%. So IT per se has sulked, and HDFC Bank is also down in trade. But flip that argument and look at the gainers. PSU's up there, BPCL up 4%, NTPC up 2.5%, Power Grid is up about a couple of percentage points. Then there are other stocks. Asian Paints is up 2.4%, Adani Ports up 2.5%, Hero MotoCorp another 3% in trade today. It's largely, you could actually say that Hero MotoCorp is the large cap stock of the week really, by virtue of what it's done over 3 days on a trot. Today there's an HSBC note which projects a 19% upside for Hero. So clearly it's been the hero of the week, but you could safely argue that just the breadth of the market is so positive that you take this 0.2% gain as well with both hands and say that it's looked a very nice, stable move in the session today. And Tamanna, considering that it's coming after a day like yesterday, this is not something that people should complain about.
Oh, no, absolutely. And considering that the biggest losers are your IT pack, it's not a broad-based kind of a downside. IT and a smattering, I would say, of financials. But BPCL, really exciting. We'll pull up BPCL and HPCL in just a sec, but let's just see what the broader indices are also doing before we get to those and what's happening. We'll review it, that's all right, what is happening on the mid cap and the small cap end of it, and what those indices are doing. Let's just pull up some of those points and see what's happening. And the mid cap 150, they're looking strong. Small cap index also relatively strong. So the action really over there. Some gainers and losers that we wanted to point out, the ones which are sort of the buzzers of the day. Intellect Design, one of them. And again, all about the numbers, the big upticks and downticks coming in as per the numbers. So Intellect Design about 14% down. We'll pull up Cipla also in just a bit because numbers are coming in and we'll see what impact that's happening. But before that, Polycab. The numbers have really enthused the street. It's actually off its highs of the day. I was up 8% at one point, now up about 6% right now. So Polycab doing well. HPCL and BPCL we should pull up together. BPCL of course because of bonus issues and numbers etc. HPCL also a bonus issue but not having that kind of a good day as maybe a BPCL did. Dr. Lal Path is the other one that has been very positive on numbers, up about 6%, and Vijaya Diagnostics I would add to that list on the back of a positive Nuvama note, again 8% up. But let's just see what's happening with Cipla for a second. The numbers there on your screen, and on the face of it, not very, very positive. Let's see if we can pull up the intraday chart as well. I want to see if there's a downtick after the numbers are out. The net profits seem better than Bloomberg estimates. The revenues a tad shy of Bloomberg estimates as well. EBITDA also shy actually of Bloomberg estimates. So that's the first cut of the Cipla numbers, and Neeraj, I reckon that's going to be one stock which is completely buzzing in trade today, as will be Tata Motors.
But I think the margin number, Tamanna, seems to be a bit of a disappointment, which is why the stock has come off a little bit. On the revenue front, it's kind of marginally above what the Bloomberg estimates were, if I'm not wrong, but the margin performance slightly below, and which is what probably would be concerning the street a little bit. About a 1% lower downtick coming in. At some point of time in the show, in this segment, we'll try and get Varsha to just do a analysis of what the Cipla numbers look like. Net profit has beaten estimates, as I said, but the margin performance slightly wobbly, 1.5% lower now. Kunal Shah, technical and derivative analyst at LKP, is with us, and we'll talk about the fundamentals of Cipla as well. We'll talk about the markets too. But Kunal, good afternoon. May I request you to pull up the charts of Cipla or the derivative picture of Cipla? I know it's just happened right now, but we'd love to understand what's your initial impression of the reaction that Cipla is showing.
Good afternoon, Neeraj. I think first I'll talk about the Nifty Pharma Index. So I think Pharma Index is showing some kind of resistance on the higher end. There's a clear-cut and negative divergence, which we can see on the Nifty Pharma chart. So that is not looking very good. I think a near-term pain could be there in the pharma sector as well. The lower-end support for the Pharma Index is at 18,400. Once we breach that mark, we will see further selling pressure towards 18,000, 17,800 mark. So as an index, pharma is something which I'm not liking for the near term. If we talk about Cipla, definitely after the kind of rally what it had got, it has been underperforming since quite a long time. And still the trend has been on the lower end, where lower high, lower low formations are currently intact. So I expect some further downside into the stock, where it can test the 50 EMA, which is placed at 1290 zone. So still from the current levels, 40 to 50 points dip is left. So my view remains bearish. Clear-cut resistance is visible at 1380, 1400 zone.
All right, Kunal. So Cipla, the market not really loving those numbers, even though margins have gone up, but perhaps a little below estimates, and we'll get a view there. But even as we break down Cipla, I just want to get your take on the indices that have been holding up fairly well. Relative to what was happening yesterday. Any calls on the Nifty, Bank Nifty and the IT Nifty actually, if I would add, Kunal?
See, I think firstly, I'll just talk about the markets. If we talk about India VIX, that is where the real spike has been, and it is sustaining above that mark of 19. So the volatility is going to be there for the upcoming week as well. Now, today is going to be a weekly close for the markets. And if you look at Nifty and Bank Nifty, both have given a very negative weekly closing, and they are just on a very critical support zone. So for Nifty, I'll just talk about 21,800 is the last hope for the markets. If that is even breached decisively in the next week, then even we'll see correction going to the 21,200 mark as well. So I think it's a wait and watch situation there. For Bank Nifty, you can say the larger part of the correction, what we have seen is over. Now the next immediate support for Bank Nifty is at 47,050, which is the 100-day exponential moving average for the Bank Nifty. So probably there I can see Bank Nifty settling down a bit, and probably a pullback rally we can see from those levels as well. So for the levels perspective, I'll say both the indexes are currently not in a tradable zone, because they are at a juncture where Nifty could, if it breaks below 22,000 again, it can see a quick 200-point fall on the downside as well toward that 21,800 mark. So let us wait and watch for the market perspective on headline index. Stock specific is something where one should keep an eye on.
We'll get to the stock specific. The specific stock we want to talk about at this point is definitely Cipla. It's reported as Q4 numbers. Profit has jumped 78%. Margins have expanded. Street is still not happy. Varsha, what's the issue? Were the expectations higher? Where is the sort of niggle?
Actually, Taman, if you see Cipla's revenue, if you see, was up
almost 8%, which is in line with the expectations. But net profit was expected, rise in net profit was expected around 66%. But we did see net profit have risen almost 78%. We are just waiting for the press release to come so that we can get to know about their Goa facility details, and also how much Revlimid have contributed, and the other products which have contributed also, how much is the US contribution. So let's let the press release come and we should know what are the key details for it. But yeah, revenue did beat estimates.
Varsha, why is this disappointment? Is it because the margins were expected to expand to 22 and they haven't reached there?
So margins were expected at 22%, and we are seeing almost 21.35% margin. So maybe that is the reason. But we need to see what is the Revlimid contribution to the company, and also the US, how much it has contributed, and also the update on the Goa facility, because a lot of product launches have been on the way because of the Goa facility OAI status that company has been given.
Okay. Okay, Varsha, get your point. Thanks for giving us this first quick update. But clearly, not enough clarity as yet, but could be the margin miss which has resulted in this. Remember, the market has been very brutal in punishing stocks which haven't quite lived up to expectation. I would reckon this is it. We don't have more details. I think we'll wait for the press release to come in before we try and talk more about what Cipla's numbers are. Suffice to say, except margins, on the other counts, I think the numbers largely meeting or maybe even beating street estimates. If spoken about sales and what's happened in the quarter, so on and so forth, we'll just wait for those numbers to come out. We've got on the view on Cipla, of course, from Kunal. Kunal, what are the stocks that you're recommending in the session today?
See, the first thing, I have two buy ideas from the current levels as well. One stock which is showing a great momentum in this falling market is Deepak Nitrite. The stock has been sustaining above its critical moving average of 20 DMA. So we have been seeing buying from lower levels. So Deepak Nitrite is a buy at the current levels of 2480, keeping a stop loss of 2425 and looking for targets of 2600 on the upside. The second stock, which I think is ready for a pullback after the correction, is IEX, Indian Energy Exchange. Again, the stock has been taking a support at its previous support levels where multiple bounces we have seen. And even in today's trading session, we have seen volume-based buying from those levels. So 145 is currently where the stock is trading. Keep a stop loss of 140 on the downside and look for a target of 152 on the upside.
Okay, so those are the big, bets at this hour. We'll take a very, very short break. But on the other side, we're talking about Polycab, the other stock that's buzzing in trade today. That and a lot more coming up. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. Let's talk about the stock of the day, and that is Polycab. Numbers is what has enthused the street. That stock up over 7%, now over 6% off its day's highs, but still doing very, very well. After the numbers were better than expected. Puneet is joining us now for more on this. Puneet, what really has worked for Polycab today?
Well, as you rightly said, the Q4 numbers have been really strong compared to the estimates as well. On a revenue basis, it's up roughly 29% compared to the previous year, while on the EBITDA basis, it's coming at roughly 25% growth compared to the previous year, coming in at roughly 762 crores. Now, if we look at it, and there is a growth, but the margins have come in at roughly 13.6% versus 14% compared to the previous year, while profitability is strong, roughly coming at roughly 29%. Now, if you look at the stock, what it's done, do remember that there was a tax trouble that the company had in the month of January of 2024, where it had roughly, the income tax department had found roughly 1,000 crores of unaccounted cash. Now, post that, the stock had nosedived and reached a low of roughly 3,800 rupees. Post that, the stock has given a whopping 58% returns just in these past 4.5 months. If you also look at the Q4, the company has recommended a dividend of 30 rupees per share, which is 50% higher compared to the previous year of rupees 20. Just to look at how the year has performed for the financial year of 2024, it had the highest ever profitability in its history, while revenue was also up 28%, coming in roughly at 18,000 crores, while EBITDA has been maintained and shown a growth of roughly 70 basis points, coming in at roughly 13.8%. Net profit for the full year is also roughly up 1,800 crores. And if you look at the split between the revenue of cables and wires as well as FMEG, it might be the only negative, because the FMEG, which is the fast-moving consumer goods companies, the revenue hasn't grown over the past 3 years. So this year it's coming at roughly 1,282 crores versus 1,251 crores in the previous year. And for wires and cables, it has shown strong 15 to 20% growth, coming at 15,000 crores. While we look at the EBIT margins as well, wires and cables have shown roughly 160 basis point increase to 14.7, while the FMEG business had a negative 7% EBIT margin compared to flat EBIT margins compared to the previous year. So a little more commentary on the FMEG business and why this big EBIT fall will be key in the company's commentary. The company did a very strategic price increase as well, which has led to margin increase, and other initiatives in the financial year 2024 were that the capex has increased 87% compared to the previous year, coming in at 860 crores, while its market share has also gone up roughly 8% from its time of listing, coming in at 25% versus 18%. Finally, the company is very net cash positive at roughly 2,100 crores. And since listing in April 2019, the stock has given roughly 886% returns. When we compare that to BSE Sensex, it's given roughly 200% returns, and the Nifty 50 at 186%. So overall, strong performance by Polycab. We will need some more commentary on the FMEG business, but overall decent performance. Back to you.
All right. So Polycab, the big story this afternoon, the margins have contracted, but that profit jump has enthused the markets. Kunal, on the charts, do you like Polycab even now?
I think already the stock has rallied a lot, and I think fresh new highs for the stock. So you can say now sky is the limit. But yes, definitely, I think I'll be a buyer on dips here. 6025, 6030 could be an added level to initiate long positions, keeping a stop loss of 5950, and again looking for fresh high levels of 6400 on the upside.
Okay, so that's the word on Polycab 6125. You know, the thing about Polycab, if you pull up this year's chart, you will see that when the news flow came in, the negative news flow came in about 3 months ago, the stock went down all the way to 4,000, 4,100, what have you. From there, and it shows 11% move this year, but if you look at from the lows, from a 4,000 level to 6135 in a matter of maybe 4 months, Polycab has given 50% returns. I mean, that's the kind of fall. That's the kind of fall it was, and that's the kind of up move that we've seen in Polycab. And you know, quality companies tend to come back. This one is no different. What a superb set of numbers. But you have to argue, Tamanna, that the opposite is true for Intellect Design in the session today, when for all the wrong reasons, the stock is down 13%. Rucha's, of course, analyzed all of these numbers very closely in Chi Johnson to tell us why this 13% fall and what's next, Rucha. Why such a steep downtick today?
So Neeraj, as you rightly mentioned, stock had hit an intraday low of 16%, but we can attribute this to 3 key takeaways, right? Number 1 is the weakness in the cloud and SaaS revenues. Number 2 is the termination of the GEM contract, which got completed later in the December, because of which this quarter had a tad revenues a tad below. And the company mentioned that it lost a $50 million deal in India from a bank due to less pricing by the competition. So this likely states that everybody is looking out for revenue growth in a very uncertain macro environment. Now, the company also mentioned that it is seeing slowdown across the sector and delay in closing of deals, which we also saw with the top tier Indian IT companies. However, the company is still optimistic because the deal pipeline is strong, and it is guiding for a revenue growth of 15% adjusted for the GEM revenues in FY25, and later on 20% of revenue growth.
So Intellect Design's weak numbers really have seen that stock taking a beating today. Kunal, anything in that space that you're tracking? I don't know if you're looking at Intellect Design, but then, you know, let's take a look at the larger IT space as well. And a very, very weak day for that index, except for, like, say, a Coforge mainly. Any of these on your radar?
Yeah, I think that is what, if you look at the correction, what we had got in the IT space, majorly from the large caps and even from the mid and the small caps, Intellect was something which was only trading in a sideways. And post the result, now the breakdown has come in for the stock with volumes. So I think follow-up move is very necessary. If Intellect continues to sustain below the marks of 950, then we can see this selling pressure continuing even towards the mark of 825, 800 levels on the downside. So for me, it's a wait and watch situation for Intellect at the current levels. On the IT space, yes, Coforge had seen some bit of buying in today's trading session. So clearly some kind of respite what we can see in the stock in the very near term. Already the sell-off has been very aggressive into the stock. So just for a pullback play, one can look to initiate longs for targets of 4,600 to 4,800 on the upside.
Okay. Well, that's IT for you, but remember, a clutch of these names have come off quite rapidly, even at the mid-side end, by the way. It's not just the large cap IT names, mid-cap IT names too, Birlasoft, non-IT names, ERD, the likes of KPIT, etc., are all down in trade today. What's done really well, though, it's catching my eye, is Hindustan Zinc. Its stock is up 13%. Pull up the intraday of Hindustan Zinc, and let's just see what this stock is doing. Look at that surge there, 13% higher. I think the JSPL, Jindal Steel and Power 2, has actually had a good run. So metals seem to be doing okay, and diagnostic companies seem to be doing okay today. So Dr. Lal Path Labs post numbers is up 6%. I believe Metropolis is up about 4%. And maybe Thyrocare is up too, I don't know. But was up 6%, 4%, Metropolis now up 2%, but still in the green. Thyrocare about 1% higher. So I think that's the other set of companies that are doing well. Anything in metals though, Kunal, that catches your eye, Hindustan Zinc in particular?
See, I think if we talk about Hindustan Zinc, already the rally has been very sharp. So I think current levels, fresh buy doesn't initiate. But one stock I would like to highlight over here is Vedanta. A clear-cut uptrend, a strong breakout in the stock. What we have got, high low formations are intact. We can expect further upside into the stock. So currently trading around 409, 4010 mark. One can initiate longs at the current levels, keeping a stop loss of 398 on the downside, and looking for immediate targets of 422 to 430 on the upside.
Meanwhile, Bank of Baroda numbers out, first cut coming in, and positive on the face of it, as we're seeing the numbers. NII up 2.3% on Bank of Baroda over there. We've seen a fairly decent set of numbers, at least on the PSU bank side of it. The net NPA is at 0.68% versus 0.70% quarter on quarter, so that's come down just a tad. Net profit is up 2.3%, so no big shakes over there, but positive 4,886 crores. Gross NPAs have also come down at 2.92% versus 3.08%. The stock responding fairly positively at this point. We'll be getting, of course, more details on the Bank of Baroda numbers as well. But meanwhile, an interesting note on emerging markets from Citi, and Neeraj has all those details. And Neeraj, don't we love anything that compares India with China, and India positively at that?
Yeah, I mean, markets should love it, but Tamanna, it's very interesting that they have on that whole basket of EMs that they have, while they admit that India is expensive, they say that India is still an upgrade for them because of multiple reasons, but predominantly the benefit that India is getting from strong EPS momentum and projected growth. So that is, to my mind, and the note, that seemed to be one of the key reasons why they have upgraded India to an overweight rating. So, by the way, they have downgraded China, as you said, rightly so. They have downgraded China because they say that China's recent rally has occurred despite weakening fundamentals, and therefore now enough is enough must be effectively the kind of call that they've made. Now, why India, you would ask, from these levels? The target is just about 7% higher, by the way. So the Nifty target for March 25, a year from now, is about 2,300, which is about a 7% uptick. But they say that valuations at circa 20-year, 1 year forward are just about one standard deviation over the long-term averages to the EM basis. And that's not too expensive. And the earnings growth is looking very good. So the earnings revision trajectory is broadly stable and trending better than the long-term averages. And frankly, over the last 5 years, with a double-digit growth on the Nifty earnings every single year for the last 4 at least, you have to argue that the current earnings trend is much better trending than what the previous whole decade would have been, to be very honest. Now, within this, what is it that they like? 2 key reasons. They believe there is good momentum in public capex, and private capex is gradually improving. And on rate cuts, they mentioned that they expect RBI stance change in June and the first rate cut in October, all of which could also aid. Now you will ask, what are the key sectors that they are betting on? And I think let's end this with that. They are overweight. The key overweight is PSU utilities and defense, industrials, banks and insurance. Very interesting that PSU utilities and defense are amongst the top draw for them. What is not good for them? Consumer discretionary, I believe, is not something that they like. They don't like IT services and they don't like metals. So there's a long and short of the Citi note, but Tamanna, you were right. I mean, effectively, upgrade to India, not so much to China, and upgrade to India despite that India is one of the most expensive markets in their coverage universe.
Yeah, one reckons that I would say temporary jitters that we're seeing ease up after the 4th of June, and then the whole sort of India story leg continues once again, and that's really the opportunity. We'll talk more about it, but after a very short break. On the other side, we're joined by Motilal Oswal, Siddharth Khemka. Stay tuned for more.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But But on big decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they Back with India Market Close right here on NDTV Profit, and the market's stable. Let's get in Agam to try and break down the FNO cues for us. Agam, just trying to understand, is there a material change between what was happening until yesterday and something that might have changed today in the derivative space?
Right, there actually hasn't as much. In fact, even there have been a lot of updates through the course of today as well, in terms of earnings, in terms of updates beyond just equity markets. And we actually haven't seen too much traction or change for that matter when it comes to the Nifty. It moved earlier on the session above the mark of 22,000, and that's exactly where it is right now. The Nifty moving up by around 0.5%. Unwinding, of course, a lot of shots into the system yesterday, a lot of that covering coming through. So short covering coming even as we see the open interest decline by around 2.5%. Moving on to the Bank Nifty, that's where we have a little bit more traction in terms of the open interest increase by nearly 1%, but the index remains flat. In the options market, a lot of activity continues to stay within and below the 22,500 call mark, and of course on the lower end we continue to keep an eye on 21,500, 22 or 21,600, and moving on to your overall open interest distribution picture, it is 22,000 essentially where we have the most amount of calls and puts being written in today's day of trade. Moving on in terms of stocks, well, we have seen some interesting moves coming in. Polycab looking at a whopping 6.5% up move. At one point in time, it was up nearly 9%. A lot of longs there, along with Dr. Lal Pathlabs. Again, a good set of numbers coming in. For stocks which are seeing unwinding, Godrej Properties and MGL. On the other hand, looking at short covering for Bata Coforge and Abbott India. It's turned out to be a fairly steady day of trade, but we must remember, after a lot of volatility through the course of the week, and I reckon just a tad bit of those shorts are being covered, but we can't really rule out uncertainty going into the next few weeks either.
Thank you for that, Agam. What's happening with Hind Zinc? Hindustan Zinc having a crazy day. Jindal, JSW Energy, their entire pack doing very, very well. Not just a Polycab, but even a Dr. Lal Path. Dr. Lal Path, of course, because of the numbers. UPL up about 8%. Honeywell also doing well. So you have a good streak. Broadly, your advanced decline ratio is also been improving. All right, Siddharth Khemka is joining us now of Motilal Oswal Financial Services. And Siddharth, great to have you on the show. You know, this is a time when the markets are also wondering what is happening next. And you reckon that the primary driver of that uncertainty perhaps is the way that FIIs have been behaving. If you pull up data and if you look at the kind of FII fund flows over the last 8-10 days, especially in May, they have been triggering the, sort of sell button. And do you think that's the primary concern right now?
Yeah, very good afternoon, Tamanna. So I think, yes, that is one of the concerns that the market is definitely witnessing. If you look at FI selling was there in the previous month, entire month of April, we have seen consistent selling by FIs. And we saw in between the VIX falling to as low as 10 and now sharp jump towards 18. Clearly, there are two major events that Indian investors are looking at. A was what was the Fed commentary and outlook in terms of the interest rate cut, which unfortunately is getting delayed every meeting. And then you have the ongoing elections and the news flows regarding the voters turnout and the likely outcome based on certain predictions. So I think these two major factors are driving investor sentiments in India. FIs definitely, I think the delay in rate cut is making them book profits, A, because of the delayed rate cut, and B, because of the big event before which I think there is some lightening of positions that they are doing in the Indian markets.
Well, but the Indian markets and the Nifty at 0.42% is doing quite well. If viewers, if you had seen the morning show today, I think the three of us spoke about the possibility of this happening, because when we're doing the trade setup and that's the opening of the show, I think Tamanna, me and Samina were talking about how what spooked the markets essentially was the possibility that there was one large fund or some US-based funds which had there was a chatter of them selling India positions, and informed voices had suggested that the specific fund selling, which was the talk of town, was almost over. Maybe some bit of selling was left, and which is why I think we had spoken about how that there might be today might mark the near-term bottom of sorts. And just that, while there is a lot of conversation, Tamanna, around how the lower voter turnout might be the reason, people might find reasons to throw at a market fall, whereas the actual reason, which is the FI selling, which took the market down, was on possibly on completely different reasons than elections. It was essentially this kind of selling that was happening.
So you have to put that into perspective, Neeraj, you're absolutely right. Look at the role of algo trade and how that has also grown in the derivative space. So a lot of these sell decisions are not even being made anymore by human beings sitting there and thinking, oh, China, India, election, voter turnout, blah, blah, blah. It's actually being triggered by algo, and then, very often you have retail investors and small investors also getting caught into it on the derivative side. So that is one part of it. The other part, if you recall our conversation with Cameron Brandt, talking about the reasoning behind FII sale decisions, and it's not necessarily an India story, it's all in a context, right? So if they want to increase, for example, flows to Vietnam, etc., sometimes it's happening at the cost of India. It's an overall picture of emerging markets in which the decision on India flows also sits.
Yeah, and so in that overall context, when you have one fund which might, as per dealing rooms, have had to compulsorily wind up the positions because it was liquidating or what have you, and if that number is large, and it happens at the same time, 7,000 crores day before yesterday about 6,900 crores, then you suddenly feel the pinch and tremors on that particular day, as was the case yesterday, as we saw. But I mean, suffice to say, today seems to be a completely different day.
Yeah.
If it was indeed lower voter turnout fears, then today might not have been the kind of day that we've seen. The slides might have continued, and therefore you can make a little bit of an inference that there is some bit of selling that was there, a significant piece of selling which was there. Now that selling getting over or almost over leads to lower selling pressure, and thereby the markets being a lot more stable than what you would have thought yesterday at the same time.
Correct. And remember, Neeraj, it's also a market looking for opportunities to take profits, an overheated market as well. Pre-election is generally quite volatile, one way or the other. Remember, it's also a very long election. It's
longest,
over 60
right? You would have
days.
seen in recent times.
Yeah. One of the longest elections. It's happening during an usually hot summer. So I think the market also now digesting that a lot of factors could contribute, A, to low voter turnout, B, low voter turnout in the larger picture in terms of statistics does not necessarily mean anything either way. It depends on what the voters who turn up to the booth actually do, which of course we'll know on the 4th of June, etc. And nothing has fundamentally changed to, I would say, skew the perception that the market has come in with, which is towards policy continuity. So has anything actually changed since then? Not, there's no clarity there. So I would say that, elections are on. They're on. They've been on for a while, by the way.
Yeah.
But you've seen this, and we had this chart up this morning. Let's see if we can pull it up. You actually saw that sort of pressure coming in only, the election trade chart, only after phase 3. Yeah. Not in phase 1 and phase 2 either. Yeah. So FI movement could really be the big trigger that we're seeing right now.
And a small addition to that is our campaign, which is Pledge to Vote, because the lower voter turnout tells us to bring this up again and tell viewers, tell yourself and your friends and family, please go out and vote. It's the most important thing. It's not just our fundamental right, but our duty as well to do that. Having said that, the markets today, as we said, a lot more stable. Now, amongst other things, PSU bank earnings coming in thick and fast. One of them was Bank of Baroda. And my colleague Pragati is here to tell us what the breakdown of those numbers mean. Pragati, take it away.
Right, Neeraj, thanks so much for having me. Bank of Baroda numbers came about 5-7 minutes back. While the numbers on the face of it have beaten Bloomberg estimates, not a very strong set of numbers if you see on a year-on-year basis. For instance, if we take the net profit is at 4,886 crore rupees, just about 2% up on a year-on-year basis. While it has beat the Bloomberg estimate, but not a very strong set of number. Core income, or the net interest income, once again up to about 11,792 crore rupees, just about 2% on a year-on-year basis. Asset quality definitely has improved. The gross NPA ratio is at 2.9%. Net NPA ratio again at 0.68%. Couple of basis point down as compared to the previous quarter. So asset quality showing an improving trend. That's exactly what the management has also guided us in the previous quarter press earnings, that yes, the asset quality would consistently improve. But what we are observing so far is that while the net profit is up, the operating expenses, or the OPEX, is something that is weighed down on the net profit. That's the first assessment of the numbers that we are getting, because we are seeing that the rise in total OPEX is about 14% on a year-on-year basis. And of this, if we see the breakup in terms of employee cost and other OPEX, the employee costs have been up the maximum, that is 20% year-on-year. We'll wait for a clarification from the management definitely on that front. But for now, now the numbers look stable, but not really beat in terms of the street estimates. One point, Neeraj, I would really like to point out is that about 2 or 3 days back, RBI also lifted the curbs from Bank of Baroda's mobile application. So basically in October, RBI had placed curbs on BOB World app's mobile application, and the customer onboarding was stopped. So while we were looking forward to the management's commentary on that in this quarter, now we know that the curbs have already been lifted. So that will also be interesting to watch out for as to how the management plans to recover its customer onboarding and the numbers once the curbs are off. Back to you.
Okay, thank you for that, Pragati. So Bank of Baroda has not been received very well. A slight uptick after the curbs were lifted, but it's not really helped overall. Siddharth Khemka, I just wanted to get your view, not just on a Bank of Baroda, but we've seen State Bank of India, Punjab National Bank. You know, your PSU banks have been the darlings of the street. Do you think the quarterly numbers have justified that prime position?
So, Tamana, I think if you look at some of the other numbers as well, maybe if you also include CanBank in the list, there has been definitely a dismal number that has come in, especially on the front of the slippages and the provisions. Luckily, SBI, which is the largest, had lower provisions compared to expectations, and hence I would say that clearly among the lot was much better numbers compared to PNB, CanBank, now Bank of Baroda. We have seen a lot of re-rating that has happened and a lot of improvement in the quality of earnings for the PSU banks over the last 1.5 to 2 years, and that has led to the re-rating. So there could be 1 or 2 quarters of blip, but I believe with the economic growth and the focus of these banks to improve the operational performance, the overall view on PSU banks continues to remain positive. And again, I said there could be 1 or 2 quarters of blip in the reporting. But overall view is positive. We prefer SBI, which is the largest of the one. Very strong numbers. They reported the outlook is decent and positive. And even internally, we were discussing in the morning meeting why SBI cannot trade at a valuation which an Axis bank does. Definitely ICICI and HDFCs of the world trade at a very high premium, but an Axis at 2 times and SBI at 1.5 times, given similar growth and similar return profile, the discount is no longer warranted is what we believe. And we believe over the next 2-3 years with the improvement and consistent delivery in growth, and SBI could also command such kind of valuations going forward.
Okay. Well, that's SBI, PNB, BOB, and a clutch of those names. You know, today what has recovered remarkably is Asian Paints. For all the brickbats that is received from brokerages, the stock has certainly gone up in trade, 2.5%. So some semblance of sanity after the massive gashes that we saw yesterday and day before as well, about a couple of percentage points off then too. But in today's session, has recovered. Siddharth, you would use this opportunity to buy into an Asian Paints, or you believe there is some pain there?
Yeah, Neeraj, we would definitely avoid Asian Paints. We believe there is near-term pain. The numbers were clearly a miss. We see margins pressure in FY25 going forward as well. There has been price cut. There have been demand pressures because of down trading and competitive pressures. And we believe that the current elevated margins may not sustain in the near term. And given the low growth that the company is reporting and the high valuations, historical high valuations, clearly it's an avoid at current juncture.
Okay. Kunal, quick word here. Asian Paints, there is also some gains, for example, today in a Hindalco, which has recovered a little bit of lost ground. So some of these stocks are doing well today. Any thoughts? Asian Paints in particular?
I think on Asian Paints, if I talk about, I think the stock is on the verge of a near critical support, 2700. And we have seen the stock on the weekly chart bouncing from those levels. But looking at the overall trend for the stock, it is still trading in a downtrend. So for me, if the stock has to turn bullish, it has to surpass again 3000 decisively. If that is taken out, you can see momentum building up towards 3200 mark. At the current level, I will not be a buyer. I'll wait for the breakout above 3000. That will negate the entire downtrend, and then we'll see the up move coming in.
Okay, speaking of Asian Paints, by the way, Amit Singhal, we'll try and hear from Amit Singhal as well. He spoke to my colleague Agam and spoke about what's happening there. But I buy Tamanna's point on what is really gone berserk, and that's Hind Zinc. That's up 17% now. It's hit a fresh 52-week high of 533.7.
Also all-time high, by the way.
Also all-time high. Similarly for Zomato, all-time highs, and that stock is not up 16%, yes, but it's done really well for itself. So Zomato is doing well. And by the way, what is also hit highs today are gold and silver.
So my theory this morning, I don't know, I will probably see a tweet at some point from the Blinkit management. They usually do about how many XYZ gold coins they, have sold online. But 10-minute deliveries for Akshaya Tritiya, 4 gold coins on Blinkit. And of course, all the others are doing it. They're not all listed though. So I wonder if people are really using this opportunity. I mean, the variety of things you can buy in 10 minutes now is insane. So maybe that's, doing well for a Zomato. So that's something that you track, Zomato? Any views there?
Yeah, Tamanna, so we definitely track Zomato. It is one of our preferred picks within the mid-cap space and has done quite well. I think the road to profitability is something that clearly was liked by the market. And of late, what has been what the investors have been liking is the sharp improvement in the operating metrics for Blinkit. This was one acquisition sometime back. People were very negative about investors specifically about Zomato going and buying stake in it. But now the private equity valuations for Blinkit shows that it is valued much higher than the Zomato itself. And the profits from Blinkit could be much higher than the contribution to profit could be much higher than the Zomato's food delivery business. So the quick commerce business is something that is really picking up with the company increasing the platform fees, and which is well accepted by the market. I think that is a sustainable way of growing the delivery business in India, and definitely it fascinates how these companies are able to deliver within 10 minutes in large cities like Mumbai, Bangalore, Hyderabad, and the like. So overall, business-wise, I think
Siddharth, did you order gold coins online today?
I don't know about that. I just heard from you. I will definitely ask my wife to go and deliver right away.
Yeah, I mean, why not? Because if you want to follow that tradition, and you don't have time in a work day, then definitely it's an option. All right, it's going to be an exciting sort of Friday evening, if that's the kind of thing that you want to spot as well, because auto majors Tata Motors and Eicher are set to report their Q4 numbers today. Definitely an exciting evening for Puneet, who tracks that sector. Puneet, what's the preview?
Yeah, exactly. A lot of action today on the auto side, and both these results are expected to be positive. Starting with Tata Motors, they're expecting a revenue growth of roughly 15%, coming in at 1,20,000 crores. While on the EBITDA basis, we are expecting EBITDA to come in at roughly 17,400 crores. Margins are going to be one of the key positives for Tata Motors today, coming in at roughly 14.4%. which is a rise of roughly 220 basis points compared to the previous year. While on profitability, it's expected to come at close to roughly 7,000 crores, which is a 25% gain from the previous year. For Eicher Motors as well, we're expecting strong results, revenue growth of roughly 13%, while EBITDA is expected to rise to roughly 1139 crores, with margins coming in close to 27%, which is also a 200 basis point rise. For profitability, it is expected to rise 18% for Eicher Motors, coming in at roughly 1068 crores. We also looked at what brokerages are saying for both companies and things to look out for. So for Axis, for Eicher Motors specifically, Axis sees that revenues will rise on the back of strong volumes that the company has reported. They also see that increase in average selling price due to price increases taken in the last 1 year will aid margins, while EBITDA, supported by a lower mix of Hunter, which is in the 350cc space, as well as a higher mix of exports, will kind of have partly offset the higher advertisements that the company has taken. While for Tata Motors, the total sales of JLRs have risen roughly 16% for the quarter, coming in at roughly 110,000. While Nomura is seeing that the PV growth will aid margins as well as revenue growth, coming in at 23%, while commercial vehicle growth for revenues is roughly seen at roughly 5.6%. So overall, decent set of, actually really good set of numbers expected for both these counters. We'll see what the management has to say in the conference calls as well. Back to you.
An interesting Friday evening you have lined up for you, Puneet, as you track what the management of Tata Motors say. The stock is doing well. And look at the entire auto pack. I would say a bit of an outlier on an otherwise very tricky kind of a week completely. And Hero Moto really top of the pack there. Siddharth, your take on the auto pack and especially at Tata Motors ahead of the numbers?
Yeah, so Taman, I think if you look at the overall quarter, we were expecting strong numbers from the auto pack. Generally, we have seen the fourth quarter is usually the seasonally best quarter, both on a YOY as well as on a Q-on-Q basis. For the quarter, passenger vehicle segment had posted a healthy growth of about 19-20%. Two-wheelers was about 14% in terms of volumes. We have seen some of the two-wheeler companies, Hero Moto and TVS, coming out with very strong numbers out there. So I think something that will continue for the auto numbers. The expectations is pretty strong. For Eicher, we are expecting a 10% revenue growth on a consolidated basis, while a 25% PAT growth. Definitely some margins improvement that we are seeing and sustaining at high levels because of the mix. Even for Tata Motors, I think the overall results expectation is pretty strong, both in the domestic market as well as in the global JLR business. So India business, we see that again driven by passenger vehicle segment. The passenger vehicle volumes grew about 15%. The CVs were a kind of mixed. However, margins, especially in the JLR, will drive the overall numbers. For Tata Motors, we are expecting a 14.2% consolidated EBITDA margins, which will be much higher both on a sequential as well as on a Y-on-Y basis. So overall expecting a 14% growth in net profit. If you look at again from the numbers that have come out, Hero Moto has been something that we have been quite liking. It is a preferred pick within the overall two-wheeler space. Volume recovery, the monsoon, which is predicted to be healthy this time around, should aid in the rural demand. And Hero being largely domestic driven is most likely to benefit and add to it the valuation comfort that Hero has compared to some of the other two-wheeler stocks. So that is our preferred pick within the two-wheeler space. Hero Moto, we have a target price of 5,320 on that.
All right, so Hero Moto continues to have a lot of steam left in it, and Motilal Oswal's target price is 5,320. The stock already doing very, very well. Kunal, your take on any of the auto packs, Hero Moto, Tata Motors?
I think Hero Moto is something which we also like a lot. I think on technicals, if we look at the monthly chart, the stock has given us a flag and pole breakout, which is a typical bullish continuation pattern. So looking at the pattern, the target will come for the stock over here is 5,250. So 5,250 it can head towards 4,880 currently it is trading. You can accumulate at current levels. If you get any dips, utilize that to buy. 4,600 now becomes a very, very strong support for the stock.
Kunal, your top STBT or BTST?
See, I think the top STBT stock over here will be ABFRL. The stock has in today's trading session given a volume-based breakout on an intraday chart. Plus, it has surpassed the last 3 days high as well. So clear-cut volume is visible. Breaches 20-day moving average as well with volumes. So one can initiate a buy at the current levels of 258, keeping a stop loss of 249 on the downside and looking for targets of 270 on the upside.
Kunal, one very quick question. I don't know if we spoke about Zomato, we spoke about it with Siddharth, but this uptick that you're seeing, would you buy into it for a trade?
Yes, exactly. The larger term trend remains very attractive. High low formations are intact. In fact, today's trading session is a fresh breakout from a consolidation phase. So 200, 201, which was a resistance, which is taken out today, and they are going to close above it. So clearly a buy for me at the current levels. 195 is the stop loss, and 212 to 218 would be the targets on the upper end.
Gentlemen, have a great Akshaya Tritiya, fabulous weekend. Tell your wives, or rather, buy gold for your wives through Zomato or otherwise, and see you soon.
Thank you so much.
Thank you so much.
All right, well, let's start wrapping up the markets for you, and about a minute left. Just get the heat map straight. We know that the indices are doing well, in fact, closing in almost at, not at the high point of the day, but the high point of the last 1 hour for sure. But the heat map on your screen, and you see very little red. IT, to an extent, Cipla, though interestingly, Kotak Bank enters the fray of stocks which have corrected today, about 1% lower, but Cipla results miss, hurting the stock margin miss, and IT being the losers. The gainers, it's PSUs. A complete turnaround to yesterday's session. So look at BPCL, Power Grid, NTPC, those three in the top 10 for sure. There is also ONGC in the top 15 and Coal India in the top 20. So a lot of PSU names there. What else? Hero MotoCorp, clearly the hero of the week, doing very well for itself. Asian Paints has bounced back. JSW Steel has done well, 2% higher. And Eicher Motors ahead of the numbers is up 2%. Interestingly, Bharti too is up about 1%. And Adani Ports is up about a couple of percentage points. It's been steady throughout the trading day today. So good going for that one. Mid caps too, Tamanna, a clutch of very interesting movers today.
Absolutely. I mean, the turnaround in mood is what is, a stark, and that what really strikes me. The Nifty mid cap looking like it's going to close nearly a percentage point up. So much so for the small cap 250 as well. We should just quickly pull up the advanced decline ratios just to get a sense of how the market breadth has really improved. Look at it right at the fag end compared to the morning. So choppiness mid-morning, and that's a trend that we're seeing over all of these days. You get a very choppy mid-morning, but you've seen a vast improvement. So save for an extremely bad day yesterday. Neeraj, if you cut out yesterday's extremely bad day, I would say markets have been range bound and choppy. Yesterday was the ouch sort of pain point, and there could be a host of reasons like you were saying, algo trade, hedge funds, etc., any of those coming into play. So all in all, not bad at all. I just want to pull up what has really worked, and let's pull up the S&P 500 gainers and losers. As always, the results continue to be a big driver. Say maybe for a Hindustan Zinc, 16% up. What a star of the day it has been. Polycab is one, up on the back of results. Jindal, Honeywell Auto, UPL, all of those doing fairly well. Here, Intellect Design continues to be your big loser. Bank of Baroda also, because of the numbers more than anything else, has seen that pain coming in, as has Birla Soft. If I were to mark out one sector which has hurt today, it is the IT pack. We'll just pull up the indices. You'll see the Nifty IT completely up there as the biggest loser of the day, while metals, thanks to a Hinzinc, has done well. And within the IT internals, I would reckon, apart from a Coforge, everything else has been fairly weak. So because of a TCS and Infi dragging down the markets today, you've seen an okay kind of a close. Without those two, you were doing even better today, wasn't it?
Certainly, and that's the long and short of the market. Yes, Tamanna, you're right, absolutely right. Okay, so on that note, from Tamanna and me and the team that has put this show together, thanks so much for watching. Happy Akshaya Tritiya and have a great weekend.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk. Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with.
Hello and welcome. Thanks for tuning in to NDTV Profit. You're watching the Small and Mid Cap Show. I'm Harsh Saita. Our first management for today is we have Mr. Ajay Kumar Srivastava, who's the MD CEO at Indian Overseas Bank, to talk to us about Q4 numbers. Growth has been strong, but fascinatingly, margins have improved versus FY23 in an environment where pretty much all banks are reporting more subdued margins. Will be interesting to understand all that's happening and what one can expect going forward. Welcome to the show, sir. Sir, first off, overall growth seems to be coming in quite well for you. 16% on advances, nearly 10% on deposits as well. What does FY25 hold in store in terms of growth?
Yeah, good morning. Thank you.
Hi, good morning.
Yeah, growth, as you spoke also, last year growth has been deposit and credit both sides, total business also, growth has been good. Earlier year also, 22, 23 also, if you look at those numbers, the growth was good only, I will say. So over last 2 financial years, the growth has been consistent. And if you look at our performance quarter on quarter, so you can see consistent improvement in all the sectors, all the areas. The guidance for financial year 25 is that we intend to grow in the same speed. Of course, deposit we like to grow more. The internal guidance which we are looking at is a growth of around 11% in deposit. And credit we intend to grow around 13 to 14%. And that 13 to 14% will come from all sectors. That is the plan.
That's great, sir. I want to also try and bring to everyone's notice that your margin number has actually gotten better in FY24. What's led to this kind of a margin improvement versus FY23 when the entire industry is seeing a bit of a lag? Is it the adjustment of your loan to deposit ratio is what explains this, or could you just give us some perspective?
Yeah, it's a result of all these factors. First thing first, we have focused on increasing our interest income, and we have gone a bit aggressive in those areas where we are getting yield which is more than the normal. That is one part of the strategy. And on deposit front, if you look at my deposit portfolio, 43 to 44% of that consists of CASA, which we traditionally call at low cost deposit. And over last almost 2 years, this 43 CASA percentage of above 43% we have been able to maintain despite increase in other forms of deposit. So we are, the term deposit is also growing, but CASA also is showing a substantial growth. And last year, if you look at the numbers, 9.6% in my total deposit growth, but CASA has grown by almost 10%. So that is another part. And these two parts mainly have contributed in protecting my margin and improvement also. So from 3.12 we have moved to 3.28, and we hope to stay there.
Sure. Okay, so can we take it as 3.3% being the normalized kind of margin for FY25 and beyond?
Yes, we are looking at those numbers only, maybe 2-3 bips here and there,
sure,
depending on the circumstances. But of course, more or less will be there.
Sure, I don't think the market will complain if the margins fall by 2 to 3 basis points. Anyway, so got your point, sir. With regard to operating expenses, that one has remained elevated. Your cost to income ratios have inched up a little bit by quite a bit. Is it just wage revisions or is there something else at play?
No, it's only wage revision.
Understood. And therefore, where would cost to income trend? Where would you like it to trend? Because it's above the 55% mark now. Where would you want it to be at? Where would you be comfortable? What kind of a number?
It has to be less than 50 only. Ideally, it should go below 45. But over next 12 months, the plan is that we need to bring it to below 50, maybe 48 or 49, and then next year we can take it forward.
Okay, so FY25 it will come below 50. Is that a correct metric to look for?
Yes, exactly.
Okay, understood. And that is one of the levers which will help you build on the ROA number. So currently at 0.8, can we expect full year FY25 ROA to be in excess of 1%?
Yes, that is what we are looking at. And hopefully by the end of this year, it will cross 1.
Understood. So all 4 quarters, would you be looking to cross 1 or will it just be the latter half?
It will be in the latter half. First half, it will be difficult, but latter half, we intend to go beyond that.
Sure, and overall will be above 1% for FY25,
yes,
roughly.
yes.
Okay, understood. Any other levers that you look for to push that ROA number higher outside of growth?
Yeah, it ultimately boils down to profit numbers. And for profit numbers, we need to generate income.
Yes.
So income generation is going to be the concern, not only interest income, but non-interest income also. We are aggressively focusing on that. So with increase in numbers this year also, you can see NII, we have grown by almost 19%.
Sure. And right. And sir, you suggested, you're focusing on higher yielding loans. Could you elaborate a little bit on that? Try and give us some flavor on what the focus is more on. And going forward, would that be a larger focus area, and how is the loan mix evolving as a result?
We are focusing on mid-segment MSME.
Okay.
That is one part. And in MSME, those sectors which are coming under PLI and which are under the priority of the government, that is another sector. And in agriculture, like ethanol and food processing centers, that we are focusing at. Unsecured personal loans, we are absolutely not aggressive on that. And on existing customers and existing businesses also, we are trying to increase the yield by way of negotiation. So these are the stages through which we intend to increase our interest income.
Sure, sir. Sir, absolutely any impact of project financing and the new norms on your bank?
Our portfolio as far as project funding is concerned is less than 10,000 crores, not a substantial amount.
Sure.
And the second part, I would like to say that it's still in draft guidelines only in that form. The final guideline is yet to come.
Understood.
It will be mature to comment at this stage.
I understand. But sir, just a flavor, how quickly is it growing in your view? And do you believe that that growth will come off as a result of this, if this were to be implemented as is?
I don't think the growth will be subdued. Okay. The lending will happen as usual. Only thing that the cost part of that will be borne by the borrowers. But growth will happen, lending will happen.
Understood. And you will have to provide, if this draft is implemented, you will have to provide for this 10,000 crore book. You'll have to start providing for it starting FY25. Will that at all impact your numbers, or do you still expect a 1% ROA despite these provisionings coming through?
We have not gone into details as of now because it's still in the draft stage, but some impact will be there, and I don't think it will be substantial and it will impact my ROA. I don't think so. Some impact will be there which can be offset by, of course, passing on the cost to the borrowers.
Understood. And sir, in the last year or so, how much has this portfolio grown by?
Project funding?
Yes, sir. If you can give me a ballpark, that's fine.
Ballpark will be around 5 to 6%, I think. I'm not very sure. I can give you the data later also.
Fair. So, sir, single digit is...
Single digit, yes.
Single digit. Understood. Sir, last off on recoveries, what's the expectation for FY25 and what are the numbers like for FY24?
Yeah, for FY24, total recovery was around 4,700 crores.
Right.
And one of the important part of this recovery that more than 50%, 52% has come from technically written off account. That is one part, and second part is that for this financial year we are looking at a number of 6,000 crores of recovery, and we have put 92 accounts, NCLT and non-NCLT both together on sale, amounting to 13,000 crores. We are getting good response from the market. We do hope that this financial year more than 6,000 crores recovery will be able to do.
Very, very interesting. On a book of 2 lakh crore, 6,000 crores of recovery. Thank you so much, sir. It's been a pleasure speaking with you. We'll keep our eyes glued on to Indian Overseas Bank. Thank you for this conversation. But time to slip into a very short break. More on the other side. We'll be speaking with the management of Alembic Pharma to talk about Q4 FY24. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna Mana Hai. Co-powered by Canara Bank. Together we can.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Welcome back. You're watching the Smid Show on NDTV Profit. I'm Harsh Saita, and we're joined in by our pharma analyst. We're going to speak with Alembic Pharma, and I have with me Varsha Chandani as well to speak to us. Along with we have, and let me welcome on board Mr. Shaunak Amin, who's the MD at Alembic Pharmaceuticals, to talk to us about Q4 numbers. First off, welcome, Mr. Amin. It's good having you here.
Yeah, good morning, everyone. Thank you for having me.
Right. First off, let me ask you with regard to the top line as well as how new launches are really aiding your numbers in a certain sense for Q4, and what can one expect from FY25 as a result of this?
Yeah, so a couple of things. I think we had a strong recovery quarter in Q4 versus the last year performance. I think new launches have been an integral part to the growth that we generated this year as well as for the quarter. In the US segment. Going forward, I think we expect this level of stabilization to continue. But again, I think we don't give forward guidances, so I'd be unable to put down an actual hard number on that.
Mr. Shaunak, Varsha on this side.
Hi, Varsha.
We did see improvement in margins year on year and quarter on quarter as well. So, is there any more opportunity left for margin improvement considering the new facilities that has been generating revenue for us, and we have been guiding that will reduce our R&D cost as well?
Yeah. So I think on the margin front, a bulk of the margin expansion was driven by more volume throughput in some of these facilities. Hence, better margins was a major result of this. I think going forward, as long as the volumes do continue, I think there's significant opportunity for margins to stay at this level or maybe see a slight uptick on this front.
Okay, Mr. Amin, how quickly will this happen and where should the margin number lie at?
Like I said, I think we don't give a forward guidance on things, so it's hard for me to comment on it. But I think our endeavor is to work through better plant optimizations, and I think plant optimization through better throughput should give us better margins. So I think we stay on that path, and I think going forward, I mean, we want to move in that trajectory.
Sure, and therefore, should it be higher teens by FY25? Is that a fair assumption to make?
I would refrain from giving you a forward margin guidance.
Sure.
The markets are extremely volatile. I think pharma has been very volatile the last 5 years. So it's really hard to give a really forward guidance at this point in time.
All right. Just going back to your revenue numbers, we did see uptick in revenue year on year, that's right. But has there been any pressure quarter on quarter, or is there any change in product mix? Because quarter on quarter, we have seen some pressure in revenue.
So I think it's just a matter of lumping. And I think there are quite a few new launches that happen. So I think sometimes that does have it. But generally, I think the product mix, it does not say this has not been the same for Q4 as well as Q3. But I think, the margins and the product mix, keeps evolving as we go forward.
Also, your majority business comes from US, if I'm not wrong. And so how are you seeing the pricing pressure in US markets going forward?
Yeah, so I think going forward, I think the pricing pressure, like we said, we maintained in the call, I think we maintain this level of pricing pressure to continue. We don't see a further deterioration from these levels. So I think from that point of view, I think this is where we see the bottoming of the market.
Okay, and Mr. Amin, what about new launches in FY25? How many are we looking at? What's the pipeline like? And give some color with regard to how the products will look like in terms of how are you looking at them adding up on your top line number, as well as how do you expect them to contribute on the margin side of things?
Yeah, so again, I think our endeavor is to launch, high teens in terms of the US markets. If you go from my filing records, we launched 19 last quarter. I think going forward, we expect, significant launches to happen. But at this point, it's really hard to comment on each launch until actually it gets launched. But I think, new products is an integral part of our strategy. So we do expect to have a significant momentum going forward through new launches. But it's hard to comment at this point in time.
Also, you were expecting debt-free status in FY25. Any view on that?
Yeah, so I think if you see our debt's been significantly coming down over the last 3-4 years. We finished the capex cycle last year. We're actually at the end of it. And then going forward, we don't expect any significant capex or rather new greenfield capex to happen. It just be maintenance capex at this point in time. So I think from that point of view, and if you look at our cash flows, I think, we'll be quite comfortable on the debt today. And I think going forward, we see a natural reduction of our debt at this point in time. So I think we would be moving closer to a debt-free kind of status maybe in the next year or two.
All right. And also, my last question to you would be your API business. If you see, that has grown 5% year on year, but over the last 5 years, we have seen that business growing almost 15%. Now, how is the API business performing considering the pricing pressure that we have seen? What is the kind of realization that we are seeing and margins going forward?
Yeah, so a lot of the API business that we have is built on a niche and more driven towards global approvals. So at this point in time, there's not much in terms of commercial supplies where we are facing pricing pressures. There has been a bit of slowdown more due to the high base of the last 3-4 years. But I think we're quite comfortable on the API front, and we expect, a little better performance going forward next year on the API.
Okay, Mr. Amin, as you go debt-free, what's the plan with regard to CapEx? Have you pushed that out to FY26? Nothing in FY25?
No, so like I said, we've been through a significantly large capex cycle in the last 5 years.
Sure.
Almost close to 2,500-3,000 crores.
Right.
So I think at this point, I think the focus for the management is to look at getting these plants optimized, get them up and running through new product launches. I think at this point, we're largely committed to doing that. We haven't talked of any new greenfield capexes at this point in time, but I think we have some work to do in terms of building up our plants through volumes as well as through new launches, all the capex that we've done in the last 5 years.
Understood. And what would your utilizations be like, given the fact that you're going to add efficiency and therefore ought to add to margins, just logically speaking?
So, I mean, like I said, it's the multiple plants with multiple levels. It's hard for me to come down to the single number at this point in time.
Sure, sure. And just in terms of broad level numbers, can we expect a mid-teens kind of growth on the top line, at least going into FY25?
Like I said, I think we don't give forward guidances at this point in time. Sure. But if you look at if you look at in terms of market stabilization, US price erosion, India market coming off a high base from 22, 23, I would say that the markets would be quite supportive to drive that number. So that's as far as I'd like to comment on that.
Fair point. As scale comes about, would you expect your return ratios to start to improve again?
Yes.
Is that what one can see? And what internally, as you all invest, there would largely be a target number in terms of return ratios. What would that number possibly be?
So we have some internal numbers. Again, I wouldn't want to comment on that. But if you see our return ratios pre the capex cycle happening, I think the endeavor is to go back to that level. It's not always possible because of the product mix dictates a lot of these numbers. But I think the endeavor is to go back to those kind of return ratios over time.
Mr. Amin, before we let you go, one last question from my side. You are going for product launches now. You have reduced your launches in, I guess, in oral solids, considering the low margin business that is. So, what are your product launches going forward? Are they towards high margin products which will actually aid your margins?
So it's like I said, I think the US market, I think it's more dictated by expiries that allows you to launch. I don't think there's a concerted effort on our side to not to launch oral solids. But I think because of our investment in other dosage forms over the last 5 years, I think the composition of our launches has changed more due to the fact that we have quite a few launches in both in the non-oral solid spaces. So from that point of view, yes, we are committed. I think in terms of the margin front, it's very hard to comment on a product launch, before the launch actually happens, when you understand how many people are competing on that market and what is the contours of the competition. So, but I think we try to select products which are, we feel we can get a good, return at a screening phase, but it does not necessarily play out, or rather it's harder to predict it from a very accurate point of view.
Okay, sure. Mr. Amin, I must compliment you for the way you've tried to maneuver this, but we tried. Listen,
honestly, you guys know, it's the markets are so volatile,
sure.
And it's really hard to give any kind of hard numbers in terms of what the markets are going to do going forward. But
sure.
Yeah,
no,
like I said, I
think
let me put it this way. I think directionally we're quite confident of doing. I think a lot of the stuff you outlined, I think we're quite confident of moving in that direction. Now, whether that happens, in 3 months or it takes 9 months or 12 months, it's really hard for me to comment. I'll be very honest about that. So
fair. Thank you so much. It's been a pleasure chatting with you.
Thanks, guys. Thank you.
Thanks for your time. But with that, completely out of time on this edition of the Smith Show from Varsha, myself, everyone who puts the show together. Thanks so much for watching. Stay tuned to NDTV Profit. More on the other side.
presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna Mana Hai. Co-powered by Canara Bank. Together we can.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God.
Relief for Delhi Chief Minister Arvind Kejriwal as the Supreme Court grants him interim bail till June the 1st and asks him to surrender on June 2nd. Market ends higher after 5 sessions led by the gains in metals. Most sectors close in the green. Sensex and Nifty gain close to 0.5% higher. Broader markets outperform the benchmarks. Tata Motors' fourth quarter net profit rises 3 times on deferred tax write-back. Revenues and margins meet street estimate. Auto giant announces dividend at 6 rupees. India's pension body to seek a stay on the Karnataka High Court's verdict on inclusion of foreign workers in the Employee Provident Fund argues the current provisions are not discriminatory. PepsiCo India starts trials to blend palmolene with sunflower oil in Lay's chips. Aims to reduce salt in 75% of the foods to less than 1.3 mg of sodium per calorie by 2025. Uneasy but not unhappy. That's the word from the former RBI Governor D. Subbarao on his relationship with former Finance Minister P. Chidambaram. In an exclusive with NDTV, he explains some differences between the government and the central bank are hardwired into the system. Gold and silver prices rise as Indians celebrate Akshaya Tritiya with great fervor. Average price of 24-carat gold stands at over 73,000 rupees per 10 grams, while 1 kg silver costs over 86,000 rupees. Hello and welcome. You're watching The Reporter on NDTV Profit and I'm your host Pallavi Nahata. And as always, the show aims to bring to you market headlines along with national and international news. But before we proceed with the show, let's see how the markets have fared today. I'm joined by my colleague Tamanna Inamdar to give us a quick market wrap. Tamanna, over to you.
We needed to have closed decisively over 22,000 and the Nifty has managed to do that. Friday has brought some relief to markets that have been choppy all week long. So the Nifty closing about 0.5% up, the Sensex also up in the green. I'm just going to quickly pull up how the mid-cap and small-cap fared in Friday trade. Better than expected and pretty decent, almost 1% up on the mid-cap and the small-cap index. But we should look at this entire week in perspective because it's definitely been a choppy one with a very tough Thursday coming in. And over the week, the Nifty has been down about 3%. Some relief here. We started off strong, but we're down about 3% through the week. I just want to pull up the mid-cap and small-cap indices as well. The bank index, the Nifty bank is what hurt the most. And remember, this is a week where you had big numbers coming in from the public sector bank side. So an SBI, PNB, Bank of Baroda, etc. The mid-cap 150 also down about 3.5%. So some ways to go in terms of a recovery, but safe to say that at least today was a good day. Let's pull up the heat map for Friday's trade and give you a sense of what has worked and what has not. It was all about BPCL. So a note out today, a Morgan Stanley note out today talking about the oil and gas sector, which was very positive. That's aided BPCL. The fact that there's a bonus share issue has not hurt either. But you can see dominating the top line of the greens, public sector companies. So with the power grid, etc. NTPC as well, at least the top three. Hero Motor continues to be a run up and keeping that auto pack up strong. Tata Motors one to watch out for even for Monday's trade because results will be out post close on Friday. Tata Motors was up in trade. On the losing side, Cipla is what is hurting. TCS, of course, top loser, but the entire IT pack has been weak. If you look at it, Wipro, Infosys, LTI, Mindtree, TCS, all dominating the bottom line. Tech Mahindra as well. But Cipla, because of numbers and a disappointment in margins, has taken a bit of a knock, about 1.5% down, better than what its lowest point was of the day, but that definitely is hurting. In terms of sectors, it was the IT sector hurting the most today. So what were the winners? The winners, apart from energy and metal, in specific stocks, I would say Hindustan Zinc. Hindustan Zinc having a stellar day today in trade. Polycab doing very well. Dr. Lal Path also doing very well. This is all on the back of numbers. So these were some of the stocks which were doing well. I just want to pull up a Hindustan Zinc because that was truly an outlier in the way it has performed. 16% up at close on a Hind Zinc. So completely on a roll over there towards the end. On the downside in terms of numbers, just one last one I'll pull up before I close. Bank of Baroda. So numbers came in towards the close of market, was not very well appreciated by the street. That stock closing 3% down. All in all, an interesting week to look forward to. Sandwiched between two election polls. Phase 4 takes place on Monday and then phase 5 on the next Saturday. So look out for a lot of action next week as well.
Thank you, Tamanna. Now, let's look at the earnings. Tata Motors' fourth quarter net profit rose 3 times on deferred tax write-back. Revenue and margins met the street estimate. Let's go across to my colleague Puneet Javeri for a quick breakdown of the numbers. Puneet?
Yeah, thanks for that. So it did meet most estimates by the brokerages as well as the Bloomberg consensus. But as you rightly said, revenue was up roughly 13%, coming in at 1,19,000 crores, while at the EBITDA basis, it came in a tad below the Bloomberg estimates, coming in at 16,995 crores, which is still a growth of 32% compared to the previous year of 12,795 crores. When you look at the margins came in at 14.16% versus 12.07% in the previous year, which is a growth of roughly 208 basis points. While on profitability, as you rightly said, there's a big tax write-back, because of which the profitability has come in at roughly 17,528 crores versus 5,400 crores in the previous year, which is a 200% growth from the previous year. Now, deferred tax write-back of roughly 9,478 crores versus 1,737, which was a deferred tax write-back which the company had reported in Q4 of last year, which has led to the beat in PAT as per Bloomberg estimates. Now, this is largely on account of JLR, which the company has reported. EBITDA was slightly below the Bloomberg estimates of roughly 17,400, while the company has signified that it is still expecting to be net debt free by the end of FY25. On JLR, the company had a lot of good commentary. It said that it sees JLR expenditure of roughly 3.5 billion pounds for this financial year, while it is also expecting it to achieve operational profitability similar to FY24. Finally, it said that the JLR business clocked in revenues of roughly $7.9 billion pounds, while its order book stood at roughly 1,33,000 by the end of FY24. So overall, good set of numbers meeting estimates. EBITDA was slightly a miss as per estimates, while a big tax write-back also swung the profitability up by 200%. Back to you.
Thank you so much for that. But moving on to another big news for the day. Relief for Arvind Kejriwal as the Supreme Court grants him an interim bail till the 1st of June in the liquor policy scam case. Now, the Apex Court has rejected his bail plea till July and asked him to surrender on the 2nd of June. His lawyer Shadan Farasat said that there's no restriction on his election campaigning and they will try for his release today itself. Listen in.
The short oral order is not indicative of everything which may be in the written order. But one thing is very clear, that insofar as his campaigning is concerned, there are no restrictions which have been imposed on the campaigning, because while the order is being pronounced, the ED lawyers, the SG and the ASG, sought that restrictions should be imposed, that he will not talk about this case at least. But that also the court did not accept, and he said the court was of the view that in a matter like this, we are not going to impose any restriction when we are releasing him for the purpose of campaigning. So on that, there is complete clarity. Other conditions, we'll have to see the written order, what they are.
So, sir, are you pushing for his release by today evening itself?
Yeah, we'll of course try. Now that the order has come, we'll see. Let's see how quickly it gets uploaded, and then whatever the remaining procedures for his release, we'll try that it gets done today itself.
So, sir, it was certainly very interesting argument, especially with the ED. In fact, yesterday itself in its affidavit saying that political campaigning is not a fundamental or a constitutional right. So, sir, on that, what is your reaction on the entire hearing and now?
See, the matter had already on the interim aspect been heard 4 days back, correct? And in effect, although formally an order had not been reserved, the indication from the bench was that we'll pronounce an order on the next date. Thereafter, to file a belated affidavit yesterday, leak it to the media first, all these are I would just call them sharp practices. And obviously, they didn't meet the expected intent, because the court has released him today without an argument, because it was already understood that the arguments on the interim aspect of his release were over by both the sides. Substantial time was given to both the sides. Then to on the 19th minute and the nth minute before the order to file an affidavit and leak it to the media is most improper behavior by an independent investigative agency, an agency which claims to be an independent inside court, but its behavior outside court reeks of complete lack of independence.
Well, we'll continue to bring to you more on that, but moving on, the EPFO has sought a stay on the Karnataka High Court's verdict on inclusion of foreign workers in the Employee Provident Fund. Now, that comes after the Karnataka High Court had found certain provisions of the EPF law for foreign nationals discriminatory. My colleague Janani Janarthanan joins us with more details. Janani, what are you picking up on this?
That's right, Pallavi. We're hearing that after the verdict that was delivered earlier this week, the EPFO will now likely appeal. And in the process of an appeal, first thing that would happen would be seeking a stay order on the current verdict. What would that mean? Now, in this process of filing an appeal, which is likely to be very soon, they are stating that the current provisions are within the realms of the principle of reciprocity, which means when a foreign national comes to India or Indian citizen goes to a foreign country to work, based on the social security agreements signed by both parties, how they are treated will be the same way. It's a reciprocity principle. Now, the initial estimate now tells us about over 1 lakh foreign nationals are currently working in India. So that is the extent of impact that this particular judgment could have, and it is also a far-reaching one, considering that some companies would have also paid their employer share, they would have collected corporate taxes have been filed on that matter. So the ramifications of this discussion and of this verdict, wherever it reaches after this, would impact be of significant import. Now, just to remind, Indian nationals are subjected to a wage ceiling of about 15,000 rupees according to EPF contributions per law. They can contribute more if they want. And the court said that this wage ceiling does not apply to foreign nationals in India who are ineligible for the benefits under the Social Security Agreement. Now, currently, we have Social Security Agreement with 21 nations, UK, USA not part of this. So we'll follow this story and come back to you with more updates as we know better. But as of now, we're hearing that the EPFO is likely to file an appeal.
All right. Thank you so much for that, Janani. PepsiCo India has started trials to blend sunflower oil and palmolin to be used in Lay's chips. Now, this comes after the food brands in India were criticized for using unhealthy, cheaper ingredients in packaged foods. Let's go across to my colleague Sesha Sen for more on this. Sesha, what's PepsiCo India's plan?
That's right, Pallavi. PepsiCo India has initiated trials to replace palm oil used in its chips with a combination of sunflower oil and palmolin. Now, this comes amid a backlash over the usage of cheaper and unhealthy ingredients in packaged food items sold in India. Now, in the United States, however, which is PepsiCo's largest market, it uses healthier options such as sunflower and corn oil for its Lay's potato chips. Now, responding to this, spokesperson of PepsiCo India has said that there are often different recipes for food or drinks in different countries due to several factors like local preferences, manufacturing capabilities, and even availability of ingredients. The spokesperson also said that the trials of the blend in some of its products began last year, and it is one of the few players in the food industry in India to do so. Well, it's not just palm oil though, but the India unit of PepsiCo is also working to reduce salt in its snacks to less than 1.3 milligram of sodium per calorie by 2025. Now that the market leader has taken cognizance of this issue, what remains to be seen is the other players like Parle or even Haldiram's for that matter take any actions to reduce or rather replace palm oil with other alternatives.
Okay, thank you so much for that, Sesha. Indian startups have moved NCLAT against the CCI's ruling on Google's user choice billing system. This comes after CCI that declined to stay in the system and even left the tech giant free to delist the apps not complying with it. I'm joined by my colleague Charu Singh to tell us more on this. Charu, what have you been picking up?
Hi Pallavi. So as we all know, Google came up with its new user choice billing system last year that charges a service fees of about 11% to 26%, which was deemed to be very exorbitant by a lot of Indian startups, which started litigations in different high courts of the country and eventually went to the Competition Commission of India. However, the Competition Commission of India, while started an investigation into the whole thing, in another order that was passed in March 20th, they said that a stay cannot be imposed or an interim relief cannot be imposed on Google, saying that Google is not allowed to delist the apps which are not complying with its new user choice billing system. Aggrieved by this, aggrieved by not getting any sort of relief till the time the investigation is over, and Google being free to delist the apps which are not complying with its billing system, the Indian startups had no other way out but to appeal the order of the Competition Commission of India, and that is why they approached the National Competition Appellate Law Tribunal, NCLAT, and the first hearing took place in the matter today, and now it has been listed for May 24th, and the arguments are set to be taking place on that hearing.
Thank you so much for that, Charu. And well, it's time to slip into a short break, but do stay tuned. We'll be right back with more.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But But on big decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
Welcome back. You're watching The Reporter on NDTV Profit. Former RBI Governor D. Subbarao, while speaking to NDTV's Gauri Dwivedi, says, "My relationship with former Finance Minister P. Chidambaram was uneasy but not unhappy." He added that he declined requests for higher growth rates from the UPA-2 government. Listen in.
There were two finance ministers when I was governor. Mr. Chidambaram was the finance minister when I was appointed governor. Then Mr. Pranab Mukherjee was there for much of my tenure. And then towards the end of my tenure, Mr. Chidambaram had come back into the finance ministry. And it was an uneasy relationship, as you described it. I talk about it in the book. Perhaps part of it is hardwired into the system. There are differences traditionally, historically, differences between the central bank and the government. It's not unique to India. We've seen these differences in other countries, in Japan, in the UK, in the US, in Turkey, and we've had differences. What is important is how you manage them. And that depends on the economic situation and also on the chemistry between the governor and the finance minister or the prime minister, as the case may be. So I had an uneasy relationship, but ultimately looking back, it wasn't unhappy.
And with that, on to NDTV's special election coverage. The leather city of India, Kanpur, will vote in the fourth phase of the Lok Sabha elections on Monday. It's a two-way battle between BJP's Ramesh Avasthi and the Congress's Alok Mishra, as the city struggles with issues such as lack of government jobs and the tanneries moving out of the city. What are people expecting from the candidates this time around? NDTV's Tanishq Punjabi gets us this ground report from Hot Seat Kanpur.
Kanpur was called the Manchester of the East because of its flourishing industries. The city, once a bastion of British Empire, has a rich cultural history. But today, Kanpur is grappling with its very own challenges like pollution, industrial decline, and rapid urbanization. Kanpur is considered the leather hub of India. At one point of time, the city was flourishing with 400 tanneries here producing leather. Now, with a sharp decline in tanneries, there are around 150 to 200 left here.
Inside Kanpur's Jajmau area,
Multiple tanneries throw up a pungent, stomach-churning stench, but also provide employment to thousands of people. But in the last few years, many have shifted their business to Bengal and elsewhere after tighter pollution control norms. A big jump in the cost of tannery waste treatment and orders drying up.
और इन लोगों को थोड़ा अंतर्राष्ट्रीय बाजार में जो मंदी चली है उसका बहुत बड़ा फर्क पड़ा है। अच्छा। अगर इसमें सरकार सहयोग दे या कोई बेल पैकेज दे सरकार तो ट्रेनियाँ चल सकती हैं।
गवर्नमेंट की तरफ से कुछ सपोर्ट मिल जाए, कुछ सहयोग मिल जाए तो आज भी इंडस्ट्रीज चल सकती हैं और मतलब पॉल्यूशन के साथ और बिजनेस के साथ समन्वय बना करके चलाया जा सकता है।
भारी संख्या में आप देख सकते हैं। The Bharatiya Janata Party won Kanpur for the first time in the 1991 Lok Sabha election, coinciding with the Ram Temple movement peak. The Congress won the seat between 1999 and 2014. In 2014, BJP stalwart MM Joshi won from Kanpur, and the BJP retained the seat in 2019 with a different candidate. The party has changed its candidate this time too. Ramesh Avasthi is a former journalist turned politician.
मुझे लगता नहीं कि कहीं उनसे कोई मेरी टक्कर है और ये आज गठबंधन है। उसके बाद आगे आप हासिल देखें तो जनता ने मान लिया ये गठबंधन नहीं, ये सिर्फ ठगबंधन है। मतलब हमको ठगने के लिए आ जाते हैं। माननीय हमारे प्रधानमंत्री नरेंद्र मोदी की जो जनहित की योजनाएं हैं वो घर घर तक गई हैं।
Against Ramesh Avasthi is Alok Mishra of the Congress, a close aide of party veteran Salman Khurshid.
हवा इंडिया गठबंधन के पक्ष में है। कानपुर में कांग्रेस बहुत ताकतवर है। 400 पार बिल्कुल सही बोल रही है। वो ये नहीं कह रही 400 सीटें पार, वो कह रही है 200 रुपए किलो जो अरहर की दाल बिक गई वो 400 पार, 200 रुपए लीटर जो कड़वा तेल बिक गया वो 400 पार।
In Kanpur's coaching hub Kakadeo, paper leak and the lack of government jobs are a big poll issue.
प्रिपरेशन करते हैं, सब चीज़ करते हैं। जैसे ये बोल रहा था पेपर लीक हो जाता है उसके बाद, और पेपर लीक होने के बाद फिर कैंसिल हो जाता है, फिर नेक्स्ट वैकेंसी कब तक आ रही है, ऐसे करते करते 1-2 साल चले जाते हैं। उसके बाद फिर लड़कों बच्चों के लिए एज के लिए लड़ना पड़ता है कि हम लोगों को रिलैक्सेशन मिलेगा कि नहीं मिलेगा। तो सबसे ज़्यादा दिक्कतें तो हम ही लोगों को हो रही हैं।
Roli Gudia, one of only 126 third gender voters in Kanpur, was allotted a home during Mayawati's tenure as UP Chief Minister between 2007 and 2012, but says that the road to real empowerment has been long-winded.
राजनीतिक पार्टी तो आज तक कोई हम लोगों के बारे में कुछ सोचा नहीं है। नहीं, बहुत ज़्यादा ज़रूरी भाई, क्योंकि जब तक जैसे कि हमारा कोई पुरुष जीत रहा है, ठीक है, तो अपने पुरुषों के लिए वो ज़्यादा कार्य करता है। जैसे कि हमारी महिला जीत रही कोई, तो अपने महिलाओं के लिए वो सोचती है। तो हम लोग भी यही सोचते हैं कि जैसे हम किन्नर हैं तो अपने किन्नर समाज के लिए ही कुछ करें।
Before the 2014 elections, the Congress won continuously for 3 times. But in 2014, it was Murli Manohar Joshi who became the Member of Parliament from here. And in 2019, it was Saddev Pachori. If the BJP manages to win one more time from Kanpur, it will be its hat-trick. But can Congress make any dent in the BJP's plans for hat-trick? We will only know when the people will answer on 4th of June. With camera person Virendra Kumar Saini, Arun Asif and Tanish Punjabi for NDTV.
Samarth by Hyundai, in partnership with NDTV, is an initiative to shift mindsets and spark a larger societal change around inclusivity and diversity. A change that will make the world see the true capability of those who carry disabilities. Shweta's is one such story. Born with spina bifida, she uses her comedy to talk about disability and related issues, for working to change perceptions and making the world a more inclusive place. Shweta is a Samarth hero.
I was born with something called as spina bifida that affects the spinal cord. Yeah, I am different, but I want to live life my way. I happened to chance upon comedy. I wanted to experiment and see if I could use this particular medium to express myself. मुझे सिंपैथी नहीं चाहिए, संपत्ति चाहिए. I want to live in a world where inclusion is not an afterthought. So if you have the right tools to live your life as smoothly as possible, why don't I? The applause on stage makes me happy like no other thing in this universe. My jokes have always helped the audience understand a new perspective and laugh at a subject that otherwise has been over-stigmatized. I am Samar.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the...
Thanks for tuning in to Talking Point. I'm your host, Neeraj Shah. We have Rajesh Kothari with us, founder and managing director of Alpha Accurate. Rajesh, what do you attribute the recent market jitters to?
Hi, Neeraj. I think the volatility is a new mantra of market from last couple of years, particularly post-COVID. And I think volatility is going to increase further because of one or other reasons, be it a geopolitical, be it a local elections, be it a state elections. And I think every month there is one new factor which comes into the, this game of volatility. So, investors need to get adjusted to the heightened volatility. But one should not get, fearful. One should try to consider volatility as your friend, treat it as your friend, and try to optimize as best as you can. Don't panic when markets are at low, and don't be too greedy when markets are at kind of a very high levels. And I think that's going to be the... so at our investment house, we always believe, therefore, our style is causality. Be quality conscious in what you buy and be agile enough to get out of it. And only this combination is going to work out in future as well.
Rajesh, have you built out a bit of cash in your positions, or are you fully invested currently?
Neeraj, generally we have seen that cash component doesn't make that big difference to your portfolio, because irrespective of what kind of state of market is, there are always sectors and companies which will basically do well compared to the other set of companies and sectors. So for example, healthcare is one sector where we have increased our weightage. We have reduced a little bit from cyclicals and added a little bit to pharmaceutical as a sector since last 2.5, 3 months. And I think if market enters into kind of a consolidation or more volatile zone, and also as the pharma company starts delivering better earnings growth, and that's what our assumption is, I think healthcare sector can be very interesting opportunity. So, we were almost like a 0% in healthcare, less than 2%. From there, right now, we are almost 6.5% weightage to pharmaceutical. And likewise, so we always find opportunities within sectors, across sectors, and that's how probably cash is not that important.
Got it. Okay, so interesting. By healthcare, is largely pharma, or does it expand into hospitals, into diagnostics, so on and so forth as well?
So the healthcare covers the entire spectrum, but currently what we own is more of a CDMO players because this is a segment where we have seen that this segment is impacted significantly post-COVID because budgets from the US, the R&D guys that have reduced, and from now on, we are probably at the bottom of the cycle. Most CDMO players have not done well in last 2.5, 3 years. Despite the long-term very exciting opportunity. So I think we are at the probably the worst of the cycle, and from now on the CDMO players R&D spend should start moving up, and that should help the few leading companies who have positioned themselves well to gain significantly from this trend.
Interesting. So Rajesh, in some sense you are preempting what could happen a couple of quarters out, right? Because commentaries from a Laurus, I think from a Syngene, all of that suggested that it's maybe 2 quarters out, but that's when it will start coming back, the CDMO spends.
Absolutely. You need to be a little bit ahead of time. You can't be just in time. Markets are very, very efficient.
Yeah,
and
sure.
At times you need to keep 1 or 2 quarters patience. But if you believe that in 2-3 years, companies can deliver 18, 20, 25% compounded earnings growth, that's, I think, fantastic compared to Nifty earnings growth of, say, FY25 is going to be likely to be around 12%. So 12 versus, that 20-25% definitely, that's basically what, excites us.
Got it. Rajesh, what do you make of the commentary from Larsen & Toubro, for example, wherein they've spoken about how the election season might hamper the guidance for FY25 as well as the order inflow for FY25? Is that a negative? Or is that priced into businesses like L&T and some others in the construction stroke infra space?
So I think, specific to the name, what you mentioned, there are 2 components of it, domestic business and international business. The more muted kind of a, guidance is more on the international side. Domestic side, it is only a quarter kind of a thing, because during election time, everybody knows that no major capex new announcements or the actual project commencement, all these things basically get kind of a hold kind of thing. But you are also aware that because it is on hold, that's why in 4th quarter they get most of the orders before election. And in capital goods, people focus on order intake rather than the revenue. Current order intake becomes your future revenue and then future profit as projects get executed. So I think international is a little bit more worrisome right now compared to domestic. And since the company, what you mentioned, is having 2 major segments, both on domestic as well as international, that kind of, to a certain extent, that's why Street has a little bit downgraded their numbers.
Okay, but
we currently do not own that name. Just to put a disclaimer, we do not own that name right now in the portfolio.
Yeah, but do you believe that it could be a bit of a cloud on the overall construction infra space, that maybe the election season curtailment might last not just till June 4th, but maybe a month until post that as well, until the budgets are out, therefore maybe avoid that pocket, or nothing like that?
No, I think, the markets are very, very efficient enough. So market is already discounting that for next 3 to 4 to 5 months, probably, maybe up to September, you may not see a large new orders. But then what will happen? Everything will bunch up in December and March. So whether you should play for June or whether you should play for December or whether you should play for March. And that's why you need to keep a little bit, medium to long-term view. I'm not saying take 10 years view, but at the same time, don't take just 1 quarter view. And importantly, most important, Neeraj, is you need to keep, factoring what is priced in. Whether my stock is already discounting 30% order intake for next 3 years, then probably everything is priced in and I need to be a little bit, margin of safety is not in our favor. But if you think it is only 10% compounded order intake is priced in, then probably there is a positive surprise for investors.
Makes sense. Rajesh, the other aspect is what's happening to businesses like Asian Paints, for example. I mean, we've seen the last 2 years, DMart virtually go nowhere except for the last 3 months.